edition with the Norwegians in town. Welcome to the fastest show in politics as Norway's prime minister arrives in Washington for meetings at the White House with Ukraine on the menu. Bloomberg now reporting new conditions the U.S. is putting on Russia. This is just breaking, and we'll get more on the agenda straight ahead by Bloomberg's Tyler Kendall, standing by at the White House. More on Ukraine this hour from Ben Jensen at the Defense and Security Department at CSIS. We'll gauge the markets coming up with Ed Harrison and a new batch of polls painting a pretty bleak picture for the president's first 100 days. We'll review the numbers with our signature political panel. Jeannie Shanzano and Rick Davis are with us for the hour, and we start, as always, on Wall Street. Let's get the baseline on the markets with Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, the baseline higher right now with the Dow, the S&P, NASDAQ trading very close to session highs. Another day of gains. Equities extending the advance for a third straight session. The S&P 500 index right now up by 1.3%, up 68 points. Wall Street investors are betting that the Fed could cut rates sooner than anticipated. We've got the Dow up 255, the Dow up 0.6%. But tech stocks, the standout ahead of Alphabet earnings. Right now we've got NASDAQ advancing 294 points, up by about 1.8%. Russell 2000 index of small cap shares also higher, up by about 1.1%. 10-year at 4.32%, with the 2-year currently yielding 3.80%. Gold is up $43 the ounce, now at $33.32, up by 1.3%. And West Texas Intermediate crude flat on the day, now $62.26 a barrel. Our Ed Harrison will have a whole lot more on the markets for you coming up here on Balance of Power. Jenny Johnson is the president and CEO of Franklin Templeton Investors. And this morning on Surveillance, she told us President Trump's tariffs are only one area of concern coming out of Washington.
He needs the tax revenues identified in tariffs to help fund his tax cuts, which, by the way, are not tax cuts, really. They're extensions. And if we don't get that extension, there is a massive tax increase that happens, which really becomes an issue around the economy.
Jenny Johnson of Franklin Templeton. Alphabet will be the big story. It is the parent of Google coming up after the close of trading. We're going to be all over that when that number drops. Right now, we've got Alphabet shares up by 1.5%. Also reporting after the close of trading, Intel surging now by 2.8% ahead of earnings. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington, the Thursday edition. Here he is once again, your host, Joe Matthew.
All right, Charlie, we do appreciate it. Off and rolling here on our Thursday edition. You made it to Little Friday. Thanks for being with us here on Bloomberg Radio, on satellite radio channel 121, and on YouTube. Search Bloomberg Business News Live. You'll have a seat in the studio as soon as you catch our live stream. And we've got a lot to do, a lot to see and hear together this hour. Hey, you know how it goes. High noon in Washington. This program is here for a reason. Things are about to happen. Every day at this time, we bring you to one end of Pennsylvania Avenue or the other. And today it is the White House, of course. We've got the big visit from the Norwegians. And we're going to have the rolling display of events here, not unlike the visit from the Italian prime minister or any other world leader. You get the big arrival at the West Wing, and they're standing by right now for Prime Minister Jonas Støre to arrive. They're going to have a little lunch together, and then there's a bilateral meeting in the Oval Office. So you're going to have all the reporters crushed in there. A lot of questions will be asked. We'll see how many are answered. Ukraine, as I mentioned, is on the agenda, but you've also got tariffs in the air. And that's where we bring in Tyler Kendall on the North Lawn at the White House right now, standing by for the delegation to arrive. Tyler, here we go.
Yeah, hey, Joe. From where I'm standing, I can see the Northwest gates opened as well as the Oval Office door open, which signals to us that the Norwegian Prime Minister is arriving now. Actually, you're about to see him cross over my shoulder. For our radio listeners, it is a massive SUV followed by a van with the rest of the delegation. So live pictures right now. This is immediately happening. If I can see, it looks like President Trump might be coming to the door where he typically greets these leaders. And important to note here, it's not just the Norwegian Prime Minister who is going to be here. He's accompanied by his finance minister, who is a very familiar name. That is Jens Stoltenberg, of course, the former NATO Secretary General, who knows President Trump very well from when they worked together under the first Trump administration. And we are expecting defense cooperation amid the ongoing war in Ukraine to be one of those top topics that they are discussing here today. Because as you mentioned at the top of the hour, Bloomberg News just just breaking the story that the U.S. is set to demand Russia accept Ukraine's right to build up its military and defense industry as part of any negotiation or deal going forward. Of course, as you well know, that would be considered to be a concession by Vladimir Putin if he did agree to it, because he has wanted to see Ukraine disarm as well as see a halt to Western military flows into the country. At the same time, though, we are expecting that Ukraine's ambitions for NATO membership to be taken off the table there. And I bring that up because one of the key parts of these discussions as I try to get a deal underway is that our European allies really want to see two things happen first, which is a ceasefire and then discussions about what some more permanent U.S. security guarantees could look like, because the U.S. has put forward to our allies potentially freezing battle lines where they are, potentially recognizing Crimea as Russian. And our allies, including Norway, have been asking this White House what other security guarantees are they willing to put on a table before they talk about any sort of territory concessions, because up to this point, Joe, the White House has really been reluctant in that category, saying instead security guarantees for the most part would be implicit if the White House had an economic interest in Ukraine. We'll have to see if we see any progress on that today as Norway arrives here at the White House.
That's right. Obviously, this is going to be a huge part of the conversation with some really important reporting today by Bloomberg. Not lost on us as well that Jens Stoltenberg will be in this meeting, right? The former Secretary General at NATO, said to be the Trump whisperer. Tyler, we're still asking about tariffs. Who's got a pretty good vibe going in the markets today, but the president was kind of stepping on his own remarks last evening. There are a lot of questions about China. He suggested that they're talking every day, and Beijing says they haven't even picked up the phone.
Right, Joe. Beijing this morning, the Ministry of Commerce saying that, denying that there are any negotiations currently happening between Washington and Beijing, saying that reports about positive developments in talks are actually groundless. Also, raising the temperature here, saying that they want to see the U.S. remove all unilateral tariffs going forward. That is something that the Treasury Secretary told reporters yesterday is not an option on the table. But of course, it comes, as you're mentioning, President Trump yesterday in the Oval Office saying that everything is active when asked if he's actively involved in negotiations with China, also saying that 145% levy is very high and essentially amounts to a trade embargo. But as you're about to hear, he also told reporters that if a deal doesn't happen with Beijing, that would also be okay.
We're going to have great deals. And by the way, if we don't have a deal with a company or a country, we're going to set the tariff. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks, we'll be setting the number. And we're going to pick, could be for China, too.
So, Joe, President Trump suggesting that the White House might actually put out there some revised tariff rates for countries, including China, in the next 2 to 3 weeks. So we're still waiting on further details on that. What would those rates actually look like? When would they go into effect? And just quickly, when we are talking about those other countries, we know, of course, the U.S. has been prioritizing talks with Japan, and new reporting from Bloomberg News out this morning that Japan will push back if the U.S. asks it to take any action to curb its own trade with China. That is a particularly interesting development, and while we should say that Japanese officials tell Bloomberg News the U.S. has not made that request yet, we do know it's something that this White House is mulling.
Tyler Kendall with a comprehensive report on another very busy day at the White House. Tyler, did you see how they timed that out for the arrival with Tyler Kendall? A vision of spring today on the North Lawn. We're going to be inside the building a little bit later on this hour and next as they get to lunch at the bilateral meeting. And of course, we're watching Wall Street with tariffs in the air. You heard what Tyler just said. Wall Street seems to be feeling all right. The S&P 500 up 75 points, a little more than 1%. The NASDAQ is ahead by almost 2%. We're feeling all right. That's a couple days in a row now, if we dare. And I love nothing more than a contrarian. And in fact, somebody who's got a different view on things, and you need that when it comes to business news, because we're so quick to ascribe headlines to market moves, and it's very easy to say, Wall Street's upset about the tariffs. And Wall Street is upset about the tariffs. But if you read the great Everything Risk newsletter, you realize there's just a lot more in the air here. Edward Harrison is the author and with us right now at the table here in Washington. Edward, great to see you. It's just not always as simple as a headline. A lot of business writers are asked to do that every day. How come the market went up or down? You can't really always put that in one answer, and there's a lot more than tariffs going on here, isn't there?
There really is. I mean, if you really think about it, in 2020, we had a recession. We had a historic rate hike campaign in 2022-23, and yet if you look at the grand sweep of things from 2009 to today, we've really not had a downturn. The March 2020 downturn was very short, and so in the grand sweep of things, people are conditioned to buy the dip.
Yes, right. How about that? But I think, a lot of people have made the point that if it wasn't tariffs, it was something else, and something had to pop this balloon for a minute. Is that how you see it?
Yeah, I looked at some of the data. A lot of times when you look at people rushing out of the markets, a lot of that is because there is a sense of rotation into things like Walmart, which is a consumer staple. That's a very safe stock. Yeah. So I took a look at Walmart. Walmart's trading at 38 times earnings, which is incredibly high. Yeah. And then I asked myself, why is that? I looked back at where Walmart was 5 years ago, 10 years ago, even 15 years ago. And what I found is that over that entire period, what we've seen is a huge increase, not just in Walmart, but throughout the entire U.S. equity markets, of what you're paying for an individual stock, the amount of earnings that you pay and the price that you pay for the stock. And that's not sustainable.
Okay, and there are a lot of Walmarts out there when it comes to at least valuation concerns. Does that mean that there's nowhere defensive other than gold or Bitcoin? Those are the two outperforming sectors right now.
Yeah, I mean, it means that when you look for a place to hide, and if you're hiding in Walmart, you're hiding in something that's very expensive.
Sure.
Consumer staples are not cheap. And so if you really want a place to hide, if these tariffs that we were just talking about with Kendall go down, then really there's no place to hide, and that means that the market actually is going to be more susceptible to falling aggressively.
Sure.
If these tariffs end in a recession.
I want to just make a quick note to our listeners and viewers that we might be invited back into the West Wing here in just a moment as the Norwegian Prime Minister sits down with President Trump. They are apparently gathering the pool here for some kind of a conversation. We knew they had lunch planned. They're going to have a bilateral. Tariffs are on the menu here, as we've discussed, among other issues. Edward, it does make you wonder, if all the tariffs went poof tomorrow, if we woke up and it was one horrible nightmare and we can't believe that we're back to reality, what would the market do after the volatility we've experienced the last couple of weeks?
I think the market would rally for sure. Yeah. There's still a so-called sell America trade that's there.
That's right.
Because ultimately, I think what we've seen is that the dissonance from previous administrations of this particular administration on a lot of issues has been so great that a lot of America's allies are saying, look, if the United States is going to have this kind of volatility in their policies, we need to start to look elsewhere, just to cover our bases, and I think that's going to be the same thing in markets as well.
That rotation that you talked about, though, not only just into maybe defensive plays here in the U.S., people are having trouble finding a lot of them, so they're going abroad. What does that mean for Europe? What does that mean for China? And does that money come back?
Even if there's a global recession, it means somewhat more outperformance there. It was interesting that the Goldman Sachs chief economist Jan Hatzius said the dollar is actually overvalued, 2 standard deviations of overvaluation relative to where it should be. And so when you think about all of these things happening as the tariffs play out, the dollar is going to be a very big part of that. And obviously, if the dollar is falling, if you're a foreigner, that means that you are going to be losing even more money in the market, and that's going to make people want to, underweight U.S. assets going forward.
So there's a push and pull here, I guess, when you consider all of the factors that you just talked about. A lot of investors want to bet on a better second half. We get through all this tariff business, and we can start to have more confidence in the markets. But odds are rising on a recession in the second half of the year. So who wins that game of chicken, and what would that mean for the markets? To what extent are we pricing in a recession?
I think right now we're pricing in a slowdown. We're not pricing in a recession quite yet. A recession is the sort of thing that would get you a bear market, and stocks are down. They've corrected over 10%, but that's not a recession. In the near term, if you look at things like the durable goods that came out today, if you look at cars, people that are buying, there might actually be a bump up as people sort of panic buy ahead of
front-loading in the year.
Front-loading. And that means that there's going to be an air pocket in the back half of the year, potentially, and that is the risk, not just the economy in its steady state, but the air pocket from a front-loading of people's consumptions.
Doing a great job on this newsletter. I hope you're having fun with it. The Everything Risk newsletter. Edward Harrison, find him on the terminal, find him online. It's great to have your analysis. Don't be a stranger. We got a lot more to talk about with Edward because we haven't figured out this tariff situation yet. I don't know if this meeting at the White House might help, but Donald Trump is sitting down with the Prime Minister of Norway. Let's bring you into that meeting right now. They're about to have lunch together. They've brought reporters into the room. This is live on Bloomberg.
He's been doing a fantastic job and truly respected throughout the world as a leader. And thank you very much for being here. We appreciate it. And we're going to be having a meeting in the Oval Office in a little while where you'll be invited back and you can ask some questions. It's also a pleasure to have my friend who did such a good job at NATO, my great friend, right? So you really did. We started off, they had no money, and they ended up having a lot of money after we said, you got to pay up. But you did a fantastic job, and thank you very much. And I'm glad you're here. Glad we meet each other again under these circumstances. So we'll be meeting in a little while at the Oval Office, and if you have maybe one or two questions, we'll do it now. And after that, we'll go to the Oval.
Mr. President, on Russia, do you still believe that Putin is serious about peace, given the events overnight in Ukraine? And if that bombing doesn't end, are you considering new sanctions on Russia?
So we are thinking that very strongly that they both want peace, but they have to get to the table. We're waiting a long time. They have to get them to the table, and I think we're going to get peace. We want to save 5,000 young people. I used to say 2,500. I now say 5,000. We have, Mr. Prime Minister, we have about 5,000 young people a week that are dying in that ridiculous war. And, I started out because I didn't like all the money that we were paying, and then I realized how many people were dying. And that's by far the more important element right now. I'm saying we can save thousands of people. And I don't like that it takes long at all. But I think they both want to make peace. I do believe so. There's a lot of hatred there. There's a lot of very bad blood, a lot of distrust. But I think I hope we're going to get there for the sake of a lot of young people that are dying.
Mr. President, do you have a deadline for when the party?
I have my own deadline. And we want it to be fast. And the Prime Minister is helping us. He wants it to be fast too. And I think everybody in this, at this time in NATO, they want to see this thing happen. So we have a deadline, and after that, we're going to have a very much different attitude. But I think that has a very good chance of getting done.
Mr. President, what can Norway do to prove that they're an important ally to the U.S.? What can Norway do to prove
Just keep doing what they're doing. We have a very good relationship with Norway. Great leader, great people. I know many of the people in Norway. And it's truly it's an incredible country. So all they have to do is keep doing what they're doing, I think, is probably the best answer I can give. Yes.
As you pointed out, the former Secretary General of NATO is here, Mr. Stoltenberg. How important is the NATO defense alliance, Mr. President? Is it sacrosanct from your perspective?
Well, it's a very interesting question. It's certainly very important for Europe, and I think without us it wouldn't be as nearly as powerful. And as the former Secretary General, who did a great job, can tell you, I played when I was there a very big role in making sure that NATO is funded by the 28, at that time they had 28 countries, including us, because many of the countries weren't paid, and they ended up being paid, you would say, and the Secretary General was very nice about it as far as I was concerned. Other presidents went in, they made a speech, and they left, and that kept going on. And, in the meantime, they had no money. And the United States was paying far more than its fair share. You could say that they were paying, I actually said sometimes it looked like 100%, and it was unfair. And the two of us worked very well together, and we took care of the situation.
There are some NATO countries, Mr. President. There are some-
Please go ahead.
Norwegian statistics are showing that the U.S. actually has a trade surplus with Norway. Are you going to be looking into that and see which of the countries are actually in a trade surplus?
Yeah, well, with the United States, almost everybody has a surplus.
But not in
It's really an
Norwegian numbers.
it's an amazing phenomenon. Now, there's a surplus of a couple of $1 billion, I think you have with it. I congratulate you. That's very good. We got to get a little bit of that for ourselves, maybe, but they do have a surplus. Norway has a surplus.
Mr. President, in the current tariff situation, analysts have pointed out that the U.S. actually need allies. Do you consider Norway as a possible ally in the situation?
I think Norway's always been an ally. They've been somebody we've been very close to, very friendly with. Maybe more so now with me than other people, but I think Norway's always been a great ally, yeah. Norway's been a friend.
That's a very strange question, actually, because the U.S. is our lead ally, and we build on a relationship which we will talk about now, Mr. President. But it's of high relevance, and I'm very happy that we have Secretary of State and Secretary of Defense.
Right.
So this is a very strong tie.
But it was a question about ally in the tariff situation specifically.
Tariff situation?
Yes.
Oh, well, that's, we're talking about a little bit different subject then. We're talking about a different type of ally. No, in this case, he would be very much inclined to be an ally of Norway because he wants to make the best business deal possible. And Norway and the Norwegians are great business people. They're great traders. They're great, very smart nation, very well-managed nation, has been for a long time, and in particular now with this leadership. But we'll be talking about trade and other things, and I think we're going to come to a conclusion very quickly.
Mr.
Prime Minister, I was wondering whether you think that Donald Trump, for his effort in Ukraine and otherwise, deserves to be nominated for a Nobel Peace Prize.
Well, I salute President Trump for having been taking very important initiatives to get this conflict towards an end, which both parties deserve. We need to have a ceasefire, save lives, move towards something which is more secure for Europe, for the people concerned. And on that we work together. And I look forward to, go into some details because we are at a critical moment. On that price, that is a committee taking care of that, which is completely working on its own terms, and I cannot comment on that.
Mr. President,
but thank you very much for that question. I like that question. Yeah, please.
A question on China. Can you clarify with whom the U.S. is speaking with China? They're saying it's fake news that trade talks are happening.
Well, they had a meeting this morning, so I can't tell you. It doesn't matter who they is. We may reveal it later, but they had meetings this morning, and we've been meeting with China. And so I think you have, Jeff, as usual, I think you have your reporting wrong. Thank you very much. We'll see you. We'll see you inside. Thank you.
Thank you. Everybody else. Thank you. Thank you. Keep moving, everybody. Keep moving.
All right, there you have it. It's time for lunch. Live from the White House, the president there sitting next to his Secretary of State, Marco Rubio, across the table from the Prime Minister of Norway, who is in town for meetings today. They're going to have a bilateral in the Oval Office. Probably about an hour from now, we'll walk into the Oval together and bring you into that conversation. Jonas Stira at the White House, alongside Jens Stoltenberg, his Trump whisperer, sitting in on the meetings today. Donald Trump had very nice things to say about Stoltenberg from the years he was running NATO as Secretary General. They're going to get behind closed doors now. And again, following lunch, there will be a bilateral news conference that takes place. Not so much a news conference, but, a little conversation, if you will, around the fireplace in the Oval Office. Some interesting headlines crossing there. Everyone's talking about Ukraine, at least for the most part. That is really driving the agenda in this meeting today. Thinking very strongly, Ukraine, Russia want peace. The headline from Donald Trump, Ukraine, Russia need to get to the table. Think we will get peace. Saying he has his own deadline on Ukraine when asked about that. There was a reporter who asked him as well about potentially winning the Nobel Peace Prize, which he seemed to enjoy. Now, all of this comes after a massive missile and drone attack by Russia against Kyiv last night. At least 9 dead, more than 60 wounded. As we talk about conditions here for peace, Bloomberg is making news. We've talked a lot about conditions for Ukraine, right? You lose Crimea, you freeze the lines in place, you never get to join NATO, maybe peacekeepers from Europe, but not Americans. Conditions for Russia are suddenly emerging. According to Bloomberg, persons familiar, the U.S. will demand Russia accept Ukraine's right to have its own army and defense industry. This may be a non-starter for Moscow, as Vladimir Putin has made it clear. Remember, before the invasion even happened, it was about the demilitarization of Ukraine. So where are we? As Steve Witkoff prepares to pack his bags for Moscow, we're joined by Ben Jensen, a new voice on the program, and looking forward to the conversation with Ben, director of the Futures Lab and senior fellow with the Defense and Security Department at CSIS, the Center for Strategic and International Studies. Ben, it's great to have you. I'm fascinated by this new wrinkle here because this has really seemed like a negotiation that favored Russia until now. Does this move the needle? And will this meeting with Norway help us get any closer to peace?
So, great question. Thank you for having me. I would say we don't know what will move the needle yet because we're in the middle of a complex negotiation process that doesn't lend itself necessarily to social media hot takes, whether it's by our own political leaders or quick comments and nightly addresses by Ukraine. Historically, negotiations take time and they take discretion. And so you're seeing a real tension play out, and each side is using a mix of private communication, direct private messages through intermediaries and also directly, as well as these public claims to try to gain a position of leverage. And so I think we're starting to see now that actually behind the scenes, Trump's team has been putting pressure on Moscow. I know sometimes from the outside it doesn't look like that, but this is the first sign that there has been pressure put on Moscow to accept some type of concession. So it's the mix of carrots and sticks that are really going to matter, and you can't have all the carrots and sticks publicly revealed where people start to maneuver around them. So does it move the needle? Maybe, but I think more importantly what it reminds us of is that not everything is as it appears from the outside.
Yeah, isn't that always the case? Well, Vladimir Putin certainly isn't waiting around. As you heard me mention, the attacks on Kyiv, missiles and drones were horrifying. The images are horrifying, and I'm guessing that President Trump saw them in his daily briefing today. He took to Truth Social, pretty quick post, at least for Donald Trump. It says, "I am not happy with the Russian strikes on Kyiv." If you're with us on YouTube, you see the post. "Not necessary and very bad timing," he writes. "Vladimir, stop!" Exclamation point. 5,000 soldiers a week are dying. Let's get the peace deal done! Exclamation point. Pretty interesting. Vladimir, stop. Ben, will he?
No. In fact, I would direct you and your viewers and listeners to check out our Firepower Strike Tracker at CSIS. So for over a year now, we've actually been scraping statistics to analyze how Russia uses a mix of long-range drones, the Shahed, as well as ballistic missiles and cruise missiles to effectively negotiate by fire, to use a punishment strategy as a way of gaining strategic leverage over President Zelensky through trying to kill as many Ukrainian civilians as possible. This is completely counterintuitive to most of the ways we've talked about war in the 21st century, but it shows us that war remains not only a continuation of politics, but ultimately tragic and brutal. And so what Putin did is not necessarily any different than what he's done. What you're seeing is that Ukraine is at a critical point because Russia is actually getting more sophisticated in its targeting, better able to integrate satellite intelligence, better to integrate cyber intelligence, and now increasingly being able to direct a complex mix of ballistic cruise missiles and then more sophisticated Shaheds that resist Ukrainian electronic warfare. And if you check out that Firepower Strike Tracker, we detail with all the statistics. We actually break down and do the analysis to show that when you mix the different types of attacks and you concentrate them in a geographic space, so I mix ballistic missiles, cruise missiles, and drones just on the capital, it's going to lower the probability that Ukraine can intercept them. And it's going to actually begin to really wage this punishment strategy into a brutal war of attrition, which we've already seen. So It might have seemed like it was audacious, it was bad timing, but this is central to Russia's strategy. They can't win on the battlefield. They're throwing their own young men, literally what the Ukrainians call them as meat assaults, at front lines where they're killed by drones. And so their bid for success when they can't win with this 21st century version of trench warfare is to try to bomb the Ukrainians into submission. It's utterly brutal, and our president is right to take the stance he did.
This is incredible, Ben. Terrifying as you describe this. I'm looking right now. You got to check this out, guys. Go Google it. As Ben mentioned here, Russian firepower strike tracker analyzing missile attacks in Ukraine. This is great work from the Futures Lab at CSIS. Ben, that would suggest that the closer we get to peace, the more violent this conflict will be.
I think you're absolutely right. And in fact, that's something for, your viewers and listeners to really take into consideration. There is a tendency now moving from the political and strategic level down to the operational for each side to take more risk and gambles to seek territorial concessions or some kind of additional. Basically, everyone's competing to get new chips before they head to the poker table called these negotiations. So I think you're not just going to see Russia increase these kind of highly concentrated firepower strikes. You're going to see them continue to sacrifice the lives of future Russian generations. You are also going to see them beg, borrow, and steal from North Korea, China, and Iran to build up their arsenal of authoritarianism. But at the same time, on the other side, you're also probably going to see the Ukrainians pull off some pretty daring raids and long-range strikes. And the Ukrainians have been utterly ingenious throughout this war. Remember, this is a country that entered the conflict with 5 drone companies and now has over 500. And they produce thousands of FPVs, first-person view drones, all the way up to long-range, low-cost cruise missiles daily. So you're, I think, going to see not just Russia increasingly try to punish the Ukrainian people. I would expect to see more long-range Ukrainian raids. So in the last week alone, you've had a Ukrainian strike on Russian strategic bomber bases and also a Ukrainian long-range strike on a major ammunition depot. So I think we're going to also see the Ukrainians trying to get those poker chips for the negotiation table as well.
Wow. All right, Ben, I want to ask you about Crimea specifically, and I want to bring you back to this post that Donald Trump made yesterday on Truth Social. I'm sure you saw it. Ukrainian President Zelensky, he writes, is boasting on the front page of the Wall Street Journal that Ukraine will not legally recognize the occupation of Crimea. Donald Trump goes on to write, this statement is very harmful to the peace negotiations with Russia in that Crimea was lost years ago under the auspices of President Barack Hussein Obama and is not even a point of discussion. He goes on to say that if he wants Crimea, why didn't they fight for it 11 years ago when it was handed over to Russia without a shot being fired? That's a bit of revisionist history if you were paying attention to things then. The press secretary at the White House, Caroline Leavitt, picked it up from there in the White House driveway yesterday. Ben, here's what she said.
Well, as President Trump rightfully pointed out in that statement, it was President Obama who gave up Crimea, who allowed Russia to take it over in 2014. And so the president is not asking Ukraine to recognize Crimea. Nobody has asked them to do that. What he is asking is for people to come to the negotiating table recognizing that this has been a brutal war for far too long. And in order to make a good deal, both sides have to walk away a little bit unhappy.
Ben, you don't have to wade into the Obama stuff, but aren't we asking Ukraine to acknowledge Crimea as Russian territory? And what would happen to those Russian sub-bases if, in fact, Crimea went back to Kyiv?
So I think what you're seeing in all of this, if rhetoric and reality have not aligned for some time in American politics. So I think the president's trying to make the point that he wants them to negotiate. The challenge, and this is where the details matter, is if you look at Article 2 of the Ukrainian Constitution, and we're Americans, so constitutions matter to us. Our own constitution matters. And we know that other countries also guarantee rights to their citizen, natural rights, through structures like constitutions. Article 2 of the Ukrainian Constitution makes it impossible for President Zelensky to recognize Crimea as part of Russia. And the Ukrainians, frankly, did fight for it. They fought for a long time. It's just that Russia, through a manipulation of the law of armed conflict, used the little green men to seize it. And frankly, there were a lot of Russian pensioners in Crimea and large Russian naval bases making it easier. So what you have right now is a very interesting situation where the president is just doing what he does. He really likes to turn up the rhetoric. He likes to say things that grab our attention, and he's frankly successful at it, and pull us in a way that he can try to pressure both Ukraine and Russia to try to negotiate to achieve this objective, which in a larger strategic sense means that the United States can focus on the ongoing Iran negotiations and also focus more on China. But in the meantime, what's happening is it's unsettling some of the larger complexities of any peace deal. So Crimea is going to be hard for the Ukrainians to win back militarily, and it's definitely going to be something the Russians will resist giving at the negotiation table, owing exactly to what you put out. Crimea is key maritime terrain. And not only is it key maritime terrain, Russia actually still maintains large space infrastructure there for communicating with its satellite constellation. So Crimea is important both from a maritime and a space standpoint, but also increasingly a symbolic standpoint. So it's hard to see that Russia's really going to be willing to negotiate with it. And it's hard to imagine, short of a catastrophic collapse of the Russian military along the front line, that Ukraine can take it by military force, which means we're left with a very difficult reality. Ukraine cannot cede Crimea until it adjusts its own constitution. It can't do constitutional referendums under martial law in the middle of the war. So there's really a coordination challenge involved with these negotiations about what has to move first. Can you have elections in Ukraine? Can you put those things up? And it also is a reminder to us that no matter what we hear on Truth Social or what Zelensky says in a nightly address, this process is going to take months, if not years, to play out. And the details are what will matter. The technical details are what drives negotiations in the end.
Really fascinating. You know what I love, Ben, is someone who knows what they're talking about. I'm really glad that you could come to share your expertise with us, and I hope you'll stay close because this is a story developing before our eyes. Benjamin Jensen, Director of the Futures Lab, Senior Fellow, Defense Security Department at CSIS. Let me know when you're ready to host the show. That was fascinating. A clinic with Ben Jensen. These are the kind of conversations we try to bring you every day here on the fastest show in politics, only on Bloomberg. Now, we're going to assemble our panel next. Speaking of only on Bloomberg, Rick Davis and Jeannie Shanzano are with us. But first, we want to check Wall Street. Markets feeling pretty good today, all over again. Charlie Pellet has that in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. And let me quantify, feeling pretty good. We are at the highest on the S&P since April 2nd. Moments ago, we had the Dow Jones Industrial Average retaking the 40,000 threshold. Big round number. Right now, 39,995 on the Dow, up 384. That is a gain of 1%. S&P up 88, higher by 1.6%. The Nasdaq Composite Index up 362, an advance there of 2.1%. Stocks are climbing amid Fed rate cut hopes. We've got the 10-year yielding 4.30%, with the 2-year currently yielding 3.79%. Gold now up $37 the ounce, up 1.1%, $33.25 on the precious metal. West Texas Intermediate crude back with a 62 handle, 62.73, up now by 0.8%. And Bitcoin just about flat on the day at 93,619. Weekly jobless claims continue to hold near historic lows. And with that story, here's Bloomberg's Vinny Del Giudice.
Initial claims edged higher last week, rising by 6,000 to 222,000. They've been relatively subdued amid uncertainty about tariffs and the U.S. economic outlook. In the prior report, initial jobless claims dipped to the lowest since early February. The Labor Department data also showed the total number of people on unemployment edged lower. Vinny Del Giudice, Bloomberg Radio.
Earnings news. Texas Instruments now up by 6.8%. IBM, after last night's report, down now by 7%. Chipotle Mexican Grill up 0.8%. And of course, the big earnings events after the close of trading today. We'll be hearing from Alphabet, the parent of Google, and Intel. Balance of power continues right now. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
Okay, Charlie, thank you, sir. Watching Wall Street for us every day on the fastest show in politics. Mr. Pellet, the voice of Wall Street and the New York subway. Glad you're with us here on Bloomberg Radio, satellite radio channel 121, and on YouTube. With our eyes on the White House, we're going to go back there shortly for a bilateral meeting with President Trump and the Prime Minister of Norway. You might think you just saw that. That was actually the beginning of their luncheon. Prime Minister arrived a short time ago. They're going to break bread, and then they'll be in the Oval Office with reporters a bit later on. Ukraine is a major story that we're following here today, as it is the top agenda item in this conversation. Jens Stoltenberg is also in the room, the former NATO Secretary General. As we consider the polls this morning that are making the rounds, you might have heard about some of these yesterday. Reuters Ipsos, 37% of Americans approve of Donald Trump's handling of the economy. Pew Research, Donald Trump's overall approval rating falling to 40% in the first 100 days. Confidence in his economic leadership dropping to 45%. Gallup's got ugly numbers. And you know who else does? Fox News. Fox News poll, first 100 days of President Trump's second term, and it doesn't look great. He receives the best marks on border security, the only issue where his ratings are in positive territory. His worst are on inflation. Only 33% approve, 59% disapprove. Tariffs, pretty similar, 33% disapprove. Foreign policy, 40%. Taxes and guns, none of these are looking good. And so maybe we shouldn't have been surprised this morning on Truth Social when Donald Trump started writing. This is only 2 hours ago. Rupert Murdoch, he says, has told me for years he's going to get rid of his Fox News Trump-hating fake pollster, but he has never done so. This pollster, in quotes, has gotten me and MAGA wrong for years, he says, while he's at it should start making changes at the China-loving Wall Street Journal. Not a fan of the paper either. This is where we start with our panel, both experts on polling. Rick Davis is with me here at the table in Washington, our Republican strategist partner at Stone Court Capital, Jeannie Shanzano in New York, political science professor at Iona University, our Democratic analyst. What do you think, Rick? Is Fox about to get a new pollster? And what does this tell us about the first 100 days of this president?
Well, if he doesn't like the Fox pollster, he doesn't like any pollsters, because as you pointed out, they're all basically saying the same thing, which is save for border security, which is basically incursions have all but dried up under the Trump administration. Nobody's coming across the border illegally. Everything else is a dismal failure. I mean, you know, negative 26% on inflation. Yeah. This is what he campaigned on. Right. I'm going to bring those costs down. I mean, economy, he won on the economy, and now negative 16% on that rating. I mean, it's really, really bad news. And you can only make the assumption that, you know, this first 100 days, unless there's a significant change in what's happening, it could portend really poorly for these midterm elections. I mean, we're a long way away. Nobody's voting today. But if you're, you know, after the first 100 days, these numbers are all worse than his first 100 days in 2017. Wow. So, you know, look what happened in the midterms in 2017. We have a model to work from.
That's right. Democrats are loving this. Jeannie, I don't know your thoughts on these numbers, because Donald Trump said yesterday in the Oval Office he had a 92% approval rating, I believe. Is that not true?
I'm not sure where the 92% is coming from. To Rick's point, this is pretty consistent across most pollsters, and you look at the Real Clear Politics average, which I always like to look at averages, and he is underwater, and it's stunning that he is performing worse than he was in his first term at this point. And the, you know, problem for Donald Trump is the first 100 days are as good as it's going to get for the modern president. And so it's not going to look up here. I'm sorry to tell him. And, you know, the reality of all of this is all of his own making. He hasn't had a crisis that has, you know, a natural disaster or something. These are things that he has done to himself. Shot himself in the foot, if you will. I mean, just imagine if he had come in, he had not gone with his idea of tariffs. He had instead worked with Congress to pass the reconciliation bill. He had worked to secure the border, but he had done so knowing that he has to follow the court orders and due process. And when he makes a mistake, send Abrego Garcia back. His numbers might be up where they were when he came in, but all of this is of his own doing. It's as if he can't halt himself or stop himself from his worst instincts. And I think number one that's going to go down in the record books is his adherence to a discredited economic policy that even a sixth grader could have told you since the Great Depression was not a good idea. And he has followed it right down the path. And this is where he ends up. I quite frankly think the numbers, he should be pretty happy. They're better than they probably should be, given how quickly he has dismantled the economy.
Geez, I don't think anyone's there to tell him that, Jeannie. Cece's, by the way, keeping us honest here. That 92% approval rating was on veteran services, and it was still not correct. So, Rick, I guess the question is here, is it the cadence, or is it, in fact, the issues that he's tackled? If Donald Trump was in there signing EOs every day, keeping the media running, but it was actually about lowering prices, would we be having a different conversation?
You know, look, I mean, I think that part of it is the rhetoric and part of it is the impact, right? I mean, you know, we know that there hasn't been substantial increases in inflation, as these numbers might actually indicate. But there also has not been substantial decreases. And even though Donald Trump likes to talk about the price of gas coming down, eggs, he's just not making that case. And by the way, he's drowning out all that noise, all that message with the noise around tariffs, the noise around attacks of people, you know, the negotiations on Ukraine. I mean, like, we've talked about this a lot during the campaign season. He's not getting any points for trying to solve the Ukraine-Russian war, right? Right thing to do. Voters aren't going to give him credit for it. And I think the one thing that Fox poll really indicated was that people have a very dim view of the future. It's not just where they are today, but overwhelmingly the economy is getting worse, 55%. You know, Trump policies are in the long run are going to be bad, negative 11%. I mean, like, it's a dismal future to most of these voters. And you see that in the consumer data, Michigan Consumer Sentiment, best poll in America. Same thing. People don't see this getting better.
And Jeannie, that's not just Democrats in this case. And of course, we're hearing on a daily basis from pretty smart economists at major firms who we hear from on the regular here on networks like Bloomberg, and they're increasing their odds for a recession. If we find ourselves in one in, say, the second half of the year, maybe by the end of the second quarter, what happens to these numbers?
They're going to continue to get worse, because what we've seen so far is almost at every step, experts in particular fields, whether it's economists on the economy, whether it's legal experts on what he's doing with the courts or in education, the experts in those areas are telling him to stop. They are saying he is moving in the wrong direction. And the public is always going to be a little slower. We're a little slower to catch up with that. And it's a little slower to be reflected in the public opinion polls. But that is what's going to happen eventually if he doesn't stop. And, you know, I think we've seen this week, Susie Wiles and others trying to tamp down a little bit. You notice they have sort of tried to get him not to talk until the markets are closed when he sort of goes rambling. You know, they're trying to contain it. But if he keeps barreling down these paths, the numbers in these polls and consumer sentiment and everything else are just going to continue to get worse. And so, you know, the big question is, who's there in the White House to stop him? It doesn't seem like a lot of people. Bessent seems to have stepped up. The CEOs have come in, but he feels unshackled in this second term, and he is committed to these ideas, and he is moving down a path with no thought of the impact either on himself politically as a self-interested person, or the American public, or the world economy, quite frankly.
Rick, you mentioned Ukraine. Is there any recourse? We're going to be talking a lot more about the prospect for peace in our next hour as the president meets with the prime minister of Norway. Is there any recourse to promising over and over to be able to solve this on day one and reach 100 days with no real plan in sight? Or did no one actually believe that to begin with?
No, I think that it, first of all, everyone sort of takes that kind of thing with a grain of salt.
They do, right?
You know, it's hyperbole for him, right? And he even claims it's hyperbole. And so you can't really tell the difference between what he's, you know, sort of preaching about and what he actually believes. But it does have an impact. In this Fox poll, they asked about, do you think that the administration is competent? And 52% says they're not. Well, you don't want the majority of America thinking, forget if you're even trying to do the right thing, you're not competent enough to implement it. And so that is a very, very troubling number, because we all remember when Joe Biden, at this stage of his presidency, all of his numbers were significantly better than these. But he tried to withdraw from Afghanistan on the short run, and it was a disaster, and people made a decision that he was running an incompetent government. And everything since then in his administration was bad, and he couldn't dig out of it because you couldn't convince people that you were competent. If that happens to Donald Trump, no matter what he does, it's going to be seen as incompetent through that lens.
Are you surprised that Pete Hegseth still has a job with that said?
You know, look, I mean, Donald Trump is, known for his quick trigger finger in firing people. He made a whole living out of a show where he did it.
Fair enough.
And so, yeah, I think people think there's no upside. I mean, it's not like he's got such stellar credentials that he brings confidence to the world community on the security business. And so what's the point of this? It was an experiment. It failed. Okay, move on.
Standing by his man from everything we can tell. But we also aren't done with the week. Rick Davis and Jeannie Shanzano, our panel here on Balance of Power, will be back, as I mentioned, in our second hour. There they are on YouTube. Search Bloomberg Business News Live if you want to hang out with our panel. And we're going to bring it back to the West Wing coming up, as I mentioned, in our next hour. We'll have analysis from Rick and Jeannie and a conversation around the war in Ukraine, prospects for peace, and what the president will be discussing today with the Prime Minister of Norway and the former Secretary General at NATO, Jens Stoltenberg, in the House. And we'll have a lot more ahead on the fastest show in politics. This is Bloomberg.
From the world of politics to the world of business, This is Balance of Power. Live from Washington, D.C.
Thursday edition with the Norwegians in town. Welcome to the fastest show in politics as Norway's Prime Minister arrives at the White House to meet with President Trump with Ukraine on the agenda. Alongside Kaylee Lyons in Washington, I'm Joe Matthew. Thanks for joining us here on the early edition of Balance of Power. Bloomberg now reporting, Kaylee, new conditions for peace that the U.S. is putting on Russia we haven't heard about until now.
Yeah, our first real insight into concessions being asked of the Kremlin, which specifically, according to our reporting, is that they would have to accept Ukraine having its own military and defense industry in any kind of peace deal, which would mean Vladimir Putin does not achieve one of his stated objectives of this war, which is the demilitarization of Ukraine. So unclear whether or not he would agree to this. It's probably going to be up to Steve Witkoff to relay this to him when he visits Moscow, expected tomorrow.
That'll be quite a conversation to be a fly on the wall. Those tend to go on for hours based on the meetings that they had. But you're right, in the early stages, before the actual invasion, Vladimir Putin talked about denazification and demilitarization. We're apparently taking these off the table here. The first one wasn't real to begin with, which could be a non-starter for Moscow, just like giving up Crimea would be for Kyiv.
Yep, and Vladimir Zelensky, has made that clear, something President Trump wasn't necessarily happy with. And of course, we expect we may get more conversation around the war in Ukraine this hour, as the press is expected to be let into the Oval Office as President Trump meets with the Prime Minister of Norway, and not just, of course, Norway's Prime Minister, but Finance Minister as well, who happens to be the former Secretary General of NATO, Jens Stoltenberg.
He spent a little bit of time in that room. We're also asking questions about tariffs still, with some confusion over China. The impact tariffs will have on the lowest served communities in this country. Part of the conversation we're going to have with John Hope Bryant, Operation Hope Chair, CEO and founder, will join us live from Atlanta a bit later on this hour.
Yeah, and we're looking forward to it. First, though, as always, we got to check on the markets, and Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much, Kaylee and Joe. We got a lot going on, and with the Dow, the S&P, and NASDAQ are all advancing. The big event coming up after the close of trading could very much set the tone for more tech earnings to come. We'll be hearing from Alphabet, parent of Google. That stock higher right now. Also higher Intel, which reports after the bell as well. Complete coverage on Bloomberg Television and Radio. Equity markets pushing higher, with the Dow retaking the 40,000 mark. 40,033 right now on the Dow Industrials. We'll start there, up 426 now, up by 1.1%. S&P up 93, keeping it all in context, up 1.7%. NASDAQ up 372, up by 2.2%. Broad-based rally with the Russell 2000 index up by 1.7%. The Bloomberg Mag 7 index ahead of tech earnings, up by 2.1%. Your 10-year 4.30%, with the 2-year 3.79%. Gold up 1.3%, 33.31 the ounce. West Texas Intermediate crude 62.74 a barrel, up 0.7%, and Bitcoin now lower by 0.3%, 93,373 on Bitcoin. Again, Alphabet and Intel after the close of trading, reacting to earnings last night. We've got IBM shares down 6.8%, and Texas Instruments after earnings surging now by 7%. Lots going on. We got you covered. Back we go to Washington as Balance of Power continues, and your hosts, Joe Matthew and Kaylee Lyons.
Lots going on indeed. Charlie Pellet, thank you so much, as always, for keeping an eye on the markets. As we're keeping an eye on the White House, we expect that President Trump and the Prime Minister and Finance Minister of Norway will emerge from behind closed doors, head to the Oval Office after their bilateral lunch meeting, and let the press back in for more questions and more answers. Probably a lot of them focused on issues of trade and, of course, the ongoing war in Ukraine. As we already heard at the beginning of their lunch meeting, when press was let in momentarily from President Trump, that he does believe Ukraine and Russia would like to reach a peace deal, but he says they need to get to the table to do that.
They need to get to the table, and it's coming hours after a deadly and just terrifying attack, drone and missile attack against Kyiv last night. Russia claiming 9 lives, more than 60 wounded. And of course, President Zelensky is perplexed by some of the concessions that he's heard about. We're now talking about concessions for Russia. This is the backdrop of this meeting today in the Oval Office that we will witness together coming up a bit later this hour. And it's where we start this hour with Bloomberg's Tyler Kendall on the North Lawn of the White House. Tyler?
Yeah, hey, Joe. It appears that President Trump is trying to ramp up the pressure here earlier, saying that he has his own deadline when it comes to when he wants to see Ukraine and Russia agree on a deal. He didn't elaborate further besides saying that he would like to see a deal done fast. Of course, defense cooperation amid the ongoing war is going to be a top discussion today because you mentioned it at the top there. It's not just Norway's prime minister here, but also their finance minister, a familiar name, Jens Stoltenberg, the former NATO Secretary General, who President Trump said called him a great friend in the Oval Office earlier. And this meeting comes on the heels of some important Bloomberg News reporting earlier today that the U.S. will demand that Russia accept Ukraine's right to build up its military and its defense industry, which would largely be seen as a concession by Vladimir Putin if Russia does agree, because they have wanted to see Ukraine disarm, as well as see a halt of Western military flows into the country. On the other end of that, though, we are reporting that very likely Ukraine's NATO ambitions are going to be off the table. And I bring that up because there are still some big disagreements here, of course, but particularly among European allies like Norway and the U.S. about the right path forward, because the U.S. has put forward a plan that potentially could mean freezing battle lines where they are, potentially recognizing Crimea as Russian territory. But our allies have said that a few things really need to happen first, including a ceasefire, as well as, recognizing what sort of security guarantees the U.S. could be providing here in order to make sure that a deal could actually end up being long-lasting. So that's one of the big themes that we're waiting to see emerge here today, whether or not Norway can pin the U.S. down when it comes to any sort of firmer security guarantees, besides for the implicit guarantees that they have talked about when it comes to a vested economic interest.
Well, of course, we understand that is one item, top of the agenda probably, Tyler, but the president also said that Norway and the U.S. would be discussing trade, and we heard a little bit from him about trade with China as well, a suggestion that they met today. But Tyler, who's they? He wouldn't say.
Right. No specifics there, particularly after China's Commerce Ministry said this morning that there are no negotiations currently going on between Beijing and Washington, just a day after President Trump had said that everything is active when asked if he was actively involved in talks with China. We do know that there were some preconditions on the table for China to get to the negotiating table, including that somebody other than President Trump needs to be the point person. At the same time, though, yesterday, I'll bring up those comments again, that President Trump said that he feels that 145% levy is very high and amounts to a trade embargo. But at the same time, we're talking about mixed messaging here, as you're about to hear from him yesterday. He said that even if the U.S. doesn't strike a deal with Beijing, that would still be okay.
We're going to have great deals. And by the way, if we don't have a deal with a company or a country, we're going to set the tariff. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks, we'll be setting the number. And we're going to pick, could be for China, too.
President Trump there potentially floating that this White House could release some revised tariff rates for countries, including China, in the next 2 to 3 weeks. We're still waiting on further details on what exactly that could be, as we try to glean whether or not negotiations really are taking place and who they are taking place with. One of those countries, though, that the U.S. is negotiating with, we know, of course, is Japan. Joe and Kayleigh, I'll quickly mention some other important Bloomberg News reporting this morning that Japan says that it will push back on the U.S. if they ask them to curb their own trade with China. We should be clear, Japanese officials tell Bloomberg News the U.S. has not asked that quite yet, but we do know it's an option that the administration is thinking about.
All right, Bloomberg's Tyler Kendall, live at the North Lawn of the White House. Thank you so much for joining us here on Bloomberg TV and radio as we await, again this hour, expect to hear more from President Trump and the Prime Minister of Norway in the Oval Office on the issue of the war in Ukraine, but also on tariffs as well. And this comes, Joe, as we've gotten some fresh polling data out of all places, Fox News. Yep. On how Americans are feeling about the president's handling of tariffs and the economy overall. And on both metrics, he is underwater by a pretty wide margin. Tariff approval, disapproval, 58% disapprove of tariffs, only 33% approve of this.
We are looking at broadly the lowest approval ratings from a president in the first 100 days in modern history, which has prompted Donald Trump to get to Truth Social and call on Rupert Murdoch to fire the pollster at Fox News. I'm not sure that's going to happen. He's asking for the same at the Wall Street Journal. But of course, it brings us to the issue of tariffs, the corrosive effect that it's had on psychology in the markets, although we are feeling a little better about things today. And the corrosive impact it's had in the psyche of many consumers who are concerned about rising prices and where we're going to be in the second half of the year. Kayleigh, every day we talk about economists raising odds for a recession in the second half.
Yeah, and it seems that those concerns are reflected when you're looking at more marginalized communities in terms of their financial health. According to a new survey from Hope Insider survey from the Operation Hope project, 3 of 4 participants in the survey said they are not confident that the economy will remain stable. 53% believe the change in administration will not increase job growth in their communities.
Sensing a bit of a theme here. With that in mind, we're excited to introduce John Hope Bryant, bring back to Bloomberg, the chairman, CEO, founder of Operation Hope. He's with us live from our bureau in Atlanta. John, it's great to have you with us here on Bloomberg, and I appreciate your coming to talk to us. You actually were in the Treasury Department recently to talk about financial literacy, which I know is a matter of great import to you. You spent some time with Scott Besson, who tweeted a photo of you together and wrote, "Financial literacy is a necessity, not a luxury." Is the word tariff in the financial literacy notebook that you're bringing forth?
Well, I believe that, first of all, honored to be with you. Thanks for having me. I believe that financial literacy is the civil rights issue of this generation, and the color's not black or white or red or blue. It's green. It affects all of us, and based on your reporting you just had, even more so now because the economy is basically driven, the biggest economy in the world, driven by consumer spending, over 70%, and everybody's starting to feel the pinch now. No, tariffs is not typically part of the financial literacy lexicon. I do understand that a president might want to use it as a negotiating tool in the short term to try to get someone to level a playing field with regard to trade, trade imbalances, et cetera. As a long-term tool, I think for a country that runs on sentiment, it runs on how do I feel about things, and again, the economy is mostly consumer spending. As a long-term instrument, I don't think it's productive. I actually think it's potentially harmful. I'm hopeful that this is not a long-term strategy. The 90-day pause was a nice thing to see. I think you saw the markets respond to that. You know, when you say tariffs to my population, they're thinking about bread prices, egg prices, kitchen top economics, gas prices. You know, how's it going to affect the restaurant? How's it going to affect the car they're buying or the TV that they're buying? Because a lot of this stuff has parts from all around the world, and they're smart enough at least to understand that if there's a tax on that, which is what a tariff is, that the importer is going to have to potentially raise those prices if it lasts for a period of time. I do have confidence in Secretary Scott Bessent, though. I do have enormous confidence in him, and I think that he will find a way with the administration to maneuver us forward.
So if you think the Treasury Secretary is the adult in the room, and there's been much reporting about his role in implementing or having the president implement that 90-day pause, perhaps pulling him back from the ledge on firing the chair of the Federal Reserve, what has he shared with you? Has he given you any insight into the administration's thinking, what he's receiving back when he brings forward those messages?
You know, I spent over an hour with the secretary, and it was a very serious meeting, and he took the issue very seriously, rightly so. I've known 12 secretaries of the Treasury, 9 U.S. presidents. We've been recognized by 5. I've served 3 from both parties. This is the most serious conversation that I can recall ever having with the Secretary of the Treasury on this issue of financial literacy. We covered a lot of ground. I'm going to answer your question directly. But I intentionally did not cover tariffs with him because I knew that the president has had this on his mind since 1980. He's been talking about this since 1980. He's going to do it one way or another. Why put the secretary in a position where he can't answer a question, or it's a question that can't be answered? So let's, you know, it is what it is. Let that go forward. There are a lot of other things that we have more control over, and that's going to, again, play itself out the way it plays itself out. The things that I did engage him on, he was completely transparent about. He wanted to have constructive criticism, a critique. He wanted to know how policies were affecting the average citizen. He wanted feedback on that on a regular basis. He understood that this is a nonpartisan issue, that you need, this can't be something that gets put into some partisan discussion where only one group supports it. That it will fail that way. You need Republicans and Democrats, blacks and whites, rich and poor, urban and rural. you need my population that I represent, we're the largest in the country, to embrace something that makes sense from the administration. So he was very smart, I think, to ask a group that has 1,500 offices in the country and a pulse on what's going on for not only just help with the program side, and maybe we give him some policy recommendations he might like, he's invited those, but also to help at the right time to get, this really could be a unifying issue for the country. And at a time where everybody argues over, is it dark outside? Is it light? Is that really light? No, it's not light. Somebody's lying to me, right? You know, I mean, you can't. Somebody says something's up. Somebody says no, that's down, right? Everybody's like in the business of arguing, and I think people are exhausted by it. By the way, isn't it nice that there's a topic that actually most people agree on? And I think he thinks financial literacy could be that issue that is a unifier. Now, we got to get all the noise out the way, the political noise and the partisanship out the way. I mean, people saw me meeting for the administration from, you call it my community, and folks start coming at me with that. And I said, look, trust me, sit down for a minute. I've known this guy for a decade. He's a good man. And just trust me, I think there's something we can do here that's good for everybody. And they said, great. Well, that has to happen. Everybody has to say, this is a radical movement of common sense. This is something we can agree on. This is something we can get done, and let's work on it. And that's his view, and it was very refreshing, actually. I didn't feel uncomfortable in any part of the meeting. He was himself, which is direct and transparent, and he was squarely focused on this issue, but he also understood that financial literacy ripples out into the broader economy. In other words, he wasn't treating this like some trinket issue or some marginal issue. Yeah.
Well, he referred to you as a longtime friend in his post supporting this idea on Financial Literacy Month. And we appreciate your bringing us inside that conversation, John, because, you know, the president's surrounded by a lot of different people who have a lot of different ideas about all of these things. And there were some pretty ugly tweets that we saw. Posts on X from the likes of Laura Loomer referred to you as a pro-impeachment Trump hater. Even Elon Musk retweeted that, calling it troubling. And I'm wondering if you have any reaction to what you heard there, or if that might impact your relationship with this administration.
I mean, what I believe is that the election's over, and he's the president of the United States. And as I've said on multiple TV interviews and black urban radio interviews, if the president succeeds, we succeed. If the president fails, we fail. What's complicated about this? Nobody should be rooting for his failure. We should be trying to help him succeed. Which is exactly why I risked, pushback from my traditional community to go and have this meeting, which I thought was important on the first day of Financial Literacy Month. And luckily, I'm getting very proud of the black and brown community. They're very mature about it. They were like, yeah, it's not about black or brown, John, as you said. It's about the green, right? It's not, so go get us some green. Let's see what we get. And Dr. King was assassinated 57 years ago this month, and we were in Memphis for that, with Republicans, by the way, and Democrats, and members of the Trump administration with us. And for 3 hours, nobody said anything negative about anybody. I banned it. No hating, no arguing, no nothing. And it was about solutions and the business plan for America. And of course, Dr. King died trying to help poor whites, which is the largest population of poverty in this country then and today. And we have a business plan we created for rural America, where a lot of poor whites live. We have a business plan for black Americans, and for women, and for Latinos, and for Asians, and for Native American Indians. And it's all published. It's all transparent. You can download it. Most people have read it and go, wow, it actually makes some sense. I like this. There's something for me here. We've got to get back to that conversation, because the Bible says a house divided cannot stand. We keep on with this ridiculousness, ladies and gentlemen. And we won't have to worry about whether we're hating on each other, because everybody wants to be an American but Americans. We'll be speaking Mandarin in 20 years, because there are other countries that want to be us. China, Russia, Iran, North Korea want our way of life. They want what we have. They can't get it in a fair fight. They can only get it if we mess it up. And we got to figure out whether we're better together. That's what Dr. King believed. That's what I believe. So, what does like have to do with it? I mean, this has to do with do we, I really respect me and learn to like me, that like me never respect me, right? And do we respect each other? Because, by the way, we need different views. This country is made up. I just, on the way in here, I heard from my people that California, which went from the 5th largest economy in the world to the 4th largest economy, ahead of Japan, right? Well, California, I believe, is the most diverse place in the United States of America. And New York, I believe you guys are in New York, is the second most biggest economy, right, in the U.S., and it also is one of the most diverse places. So diversity wins. Diversity wins. And by the way, most people are immigrants, including my European friends. And of course, black folks got on the wrong boat. That's another conversation. Look, we gotta lighten the temperature, and laser in the focus on what we are really about. What's the business plan for this country? And how can we, again, this is the biggest economy in the world, and it's 70% consumer spending. That's all of us doing better.
Well, and to return to the point you were just making on everybody wants to be the United States of America, I wonder what you make of the narrative that has been working its way through financial market participants in the last month or two about the end of U.S. exceptionalism. Is that the way you see it? Is that what these policies could bring about?
I think every 50 to 70, maybe certainly 100 years, this country has an identity crisis. We had it with the first Reconstruction, which was, well, of course, we had it with the war for our independence. But then you had the first Reconstruction, which was slavery, right? That was a decision. By the way, the Republican Party, people don't know, was birthed on freedom and anti-slavery agenda. I don't know if people know that. That was why Lincoln got so much heck. But that was the first Reconstruction. And then you had Frederick Douglass, a black man, working with Abraham Lincoln, a white man, and Frederick Douglass criticized Abraham Lincoln. But Lincoln was smart enough to recognize of stuff he didn't know, as smart as he was, and he brought Frederick Douglass into the conversation. At the end of the day, Frederick Douglass made him a better president. His council made him a better president. That constructive friction, Lincoln realized, was a good thing, not just negative friction, constructive friction. Then we had the second Reconstruction, the Civil Rights Movement. And Johnson, President Johnson, who happened to be a Democrat, did not like or did not get along with Dr. King. Dr. King got along with pretty much everybody. But they figured out they were better together. They ended up with 4 civil rights bills by a guy who called people really interesting names. I'm talking about Johnson. And then you had the third Reconstruction, which is what I think we're in today, 2020 to 2030. And so I'm not surprised that the country's basically going through a colonic. I mean, this is one huge digestive exercise where we got to flush a lot of things through our system, and we got to figure out, right? Can you survive hard right, and that's it? Can you survive hard left, and that's it? I don't think so. I think most people are actually massively in the middle. It's a radical movement of common sense. They want to pay their mortgage. They want to send their kid to college, right? They want to start a business or go work for one. They want to go to the park with their kids. They want to enjoy their neighbors. The diversity actually is part of our magic sauce. It's just that the diversity is a little darker these days. It's a little bit more tan. But the diversity is all. Do you know that women, in 1972, a woman could not get a bank account? Not 1872. In the second Reconstruction, affirmative action, which was created for blacks, actually went to benefit white women. And I say, bravo, by the way. Today, women couldn't get a loan unless her husband guaranteed it in 1972. Today, women are a third of the U.S. economy. If we hadn't done that, if we hadn't had that debate and won it with common sense, where would we be today? A third of all women, I think it's like $7 trillion is the women's contribution to GDP. We'd be an also-ran country. We'd be a third world country as economically. Here we go again. Half of this country, 40% of this country is black and brown. I love math because it doesn't have an opinion. Within 10 years, there'll be a majority of minorities. The largest group of baby boomers in the history are beginning to retire. As you know, there's going to be a $100 trillion wealth transfer in the next 10 or 20 years. That's basically white, wealthy people trying to go play golf at the same time. The businesses, who's going to buy them? The GDP, who's going to replace them? My rich friends need my poor friends to do better, if only to stay rich. And so this is what I told the secretary, is you can't, well, I'm sorry, I didn't tell the secretary this part. I told TV this part. You can't cut yourself alone out of this crisis. Yes, there is waste. There is bloating. let's get to that in an intelligent way, not in a the how is as important as the what. We can be gracious about this. We can understand it's not the employee's fault if they're working at an agency that may not be efficient. Let's deal with that in an intelligent way. Get that out of the way. Now let's at the bottom third of the economy and make them capitalists. And let them, let's repair the ladder and let them become homeowners. 44% of black people own a home compared to 75% of their white counterparts. That's good for banks, for them to get financially literate, right? Then get their credit score up. By the way, credit score increases of 100 points in Black America alone is worth $750 billion by 2053. Then you go buy homes, 44% to 60% home ownership for Black America alone. That's good for $800 billion. That's $1.5 trillion of wealth creation and 2 to 3% of GDP increases every year. And then you have business acquisition. The baby boomers don't want the businesses. The baby boomers are retiring. They want to give away the stocks, bonds, the cash, all that stuff. And the homes, the family wants that. The family don't want the businesses. Well, let somebody buy that business. That's $1 trillion of wealth creation. And AI, artificial intelligence. I'm co-chair with Sam Altman on the AI Ethics Council, and I'm co-chair with Doug McMillan of Walmart on Financial Literacy for All. This is civil rights and civil rights. These two things, that's $1 trillion. So that's $3.5 trillion of new wealth creation by 2053, 20 years or so.
Yeah. And
2 to 3% of additional GDP. Who doesn't want that? I mean, when the black person succeeds in this example, or the poor rural white, or the woman, or the Latino, or the Asian, yes, here legally, when they succeed, all boats rise. I mean, this is a radical movement of common sense. I just think that no one's really having this conversation, but this is the conversation. And
that's why we wanted you to be here, John. If we just let you keep talking, I feel like you're going to solve this for us right now in this hour. You know, there are very few people who come on Bloomberg and we clear the decks for like this. At some point, we are going to check the markets. But while you're still with us, live from Atlanta here, you know, there's the old saying, if you're getting it on both sides, you're doing something right. And I suspect that you feel like that right now. Would you go back to meet with this Treasury Secretary again?
If he invites me, I'll come back, sure. I mean, I was there meeting with other folks a couple weeks, last week actually. I mean, look, I'm going to give him some room and let him do his job. He's helping to run the world economy. He knows my number. If he wants to call me, I'll answer. But you know, let him have some room. Let him talk to some other people. Let him, you know, look, we have the largest infrastructure for financial literacy coaching in America. We're not going anywhere. And we're the best in class, and we're in urban community. 20% of our offices are in white, poor, rural communities, by the way. And they don't care what color I am. They just care whether they're getting their earned income tax credit, their credit score up, their debt down, their savings up, and the bank says yes to an approval. And you know, so we have this infrastructure that's growing, 1,500 offices total, millions of clients, and we're here when the Secretary of the Treasury, and by extension the administration, has some make sense things they'd like to do that we can be helpful for. And if they don't need us, we'll go on about our business.
All right, we'll leave it on that note. John, thank you so much for being so generous with your time today. John Hope Bryant, Operation Hope, Inc., Chair, CEO, and founder here with us on Bloomberg TV and radio. Much appreciated. And as he says, the Treasury Secretary needs to get out and talk to more people. He currently is in the room in the White House, along with other cabinet secretaries and President Trump and the Prime Minister and Finance Minister of Norway. We, again, expect that they will emerge from that meeting in short order. When they do so in the Oval Office, we'll be bringing it to you live here on Bloomberg TV and radio. But before we do so, as Joe said, we do got to get back to the markets. So, Charlie Pellet, how we looking from New York?
Right now, we are looking at a Dow Jones Industrial Average that is hovering right around the 40,000 threshold, up 390 right now. That is a gain of 1%. Dow Industrials at 39,995. A couple of moments ago, it was moving above 40,000. The S&P up 92, up by 1.7%. And NASDAQ now higher by 382 points. NASDAQ is up 2.3%. The Russell 2000 index of small cap shares up 1.7%. Your 10-year 4.31%, with the 2-year currently yielding 3.79%. Gold up $46 the ounce, $33.35 the ounce, up 1.4%. And West Texas Intermediate crude very close to $63 a barrel now, up by 1.1%. PepsiCo has lowered its full-year profit outlook, showing that demand for the company's snacks and soft drinks is wobbling amid unpredictable U.S. trade policy and worsening consumer sentiment. PepsiCo shares on an up day for the rest of the market. PepsiCo down now by 5.3%. And Procter & Gamble is cutting its annual sales and profit outlook, citing tariffs and volatility in consumer demand. Procter & Gamble down by 4.6%. Our last guest alluded to it. California's nominal gross domestic product reached $4.1 trillion last year, making it the world's fourth largest economy. Governor Newsom using his state's economic power to challenge President Trump's trade policies. Recapping, S&P right now up by 92. That is a gain of 1.7%. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet on the markets for us every day here on the fastest show in politics. Thanks for being with us here on Bloomberg TV and radio, on YouTube as well. Search Bloomberg Business News Live. You can always find us, of course, on satellite radio channel 121. A lot of ways to find Balance of Power, including our podcast, which you can find at Apple and Spotify. We're in waiting mode right now for President Trump and the Prime Minister of Norway. Behind closed doors, they're having lunch right now, and they will have a bilateral meeting in the Oval Office that we're told will be a fly on the wall for. It was supposed to start about 30 minutes ago, and so we're running a little bit late here. They did spend a bit of time in front of reporters earlier. When the Prime Minister arrived ahead of their lunch, reporters in the room asking questions about Ukraine. This is going to be a major part of the conversation today, the path to peace, if there is one. Only hours after Russia delivered one of its largest missile and drone attacks in recent memory against Kyiv. The president was asked about deadlines for peace. Here's what he said.
I have my own deadline. And we want it to be fast. And the Prime Minister is helping us. He wants it to be fast, too. And I think everybody in this, at this time in NATO, they want to see this thing happen. So we have a deadline. And after that, we're going to have a very much different attitude. But I think that has a very good chance of getting done.
Remembering that the first deadline we had heard about when it came to ending the war between Ukraine and Russia was day one of President Trump's presidency. That's what he said he could achieve, or perhaps even before he would come into office, he thought he could end this war, which is still ongoing. So on that note, we turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Stonegard Capital partner and Republican strategist. Jeannie, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. And Rick, when we consider that this president, this White House, their communications team has made a big hay about promises made, promises kept, do you hear from President Trump and others in his administration who are working on this issue a suggestion that this might actually be a promise that is not going to be as easy to keep as they thought?
Yeah, I think anytime they enter into the debate on how long is it going to take to get a deal with Vladimir Putin, they're running on very thin ice. Obviously, he was thinking that the power of his personality, the strength of the Union of America and NATO, would be enough of an influence to get something done quickly. But I don't think he's ever really quite understood how intransient Vladimir Putin is, and all the kind of nice things that he says about him and tries to blame the war on the Ukrainians isn't going to convince Vladimir Putin to do something he otherwise doesn't want to do. And so I think, we're 100 days and counting. Yesterday, the vice president was talking about, if we're not going to settle this thing soon, we're walking away. I saw the president's comments as a way of walking back that a little bit today, not trying to create too much heated rhetoric at a time when Putin is still making these really untoward attacks on the Ukrainians. So, look, I think he's in the middle of a mess, and it's going to take him a lot longer to try and figure out. We may be here another 100 days wondering, hey, he promised 100 days in to his administration that he was going to end this thing soon, and still no answer.
Wow. Well, it's at least 9 dead and 60 wounded in this overnight missile and drone attack in Kyiv. Jeannie, we talked to Ben Jensen at CSIS earlier today, who said attacks like these will only increase as we get closer to any potential peace as Vladimir Putin tries to strengthen his hand militarily. And you see Donald Trump on Truth Social today. I'm not happy with the Russian strikes on Kyiv, he writes. Not necessary and very bad timing. Vladimir, stop! Exclamation point. Is he learning a very difficult lesson, to Rick's point here, about Vladimir Putin?
You know, I thought I'm so glad you raised that post, because I think it's a moment that we're going to remember, this sort of personal appeal from the president, you know, Vladimir, stop. And this is not necessary. And 70 missiles, 150 attack drones, including ballistic missiles, targeting citizens and civilians in Kyiv, you know, as they are at the table to have these talks. I don't know if Donald Trump is learning. You know, he has said things in just the last few days and few hours, things that make you scratch your head, like blaming Barack Obama for Crimea, for instance, something he said as early as 2018, but has reiterated in the last few days, few hours. But the reality is that we aren't really much closer to a ceasefire than we were when he took office. And this is not on Donald Trump beyond the promise he made. This is a result of the fact that this is very, very hard negotiations. And so his over-promising on the campaign trail is now coming back to haunt him. And we can feel his frustration. And of course, we all feel that along with him.
Well, and I wonder what those in the Norwegian delegation, including the Prime Minister and the former NATO Secretary General, now Finance Minister of Norway, Jens Stoltenberg, will be feeling as they're having their conversation with the president now. It will turn public in short order. Again, we'll bring that to you live here on Bloomberg TV and radio when it begins. But Jeannie, given what we saw in the Oval Office when Ukrainian President Zelensky visited, how quickly that went downhill, how careful do leaders in Europe of alliances that the U.S. has at least historically held very close have to be when navigating this issue with President Trump? Is there a way for them to be able to convey their concerns without it potentially jeopardizing their own relationships with this country?
Yeah, you know, I think they probably are taking a lesson from the Prime Minister of Great Britain and the Prime Minister of France, who were able to negotiate those visits very well. Of course, you never know what to expect when they open up that White House and we go in via the press and listen to these comments. But, you know, Donald Trump does have a long relationship with Stoltenberg. They do have two huge issues on their plates between tariff and the Ukraine issue. But, you know, the hope is that they are able to convey to him the concern as a country that is right on the border. And of course, the import of us being in alliance with NATO and supporting Ukraine, and the very real concern of Poland, Norway, and these other countries, that it is in the interest of not just them sitting there on the border, but the United States and all of the democratic Western world, that we do stop these kinds of incursions and we don't by any means support Vladimir Putin in this invasion and open the door to other tyrants doing the same thing if we turn our backs on them.
Rick, we're hearing for the first time today, at least in any specific way, about concessions for Russia that the U.S. is proposing here, that Russia accept Ukraine's right to have its own army and defense industry. That's said to be a non-starter in Moscow. If we've got this on one side and Zelensky's saying, I'm not giving up Crimea on the other, this is a standoff, right? This is a deadlock.
Yeah, it indicates to me that we really haven't made any progress. You know, that unless Vladimir Putin is prepared to give, right, not his maximalist principles of everything should be given to me to stop killing people, right? I mean, that is his concept of a peace agreement, and that the people of Ukraine, you know, will never, you know, say yes to that. They are a sovereign territory that was illegally invaded by the Russian army, and they're fighting for their survival, and they expect the Russians to withdraw from their sovereign territory. I mean, like, as a basis of a conversation, you have to go back to saying, where are the lines that have, you know, been drawn in this arena? And by the way, I mean, Russia has agreed to that in earlier agreements. When the Ukrainians gave up their nuclear weapons, Russia agreed to the sovereignty of Ukraine. And so it's certainly within their right and within the treaty agreement they have to insist on that. The idea that they somehow are going to, you know, neutralize the Ukrainian ability to defend itself and insist that they can't join NATO and insist that you can't put European troops in the country is not a realistic basis for a negotiation.
Well, and to return to what you were saying earlier, the suggestions we got, not just from J.D. Vance, but Marco Rubio, that the U.S. is prepared to walk away. What would it actually mean, do you think, Rick, if the U.S. weren't the one mediating these talks? If it was another country, take your pick, if all it is about being a middleman between Ukraine and Russia, does the U.S. really need to be involved, or is the U.S. involvement the only hope of ever bringing an end to this conflict?
No, I'd say at this stage, I would make the bold, blatant statement that the U.S. is an impediment to getting a deal done, because we've been coddling Vladimir Putin, and no one else in the world will do that, right? If the Europeans get involved in a negotiation for this, they will say, get out of Ukraine first and foremost. And the last thing they want is to reward a bully for invading another country, one that they live right next to. And so the U.S. is the best chance, because of Vladimir Putin's seemingly adoration of Vladimir Putin, for Vladimir Putin to get a deal that he could actually agree to. And so maybe the U.S. getting out of the middle of this thing will result in some clarity on where the real bounds of a deal can be made.
Well, so is that where we're going here, Jeannie? We've heard multiple threats from the president himself, from the vice president, from the Secretary of State. Take it or leave it, otherwise we're packing up our toys and leaving. Would that actually be the beginning of a real negotiation?
You know, it might be, but I think that speaks volumes as to the United States position in the world if that's what happens. I mean, it's stunning for me to listen to Marco Rubio, who just months ago was voting to support Ukraine, to talk about walking away. And what does that say about the United States' place in the world and as the leading democracy in the world, that we would pack up and go home because an invaded country did not agree to give up territory to the invader? I mean, to me, that should be a dismal reality for every American. I hope that doesn't happen. I hope it's an empty threat on behalf of the administration, and they continue to fight for Ukraine to maintain its sovereignty and work out a deal between these two, because they could get one.
Jeannie Shanzano and Rick Davis, our political panel, as we wait to hear from President Trump and the Prime Minister of Norway. Things must be going well in their meeting over lunch, because they have not begun their bilateral session yet. That was supposed to start more than a half hour ago, and it does. You'll see it and hear it here on Bloomberg TV and radio. I'm Joe Matthew in Washington, alongside Kaylee Lyons, as we drive on with our view on the stock market. Wall Street now, and Charlie Pellet with his update in New York. Charlie, how are we doing?
Thank you very much. Right now, we are hovering right around the 40,000 mark on the Dow. Going to be a big day for tech names after the close of trading today, when we hear from both Alphabet and Intel. Yes, Bloomberg Television and Radio, we got you absolutely, positively, completely covered on both those names. Right now, the S&P is up 87, 54.63, up by about 1.6%. The Dow, as I mentioned, right around 40,000, up 377 now, up by about 1%. NASDAQ up 361, up by 2.2%, while the NASDAQ 100 index up by 2.3%. The Russell 2000 index of small cap shares up 1.6%. The Bloomberg Mag 7 index ahead of tech earnings up 2.1%. Spot gold right now trading higher by 1.4%, 33.33 the ounce. The 10-year 4.30% with the 2-year 3.79%. And West Texas Intermediate crude up 1%, 62.86 per barrel of WTI. Bitcoin right now at 92,995. Bitcoin down $690. Bitcoin is declining by 0.7%. Bottom line here, investors are betting that the Fed could cut rates sooner than anticipated to prevent a recession due to President Trump's trade war. Company news, Bristol-Myers Squibb raising its sales and profit forecast for the year due to better than expected sales of older drugs and a favorable impact from the weaker dollar. BMY, Bristol-Myers down 0.4%. And Merck says it expects to lose $200 million to already announced tariffs in 2025 amid an escalating trade war between the U.S. and China. Recapping, S&P up 88 right now, up 1.6%. Balance of power continues now. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, looking at the markets for us. Thank you so much. As we consider markets, which it's incredible to see 3 up days in a row, something we haven't seen for the S&P 500 at least since before Liberation Day, as it has keyed off of every single development and headline in regard to tariffs. And we certainly have not seen those headlines stopping today when it comes to not just tariffs, but negotiations to maybe make them go away. We've had a lot of questions, Joe, about the tariff or trade negotiations and whether or not they'd be opening up anytime soon between the U.S. and China. President Trump in the Oval Office last night suggested that there's talks happening every day. China itself pushed back on that overnight, saying no such talks have begun. And President Trump doubled down just an hour ago when he let the press in his meeting with the Norwegian Prime Minister, saying that they had a meeting today, but that whoever they was is not important. So once again, we're being left with questions as to what exactly, if any, progress has been made on reducing what is 145% and 125% levies, respectively.
Doesn't sound like the principals are in the same room. As the president has said, we're waiting for the call. So based on everything we understand, no call has been made. Whether there's some sort of back channeling going on he might be presumably referring to, we have no idea.
Yeah, and it's that lack of clarity that, of course, we keep hearing from Federal Reserve officials about as they try to consider what impact tariff policies ultimately are going to have on their policy making. And on that note, Federal Reserve Governor Christopher Waller had some thoughts on the subject when he joined our colleague Michael McKee here in Washington earlier today. Here's a taste of their conversation.
The president's put off any decision on the large tariff world that was proposed on April 2nd until July. So all you're going to see probably till July is whatever the existing tariffs are in place. And as I said, I don't think you're going to see enough happen in the real data in the next couple of months.
The aforementioned Michael McKee is with us right now at the table in Washington, spending the week with us here for the spring meetings at the IMF, which means you're having a lot of really interesting conversations, popping around town and hearing things that a lot of people might not have planned to say on the air. I'm just wondering if you can bring us into some of those conversations. Is uncertainty the word that you're hearing about, or is it a more nuanced conversation around tariffs?
Well, it's really uncertainty. The people who are experts in trade and tariff are saying the obvious things, that this is not good for the country, and whatever path we take, if you're going to have tariffs, it's a tax and it's not good for the economy. But what the impact is going to be is much harder for anybody to divine, because they don't know what the ultimate tariffs are going to be and what products they're going to be on and how that's going to impact everybody. You heard Chris Waller say, we've seen the soft data go down, but I was asking him how the hard data, when do we get some hard data that will tell us one way or another? And he said you probably won't see it till July. So we're going to be living in this sort of weightless world for quite some time.
Well, it's also a question of, even when that hard data materializes, which portions of the hard data the Fed chooses to be most reactive to. Is it anything that indicates cost pressures and inflation is going up, or is it softness in the labor market? They got to pick a side of the mandate here, right?
Well, his view was maybe not. You might see both at the same time. The theory enunciated by Jay Powell is that they'll look at which one of those is farther from where it should be and try to deal with that. Inflation is always their major concern. So if we do see inflation go up, now Waller differs from Powell a little bit in saying that he thinks that growth is a greater danger in the tariff scenario than inflation. Inflation would be a one-time jump in the price matter, whereas Powell said it could last for a while. So we'll have to see how that data plays out. The other thing people are talking about, though, is how this affects the rest of the world. Certainly, everybody we've had in here, and we've had a lot of finance ministers and central bankers from around the world this week, is saying that this is going to affect us. And then there is a rebound effect on our relationship with the United States. And last night, we were at an event where we heard people say it goes beyond economics to national security, because if you can't count on the United States economically, can you count on them with national security? We have to take care of ourselves.
We're going to witness a confluence of these two issues in a couple of moments. The press pool is staged outside the Oval Office right now, and we're going to see President Trump and the Prime Minister of Norway really get to this. They're talking about tariffs. They're also talking about national security and how to end the war in Ukraine. When you're talking about the market listening to this conversation, though, to what extent does the market have patience for each wrinkle? We sit here obsessing over this, carrying all of these events live every day, Michael, and it's hard to tell how much of this lands and is actually being digested by the market or by an economist who sees news here that changes the landscape?
Well, I think the economists and the analysts are reacting sort of in real time. We've seen a lot of the Wall Street analysts changing their forecasts and sending out updates. I'm not sure that investors are really as focused. I mean, first you have to discount the fact that there are a whole bunch of computers trading on headlines that cross on the Bloomberg, and they don't know whether Trump means it or not. Then there is a question about whether this is going to be like Trump 1, where things get walked back. And we've seen some evidence of things getting walked back. And then how much damage is it going to be done, and can it be fixed later on? And nobody knows the answer to that. I do find it amusing every day to watch the equity market go up or down on some headline. The fact that yesterday Scott Bessent said, we could make a deal with China. Well, yeah, but that set the market up a lot.
Yes,
and then
it did.
Overnight, the Chinese said, well, we haven't called them. And then that sent the market this morning down a whole lot. So it's really hard to put a finger on what everybody's thinking.
Well, especially if you read the story rather than just the Bessent headline, you would see that he actually said a comprehensive trade deal with China could take 2 to 3 years.
Right.
The idea that none of this, frankly, Mike, is seeming like it's going to be instantaneous.
Well, that's true of anything. I mean, these trade agreements take years to do. Just to do the USMCA took a whole year.
Yeah.
And that changed that treaty very, very little. So to get something out of it that would benefit the United States, benefit both sides, would take some real work. And each country is going to have different trade issues. Read something today about the administration hoping they can reach a deal with India that would be a template. But it's not really a template, because what India wants to put tariffs on or take tariffs off on is not going to be the same as what Japan does. And so it's going to be very difficult. And each of these leaders, each of these countries has their own constituency. The Japanese, their biggest tariff is on imported rice. The rice farmers are not going to be very happy if the prime minister negotiates away the tariff that's put on there. And that's just one example in one country. This is however many countries. They say 90, 20, they give us a different number every day.
I think the press secretary actually suggested hundreds have called.
I'm still trying to count that many.
I didn't know there were that many.
But I didn't
hundreds
either.
plural.
So, all right, all of that said here, let's say the tariffs went away tomorrow. Donald Trump has a revelation at lunch, and we're just going to walk away from this whole thing. Do we go back to where we were? Is there kind of a neutral position that we revert to? Or has there been a corrosive, lasting impact when it comes to trust, as you pointed out, for the economy or security?
I think there might have been on the business side. Consumers tend to just roll with the punches, and if all of a sudden the idea that they might lose their jobs goes away, if they don't see prices continuously going up at the grocery store, then they may continue on their way, because the economy was in pretty good shape coming into this year. But business has to grapple with the idea that Trump did all this, walked back some, put some back on. So even if he takes it all off again, they've got to worry about whether he's going to change his mind again. And if you're making big investments, those are take place over a period of time. And you don't want to make an investment and then have the president change his mind again. So it does look like he's probably done himself and the country some damage that would be very hard to get over. Eventually, maybe you'd believe him, but do you want to build a new factory if you don't know what the situation is going to be?
Well, and to that credibility question, which I think has extended well beyond just when it comes to rhetoric and tariffs, but there's been major questions raised in recent weeks about the credibility or the security that U.S. assets may even still be able to provide investors, whether full faith and credit for U.S. treasuries is something that is still applicable. Are you hearing about that this week from these other countries who might be holders of this debt?
Less this week. Part of the problem is there is no real substitute. The U.S. Treasury market is the most liquid and deep market in the world, and you don't have a lot of alternatives. People can't switch en masse to another country. The German market, the French market, they're not big enough. China doesn't have a convertible market. So you're really looking at buying American. Maybe you buy less, maybe you spread out your purchases, but people will still buy treasuries. As the old saying goes, they will always clear, but at what price? Now, that's the issue. Do we see interest rates rise to attract that investment? And then that feeds into the whole question of our budget deficit, which is a separate issue that a lot of people you do hear about talking about, that interest rates are going to have to rise to even without the trade issue, just to get people to buy, which makes the budget deficit worse.
More expensive.
So this is an issue that will be on the table for quite some time, because even without trade, you've got reconciliation in the whole budget process, and they've got to figure out how to pay for the tax cuts and everything else.
Scott Bessent being described as the grown-up, the adult in the room, so forth. You spent time with Scott Bessent before he was the Treasury Secretary. You spent time with Howard Lutnick as well. I just wonder, when you pull back here and look at a more sort of relieved market in the last 48, 72 hours here, how much of it has to do with specific headlines versus the idea that Scott Bessent has won the battle of who gets Donald Trump's ear?
Well, I don't think you could say that anybody is seriously trading on the idea of Scott Bessent winning the battle, because that can change in a moment's notice.
Fine.
We know that the president could come out at this lunch and say something against Scott. And so I think the relief is that more bad things haven't happened. And while they're still out there, they're still out there. They're not maybe as imminent as they were. So we're going to trade in the meantime. But all of this could come back the same way very quickly.
Yeah. All right, Michael McKee, Bloomberg International Economics and Policy Correspondent, here with Washington on a busy IMF World Bank week-long extravaganza. Thank you. And of course, as Mike alluded to, you never know what we're going to hear in the Oval Office, but we're about to hear more of something as the press is heading in now, as the president, of course, gets ready once again to be sitting across from the Prime Minister of Norway.
That's right, elbows high as we pile in to the Oval Office. We saw them earlier before their lunch, Kaylee, the Secretary of State, Marco Rubio, and the Secretary of Treasury, aforementioned Scott Bessent, among those, including Michael Waltz, the National Security Advisor, spending time with the delegation from Norway. We've got the Prime Minister there. We've also got Jens Stoltenberg, the former Secretary General of NATO, at the couch in the Oval Office. He's been present for all of these conversations.
Yeah, now serving, of course, as Norway's finance minister. So he is in the room for this as well, and President Trump has just begun. So let's listen live on Bloomberg TV and radio.
And we've had talks on the war with Ukraine and Russia, and trade. We're doing very well, I think, on both. We've had some pretty good movement in every respect. The war is very important that it ends with, I used to say, 2,500 people a week dying, young people, mostly soldiers from Russia and Ukraine. And we want to end that war. We want to end it quickly. And I think we've made a lot of progress. And we'll see what happens. This next few days is going to be very important. Meetings are taking place right now. Additionally, we talked about trade, and we get along very well on trade. We'll do something, but I think the Prime Minister knows that over the years, the United States has been very good to a lot of people, and it's time for us to benefit also. So we're going to have a good relationship on trade, and we discussed other things also. But Mr. Prime Minister, it's an honor to have you at the White House. Thank you very much.
Well, thank you, Mr. President. This year is 200 years since the first immigration from Norway to the U.S. We come here early in your term. Appreciate that you take time. We have highlighted that very close cooperation. We are allies. We look after security in the north, in the Arctic. A lot of confidence between our services. We have discussed in detail the war in Ukraine. I have saluted the President for his initiative to make progress towards something that can be a ceasefire and an end to this terrible conflict. It is a complex picture, but it needs political will and push, and we have exchanged ideas on that. And then I think the President and his team have been open to hear our perspectives. And on trade, we have also emphasized that we can benefit, both of us, by trading. We can be complementary, and we can find good solutions. But first of all, I appreciate, Mr. President, the spirit and the tone of this conversation, which has been confirmation of a very strong partnership.
Thank you very much. Appreciate it. Any questions?
Can I ask you first, Mr. President, have you spoken about the tariffs that you want to impose on Norway? Is there a chance that you can lower?
We spoke about trade, and we understand each other very well. I think we'll have no problem.
You think that you will get an agreement?
I think we'll have no problem whatsoever with Norway.
Mr. President, did you discuss a possible visit to Norway? Did you discuss a possible visit for President Trump?
We didn't, but I love it. I mean, I've been there, and it is a beautiful place. They have.
But I told the president that, you know, he is receiving us early in the term. He's welcome to visit Norway. We would like to have him, and it will be another way of emphasizing this strong friendship.
Mr. President, Norway has been a staunch supporter of Ukraine since the Russian invasion in 2022. Has something been discussed here today that may have altered your views on things?
No, we want to, very simply, I have no allegiance to anybody. I have allegiance to saving lives, and I want to save a lot of lives. A lot of young people, mostly young people. It's the war. It's the soldiers, and if we can do that, also, as you know, I got started because the money that's been spent on this war is insane. It should have never happened, and it would have never happened if I were president. But Biden spent $350 billion on this, and it's a shame. And that's what got me involved. And then I looked at, and I see the results. It's horrible. It's a killing field. 5,000 soldiers a week on average. And we want to stop that. We both want to stop that for a lot of reasons, but I would say that is my number one reason.
Do you think that we will get Russia to accept a deal that also Ukraine and Europe is willing to?
I think so, yeah. I do. I believe they will accept, and I think we're going to get this over with. I hope so, soon.
You continue to lack support from NATO allies in your goal of obtaining Greenland. How will you proceed if you don't get that support?
Well, Greenland's going to be interesting, but that's for another day. I think we need that for international peace.
What are you expecting of your
And if
allies?
you don't have that, I think it's a big threat to our world. So I think Greenland's very important for international peace. Yeah, please go ahead.
Mr. President, this morning in Truth Social Post, you used the words, Vladimir, stop. That seemed like a slightly different message, a personal message. What is your level of frustration with President Putin?
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired. And I was not happy with it. That's what I meant, and that's, you know. What it is. I assume that's what you mean.
Sorry.
Yeah.
If the bombs keep falling, will you consider additional sanctions for Russia, or what will you do if President Putin...
I'd rather answer that question in a week. I want to see if we can have a deal. No reason to answer it now, but I won't be happy. Let me put it that way. Things will happen.
Mr. President, why are you not putting more pressure on Russia? I know a lot of Europeans would like to see that.
You don't know what pressure I'm putting on Russia. They're dealing. You have no idea what pressure I'm putting on Russia. We're putting a lot of pressure.
Can you maybe tell us that? What kind of
We're putting a lot of pressure on Russia, and Russia knows that, and some people that are close to it know, or he wouldn't be talking right now. The Prime Minister understands that better than anybody. He wouldn't be talking right now. He's talking, and we're putting a lot of pressure. I think he wants to make a deal. We're going to find out very soon, but it takes two to tango, and you have to have Ukraine want to make a deal too, and they're being hit very hard, and I do believe they want to make a deal.
Mr. President, Mr.
Can I ask
if I may?
You've said that the Ukraine have to give some territory to win peace, among them Crimea. Do you stand by that? And I know that the former NATO General Secretary today has told you that he does not agree, and he believes in territorial integrity of the Ukraine. How will you deal with that with your allies? And do you stand by that Ukraine have to give Crimea to win peace?
Happens to be right here, you know. So they can't put words in his mouth. He's been a great general, frankly. It was because that's what you are. Really, you're a general. But he's been a great Secretary General. We had a tremendous relationship, very successful, and I think he could speak for himself. He's right here.
But do you still agree that Ukraine have to give some territory away to win peace?
Well, it depends what territory. They've been fighting. They've lost a lot of territory. And we'll do the best we can. Working with Ukraine, we'll do the best we can. But they lost a lot of territory. When you say Crimea, that was handed over during a president named Barack Hussein Obama. That had nothing to do with me, Crimea. That was 11 years ago with Obama, and they made a decision. There wasn't a bullet fired. There was no fighting. There was no anything. They just handed it over. Now they say, well, can you get it back? I think that's going to be a very difficult thing to do. That was given by Barack Obama when he was president, not by Donald Trump.
Thank you, Mr. President. You had a peace proposal that you put on the table. It's a 30-day ceasefire proposal. Your national security team presented it to both Ukraine and Russia. 2 months ago, Ukraine agreed to that ceasefire proposal. Immediately, Russia has not. And my question is Russia the obstacle to peace based upon that, just getting to that 30-day ceasefire?
I don't think so. I think that they both want peace right now. They're ready to do something. We'll see what happens. Complicated, very complicated. But I think they are both very much looking to make a deal. Marco, what would you say?
Well, first of all, what was put before our partners was options to discuss about things that it would take to end a war. This war is endable. Both sides just have to agree to it. We've shown them a pathway forward. We've discussed those ideas. It was a good meeting yesterday. There'll be good meetings over the weekend. We've shown them the finish line. We need both of them to say yes. But what happened last night with those missile strikes should remind everybody of why this war needs to end. It's horrible those missiles landed. What's even worse is there are today people that were alive yesterday that are not alive today because this war continues, and the president wants to stop it. And everyone should be thanking the president for being a peacemaker and trying to save lives. That's what we're trying to do here. It's not our war. We didn't start it, as you know. But we're trying to end the dying. We're trying to end the destruction. And we've shown the path forward. We can see the finish line, but both of them have to get there. We're going to do everything we can to help them get there, but they have to ultimately say yes.
And we are using a lot of pressure on both. You know, if you think we're just in there because we're nice people, and we are nice people, but we're using a lot of pressure on both.
What concessions, Mr. President, and to your national security team, what concessions has Russia offered up thus far to get to the point where you're closer to peace?
Stopping the war, stopping taking the whole country. Pretty big concession.
Mr. President, if you are going to take down the tariffs, what do you want Norway to buy more from the U.S.?
To buy more? Well, you don't need snow. You don't need skis. You don't need ski champions either, right? You have a lot of them. We just want to keep the relationship the way it is. We've had a great relationship. I think now maybe closer than ever, but we've had a great relationship with Norway. I think just keep it the way it is, kid. You can't do better.
Really? Not even by, say,
Well, if they want to give us some additional concessions, that's okay. You can't do much better. Yes, yes.
Mr. President, you had a long meeting with Norway today. You said that Norway is doing a lot of things right, but on the Ukraine, if I can ask both you and the Prime Minister, did you find common ground today on Ukraine and the peace plan?
Totally. It's totally common ground. The Prime Minister can speak about it, but I can just say he wants to see people stop dying more than anything else, and he'd like to see it end. He's going to help us end it.
Mr. President, can I say that to move towards an end of this war, U.S. engagement is critical, and President Trump made that possible. That is clear. That is obvious. It's really happening. Now, the important thing is that both parties have to know that they have to deliver, and they have to feel the pressure to deliver. Ukraine is under attack. They are defending themselves. Lives are being lost. And we believe very firmly that there needs to be a ceasefire, the initiative taken by the U.S. Some time ago. It needs to be respected. And then to move on to something which both parties can own. That is the complicated part in such a dramatic war. And here I believe Europeans and Americans working together, as we do much closer now. I salute the team of President Trump of being, open in that process. We had a good discussion on this today, and then we have to move on, and we cannot lose time because this is too much drama happening. One thing is people losing their lives, but it is a bad thing for Europe, and it's a bad thing for the world to having such a broad conflict going on. It can have ramifications far beyond Ukraine.
Mr. President, Mr. President, I forgot my question. I wanted to ask about sorry.
That happens.
It happens sometimes, yeah. No, Mr. President, I wanted to ask about the. Zelensky has said that he wants more Patriot missiles. So far, has been no response from the United States. If you and the United States decides to pull out of negotiating for peace, trying to broker peace, does that also mean a no on patriot missiles, a no on sharing intelligence with Ukraine?
Let's see what happens. I think we're going to make a deal. And if we make a deal, that'll be wonderful. We won't have to worry about your question. You can ask that question in 2 weeks, and we'll see. But I think we're getting very close. The Prime Minister feels the same way, and we'll hopefully not have to answer that question.
Mr. President,
Norway is the third country to be officially invited to the White House after Liberation Day. Why did you invite Norway so soon to the White House?
Because I like them. And I like your Prime Minister, and I like the way your government runs, and I respect the King. He's highly respected in Norway. It's a great thing. Not an easy thing to do. He's done a great job. Yeah.
Would you like an invitation to visit the King?
Absolutely. You get me that invitation.
I just told the President he's welcome to visit Norway.
President Trump, where's my card for the letter? You said before that you like the Norwegian Petroleum Fund, and I'm wondering if that has been up for discussion today, the way that we have structured our money and whether.
Well, this fund was created in the late 1990s to save for future generations the income from oil and gas. Norwegians should continue to work as hard, dedicated, innovate, and move forward, despite having these incomes, which we happen to be in the period of our history where we can harvest, and we have transferred that into investments, half of them, by the way, here in the United States. So I think this is a model which we have been able to explore. If we can share experiences, and we do with our colleagues in the US, you never copy this one-to-one, but there can be techniques and way of working that we have used in organizing our fund. Jens Stoltenberg was the finance minister when the first dollar entered that fund, so he's a safe hand to have as a finance minister today. What do you say?
No, and as you said, Mr. Prime Minister, we are ready to sit down with the U.S. To also work with them on if they want to establish a sovereign wealth fund, because we have a good experience with our fund. And I think that one example of how we work together with the United States is that half of the fund, close to $1 trillion are invested in the United States, mainly in equity, but also some in fixed income, including government bonds. So this is an expression of trust in the United States, expressed by the strong investment of the Sovereign Wealth Fund. Then just briefly on Ukraine, since it was mentioned, we had a very good and extensive discussion about Ukraine, the path forward to peace. And as the Prime Minister said, we commend the US for pushing forward to try to find a negotiated solution. At the same time, we need to continue to support Ukraine, and therefore I'm proud that Norway has actually tripled the military support to Ukraine. And this year we will allocate close to $8 billion to Ukraine. That will strengthen them and also their hand on the negotiating table.
I may add to that, if there's a peace, and there will be a peace, we have a common responsibility in securing democratic Ukraine for the future. And the best security guarantee they can have is the ability to defend themselves. And we are investing in that.
Mr. Prime Minister,
Mr. President, as it relates to tariffs, Mr. President, when you unveiled your reciprocal tariffs on April the 2nd, the tariff rate for Norway was 15%. Based upon your conversations that you've had today with the Prime Minister, do you see that tariff rate coming down from what you proposed just a few weeks ago?
Well, they have a great fund of $2 trillion. It's a big fund, and they don't have any debt. So I think they'd probably be willing to pay us more than that, I hope.
Mr. President,
yes.
in 2018, your former Secretary of State Mike Pompeo called for an end to Russian occupation of Crimea. Why has this administration changed its stance on territorial concessions for Crimea?
Well, the war started. It would have never started if I were president. This is a war that is horrible. All wars are horrible. This one is in particular bad. And I don't know that you can ever say there's going to be a winner to this, because so many lives have been lost. Not only soldiers, a lot of lives have been lost. I think that we want to do one very simple thing. It would have never happened if I were president. Zero chance it was going to, and it didn't. You know, people say, how do you know that? Number one, it didn't happen. We never even discussed it. I would talk to Putin about it. It was the apple of his eye. You know, Ukraine was the apple of Putin's eye, but there was never even a thought that he'd go in. And I think he understood that I would not be happy if he did. And it was only when I got out, and you know, when you mention what happened to Ukraine years ago under President Obama and a vice president that was also president later, unfortunately for this country, what happened is large chunks of land were given up, and it was called Crimea, and that was a big thing. That was a big moment. But this isn't my war. This is Biden's war. This is a war that Biden was president when this war happened. But I'm trying to put out the fire, and I think we'll be successful. And if we do, we're going to save a lot of lives. Otherwise, and the Prime Minister had a statement. He said, this is just a point in time. We're very lucky because this is a point. And if this doesn't happen, this could go on for a long time.
Mr. President, will you have meetings with other world leaders when you're in Rome, sir?
Future Democrat president?
I don't think he will. I think he wants to make peace. I think he wants to end it. And I feel pretty confident of that. But we're gonna know pretty soon.
Mr. President, will you have meetings with other world leaders when you're in Rome?
Yes, I will.
Which leaders do you want to meet, sir?
Well, I'd like to meet them all. That would be nice. I'd like to take care of all of them. But we have many of them there, and they all want to meet. And they want to meet about trade. And we are making some great inroads and great deals. You might want to speak about that, Mr. Secretary.
We had a very successful bilateral meeting with the Republic of South Korea today. We may be moving faster than I thought, and we will be talking technical terms as early as next week as we reach an agreement on understanding as soon as next week. So South Koreans came early. They came with their A game, and we will see if they follow through on that.
President Trump,
you deserve the Nobel Peace Prize if you manage to create it.
Do I deserve the Nobel?
If you manage to create it.
Well, maybe for the Abraham Accords. I don't want to get ahead of myself in this one, but they say for the Abraham Accords. And by the way, speaking of that, we're going to be filling it up. A lot of countries want to come into the Abraham Accords. You know, we have 4. And Biden did nothing on that one, too. It's the same 4. But they're great countries, and they were brave doing it, and it's worked out very well. And we're going to be filling up the Abraham Accords. They're going to be, I think, filling it up very rapidly.
Mr. President,
could you say something about that?
There's great, enormous opportunity to grow the Abraham Accords. But I would just point to one thing. Of all the leaders in the world today, no leader is working harder to prevent wars or end them than President Trump is right now. That's why we're talking to Iran. That's why we're engaged with Ukraine and Russia. It's the desire to prevent these wars from breaking out and to end the ones that exist already. And again, I just think it's tremendous for our country to be led by a president who desires to bring peace and establish peace and protect peace. So it's hard work.
Mr. President, you know, Marco just mentioned something that maybe we should talk about for just a second, if we could, Mr. Prime Minister. And you're involved in it, too, because you've been involved in the world and peace. But I think we're doing very well with respect to Iran, and we're having very serious meetings. And there are only 2 options, and the one option is not a good option. It's not a good option at all. And I think we're doing very well on an agreement with Iran, but that one, we're doing a lot of things, I will say, but that one is well on its way. We could have a very, very good decision, and a lot of lives will be saved.
Mr. President, on the economy, there was a slowdown. Mr. President, on the economy, there was a slowdown as it relates to home sales in the month of March, the slowest pace since 2009. Is that an economic indicator, and perhaps the Treasury Secretary can weigh in on this as well, is that an economic indicator that concerns you about the broader U.S. economy?
No, they had very good numbers on housing today, extremely good numbers, and that's despite interest rates, because, you know, if you look at what happened, everyone said, oh, I said I was going to get prices down. I did. Energy just hit $1.98 in a couple of states. It's way down. Energy's down, and we're about $64 a barrel.
when I came in, and we were looking at $89, $90, $95. And by the way, that helps us solve the war too. Having those energy prices is a big incentive for Russia to also agree with solving the war problem. Groceries are down. When I was with you 2 months ago, you were complaining about eggs. I said, I just got here. I was here for about a week when the press started saying about eggs have gone through the roof. I said, I just got here. Tell me about eggs. And they have been. They went through the roof and you couldn't get them. So we just had a big Easter egg hunt at the White House. Thousands and thousands of eggs. And the price was down 87%. So we did a great job. Housing is doing very well. We should lower interest rates. That's the Fed. I hope they lower interest rates. That's a smart thing to do. Be ahead a little bit, although already it's a little bit late. But in the end, we just have a great country. We have a very strong country, and we have every other country. I can't think of one country that doesn't want to negotiate a deal. And they either negotiate a deal or we set a deal that we think is fair. Because we don't have to go through all of these. It would be physically impossible. You know, you have so many people that really understand it, which is a very small group of people here. And we are going to, at some point, just set prices for deals. Some will be tariffed. Some treated us very unfairly. They'll be tariffed higher than others. But we've been ripped off for many, many years. The United States has been ripped off like no country probably in the history of the world has been ripped off for 45, 50 years. And countries have gone rich by doing that with the United States. We've taken care of their militaries, and military is another subject we talk about. We're not going to make that subject to any of the deals, but you know the same countries that I do, where we virtually take care of their military, and then don't get treated fairly on trade. So the people, and I don't blame those countries, I blame the people that sat at that beautiful desk right behind you, because those people didn't do the job for this country, and they let us lose $4 billion a day on trade. We were losing $4 or $5 billion a day on trade when I got here, and now we're going to be much better than breaking even, and we're going to be making $4 or $5 billion a day on trade. So, but I don't blame any country, not the worst of them. And we were abused by countries. I blame the President of the United States that happened to be sitting when these deals were made. Disgraceful. When I was here, we had a great 4 years. We had the most successful economy in the history of our country, my first term. And we were very tough on trade. And with China, as you know, they paid hundreds of billions of dollars in tariffs. But nobody else ever did that. China paid not 10 cents to any other president. And but not only China, virtually every country got away with murder. And we just can't let that happen. Thank you very much, everybody. Thank you very much. Appreciate it. Thank you very much.
All right, everybody. You have been listening to President Trump in the Oval Office there with the Prime Minister of Norway, Jonas Gahr. They had a bilateral lunch, the two of them, and then, of course, taking questions from reporters in the room on a range of subjects. Good afternoon, everyone. This is Bloomberg Business Week Daily. Carol Master, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. A lot of the questions initially had to do with Russia and Ukraine.
Yeah, that was certainly the focus. He said, the president, he said, we're putting a lot of pressure on Russia. He was asked about Russia sanctions. He said, stay tuned, I will answer in a week. The president asked about additional Russia sanctions. He said things will happen, and he thinks Russia will accept a deal that Ukraine and Europe like.
Should also point out they talked a little bit about a sovereign wealth fund, which, of course, Norway has. And the president talked about meeting leaders in Rome, where he will be there for, of course, the funeral of the Pope. So maybe some conversations coming out. He also did talk a little bit about the Fed and saying that he hopes that the U.S. central bank lowers interest rates, and he reiterates his criticism that the Fed is late. So again, some of the major issues that are certainly top of mind for investors. But again, it does feel like we went back to geopolitics in a big way on this Thursday. All right, so let's talk about that, and let's start there. We have a great guest, someone we turn to often when it comes to some of the big issues that are facing global relationships. Back with us is Ed Price. He's a former British trade official. He's now non-resident senior fellow at New York University. He's advised members of the European and British parliaments. He's a former British trade official, and he writes often about politics, economic policy, and so so much more. And he joins us now from upstate New York. Ed, good to have you here. How are you?
I'm well, Carol. Thanks again for having me. How are you?
Doing well, trying to keep up, and certainly taking our cues out of the White House, and specifically just moments ago from the Oval Office. Let's start with, I think, what is top of mind and what seemed to be top of mind for the discussion between the Prime Minister of Norway and President Trump just moments ago, and that is Russia-Ukraine. U.S. is expected to demand that Russia accept Ukraine's right to have its own army, defense industry as part of a peace agreement between Moscow and Kiev. How do you see these developments and where it might be going, and what might bring this to an end, if any time soon?
Sure. So I'm very puzzled about the situation in Ukraine, honestly, because it seems to me from the outside that Putin has been slowly losing this war, and slowly losing this war, at least against his initial ambitions, which, as we know, included the seizure of all of Ukraine and the installation of a puppet government. And so if you go away and read about this, ask people that are better informed than I, maybe who travel more frequently over there, they'll tell you that Putin is doing pretty poorly and that the Russian economy is not in the sort of place that could continue this war for long. And so when I see President Trump announce that he's going to come up with a deal, I don't understand why he doesn't push forward with more weapons and more supplies to Ukraine in order to push that deal forward, whatever it is. So it's very confusing because on the one hand, Trump seems to offer carrots to Putin, carrots that Putin hasn't asked for, while withdrawing the stick. I haven't actually read the art of the deal. That might be how you're supposed to do it, but I'm not sure.
Well, Ed, it does, to be fair to the president, something that he has been consistent about is the disdain that he has for the loss of life. And it's something that he mentioned several times today, talking about the thousands of young people who continue to die in Ukraine each and every week as a result of this war. Could it be, in your view, that he just wants to end the fighting?
He may want to end the fighting, but I'm not sure that the same man who threatens Greenland, Panama, and Canada with possible military action truly cares about the loss of lives. I would put that down to a nice talking point that he does well to repeat because it's a powerful one. And I should be careful myself as an analyst not to enjoy or celebrate wars. And we talk about this one in Ukraine very often. It is indeed tragic. Now, that might be cynicism. I don't look at President Trump at his entire policy agenda, his entire foreign policy agenda, and think this is someone who cares about lives. Need I remind the people watching or listening to this live stream that we've also been sending people without due process to El Salvador. So I would certainly take President Trump's concern for human rights or the loss of life with a pinch of salt.
The other thing is that the president has certainly talked a lot about, and to be fair, it's in maybe his quest and his mission to make sure that the U.S. has what it needs for national security. And I think it's safe to say that a lot of nations are thinking about this at this point. He talked about Greenland, important for international peace. You've been traveling, Ed. You've been not necessarily to Greenland anytime soon, but you have been to Panama. You've been to Canada. I am curious what you've been hearing, seeing when it comes to maybe a new global order.
Well, if there's a Bloomberg challenge for me to go to Greenland, I accept.
We'll work on that.
And I'll report back. We'll work on it. Canada and Panama are in the same mood. And when an American citizen turns up and says, look, what do you think? The answer is not much. Both of those countries are very upset with the idea that the United States, the apparent champion of liberty in its 249-year history, would be threatening the annexation of allies. It's completely bizarre. And it's also something that I think is causing quite a lot of stress. Now, the Canadians and the people in Panama were very polite to me. That might be because they were misled by my accent, and they thought I was British. But as soon as I said, look, I'm actually American, in a hotel lobby or even at the checkpoint, there were raised eyebrows. So we always talk about whether Trump is serious in his foreign policy script. I don't know if he is or not. I think he is, but other people abroad do.
Do you think there's a legitimate argument for the United States to want to annex Greenland?
No, I think it's completely...
From a security perspective, Ed?
No, it's completely insane. Because whatever the gain in annexing Greenland, there would be a loss in the EU as an ally. And you could never fully sit down with the eyes and ears of God and calculate what that net calculation would be. But I'm pretty sure you could take a rough estimate and say, okay, we expand our presence in Greenland, we formally change the deed, we say we own it, and we put a few more troops in there. Just imagine how annoyed and disgusted Denmark, France, and other EU countries would be with us. I mean, they could turn around and say, well, look, if the United States is actually willing to cross frontiers and take land that doesn't belong to them, maybe a deal with Beijing, which, to be fair to the Chinese, you know, they haven't actually done that. Maybe a deal with China is in our interests long term. So I think there's absolutely no argument for it when you sit down and do the net calculation. If you have a simple view of the world and you think this is mine, that's theirs, then you, of course, like we said before, you can draw a Sharpie around an area and say it's mine. But I don't think that that's taking into account the second order effect of losing the Europeans.
Well, just a reminder of what the president said last month in an address to Congress, quote, "We need Greenland for national security and even international security, and we're working with everybody involved to try to get it one way or the other. We're going to get it."
You know, one of the things I think about, Ed, too, as we are watching kind of the back and forth between world leaders, I guess what I'm most obsessed with is U.S. and China, just because they are the two big economies and determine and control, I think it's safe to say, so much. Having said that, what is, you know, the strategic balance, as China is not the China it was 5 years ago or 10 years ago that maybe needed an assist, or 20 years ago, right, when so many different global companies set up shop there. We've been talking a lot about the EV market and BYD and the advancements that China has made technologically in this world. And they have done this largely by supporting so many of their industries and helping them develop. So I do wonder, we had the Whirlpool CEO on yesterday who manufactures about 80% here in the United States, 80% of their supply chain is here, and is somewhat, I would say, safe to say, supportive of some of the tariff pushback to help him develop his domestic sales.
He's already got the domestic production, so he's in a good position.
He's in a good position. So what is, like, as you talk to world leaders, as you travel, you know, some of the argument many would say that Trump has makes some sense in terms of developing some industries here, protecting our national security. What is the balance for any nation, U.S., China, or the Europe region, to have that and yet kind of get along on a global basis, which is necessary for things like climate change, the environment, and so much more?
Well, let's go through the exercise, Carol, and let's be fair to President Trump. I think that he deserves an A+ on his report card for identifying global problems. This is the man that's identified that the Bretton Woods trade imbalance, that is that other countries have a higher tariff rate than the US, he's the man that identified that that's out of date, and he joined the dots between that and an unsustainable fiscal position in the United States. He's also right, to be fair to the president, to point out that great power politics and great power behavior is a feature, not a bug, of history, and that the United States should be ready at some point in the 21st century for conflict. So the president, from, you know, some analyst like me, gets an A+ on identifying the problems. Where we run into trouble is the execution and the suggestion that Donald Trump alone, in his sort of chaotic ad hoc behavior, is helpfully moving the United States, its allies, and the world back into a new, more helpful equilibrium. So I don't think that that's what he's doing. Yes, the United States cannot continue to borrow the way it's borrowing and subsidize the world's security, but the way to fix that is to keep our allies closer, is to do trade deals with the people that like us and maybe even reduce tariffs with them. So he has to get, what, a D? A D-? You know, I don't want to fail the guy outright because he's the president of the United States and his success is everybody's success.
Right.
But this chaotic approach to things is not going to bring the world into, so far as I can see, any new equilibrium, despite what Scott Bessent and Marco Rubio tried to do after Trump has spoken, which is turn up in the press and say, actually, this is what he really meant.
Yeah, it's why folks like David Brooks of the New York Times has said, you know, the president is maybe the wrong answer to the right question, because I think many would say, whether it's tariffs or geopolitics or positions in the world, that he's brought up a lot of issues that need to be dealt with and discussed. Ed, we apologize. Things have gotten a little hectic today, and obviously we had to listen to President Trump there at the White House, but we hope we can get you back real soon. Really appreciate you weighing in. Ed Price, always timely, senior fellow at NYU, non-resident senior fellow, former British trade official, joining us once again here on Bloomberg.
Well, stocks still higher, just close to their session highs. Charlie Pellet has had a close eye on everything happening when it comes to business news in the markets. Let's get a business flash from him. Hey there, Charlie.
Hi, thank you very much, Tim. Here's what's going on. We've got the Dow Jones Industrial Average retaking 40,000. Going to be very interesting to see whether we close above or below that big round number today. 40,040 right now on the Dow. And of course, earnings coming up after the close of trading today, both from Alphabet and Intel. Complete coverage on Bloomberg television and radio when those numbers drop right after the closing bell. S&P up 101 now, up 1.9%. NASDAQ up 426, up 2.5%. The 10-year yield 4.31%. The 2-year 3.79%. Gold up 1.5%. 33.36 now on the precious metal, and crude up 0.8%, 62.77 a barrel. Recapping, S&P up by 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week Daily. Well, the Commodity Futures Trading Commission is asking for public comment on allowing round-the-clock trading in derivatives markets. This is according to a statement put out earlier this week. The CFTC also wants input on offering perpetual futures. It's a type of contract that's popular outside the United States and gaining some traction in digital asset trading. So we want to talk about that. We want to talk about the overall massive derivatives market. Delighted to have with us in our Bloomberg News DC Bureau is Acting Chair of the CFTC, Caroline Pham. Chair Pham, so nice to have you with Tim and myself. Let's talk a little bit about the market volatility that we have seen over the last month or so. What have you seen in the derivatives market amid that volatility, trends, flows, oversized bets? What can you tell us?
Sure, of course. So one of the things that is really important to remember about the recent market volatility and all-time highs as far as volume goes is that the markets operated in a functional and liquid manner. So we were really pleased. Of course, all regulators were concerned about the market conditions. You had the very sharp spikes with the volatility. You had the record all-time flows of volume, but the markets were resilient. There were adequate margin levels. A lot of people have thought about what happened in March 2020 with the dash for cash. And we wanted to make sure that that wouldn't happen again. So you saw the global regulatory community come together with some margin reform, and we're pleased to see that that all worked as planned, and there were no significant operational issues. So I think relieved to see that the markets performed well throughout that volatility.
No significant operational issues. That's certainly great news. Was anything close? Were there any issues of concern for you?
No, we were in close contact with all market infrastructures and market participants throughout the market stress and market conditions, and we had no significant issues, no issues of concern whatsoever.
Is there anything you are seeing or hearing? This is certainly your world. I guess we're trying to gauge whether or not foreign investors are pulling back on U.S. assets and dollar-based assets. And I'm just curious in any of the trend flows, or again, this is your world, and as you talk to officials here in the United States when it comes to trading and investing, are you hearing or seeing any of that?
Look, I think it's very tempting to chase the charts and to be very focused on sort of the, minute-to-minute, day-to-day, spikes, but that's just all part of market functioning. And I think what you're going to see, as it has been for decades, that the U.S. is the world's reserve currency, that U.S. Treasuries are a safe haven, and in fact, the global financial system runs on U.S. Treasuries. So I'm confident that that will continue to be the case.
Are you not concerned that the U.S. is losing its status as a safe haven? Look what we saw with treasuries. Look what we've seen with the dollar in recent weeks. Is that something that's concerning to you?
Again, I think it's important not to chase the charts and be focused on the minute-to-minute or the day-to-day. But if you look overall, U.S. markets have never been safer, sounder, or healthier.
All right, so one of the things we want to talk about, and we certainly set it up in our introduction to you, is about this 24/7 trading and the CFTC putting out requests for comment on potential uses and risks to allow for 24/7 trading in the derivatives market. I know you just made the outreach, but any comments? What are you hearing, and kind of what is top of mind when you think about uses as well as risks?
So I'm pleased to talk about this issue because it's something that we've been seeing in our markets for the past several years, but until recently we did not have an administration and a policy that was pro-innovation and pro-growth, both in new products as well as in new markets. So again, the debate around 24/7 trading and extended trading hours or continuous trading hours has been very active for the past several years, but now we're finally moving from talk to action. We've had a number of exchanges in our markets show their interest and announce that they are looking at moving to 24/7 trading or 24/6 trading or 24/5 trading. And while that presents a lot of opportunities and there's a lot of benefits, particularly when you have an asset class that is liquid enough to support continuous trading or extended trading hours, we also have to make sure that we are prepared, again, from an operational perspective, because, you know, as we discussed with the recent market volatility, it's absolutely incumbent upon us as regulators to make sure that the markets are functioning well. So that's what this request for comment is. It's a thoughtful set of questions that seeks to understand the uses, benefits, and also risks of extended trading hours or continuous trading hours. I'm really looking forward to the comments. Again, this is an area that's been very well debated for several years. I don't think we're going to see any surprises. And the CFTC has always been at the forefront of market innovation. You know, we saw this with the creation of financial commodities and derivatives based on interest rates, indices, and then again with all of the new and interesting asset classes, including crypto.
Do you think it's a good idea? Do you think 24/7 trading of these products is a good idea?
I think 24/7 trading is appropriate, but only when there is enough liquidity. So look at the FX market. The FX market is already trading on a continuous basis. There's no closing hours for the FX market. What we've seen in some of these announcements is that people are focused on the crypto asset class right now. That's also one that trades continuously today. So it doesn't change anything about the current market structure, just only that it's now happening in a regulated way with our futures products. So I think that's going to be very key. But again, we want to make sure we are thinking through all the possible issues, and we want to make sure we're doing so in an open and transparent way with lots of public engagement and public comment.
How do you ensure, Chair Pham, that what could be a lack of liquidity during the off hours, potentially, if it's 24/7 trading, that leads to maybe some severe disconnects in the derivatives market? So I'm just curious, how do you make sure that doesn't happen?
That's exactly the key point, because that's why it's so important to make sure there is sufficient liquidity. When you have something that already trades continuously, like FX or like crypto, it's less of a concern, but we are looking at everything from a very product-specific perspective. We're looking at each individual product, what asset class it's based on. But obviously, you would have concerns when you're looking at something that doesn't trade continuously today, something like ag futures, for example. That is something that we would be extremely cautious about before we move to anything like this type of innovation.
So it wouldn't be like across the board. There's very possible that there are carve-outs, right, depending on the market?
So this is, again, on a product-by-product basis.
Okay.
So we've had some exchanges that have self-certified or have showed an interest to trade certain products, and these are all, at this point in time, based on the crypto asset class on a 24/7 basis or 24/6 or 24/5. Some of this is future plans, so it's not actually live before the commission, but again, it's something where we're looking at very specifically on that product basis. It's not going to be where, all of a sudden it's a free-for-all in the market.
You mentioned crypto, so let's go there. How is the CFTC going to work with the SEC? Of course, Paul Atkins was sworn in as chair this week. When it comes to cryptocurrency, what's the plan?
I think what is great about this current administration is the clear vision that was expressed in the president's executive order on digital assets, the creation of the president's working group on digital asset markets, and the open and continuous communication we have with all of the relevant stakeholders, including all the regulators. I've known Chairman Atkins for a long time. I'm really looking forward to working with the SEC under his leadership, and this really resets the CFTC and the SEC back to how it's always traditionally been between the two of us, where we work together on any issues of jurisdictional lines, and that's something that's gone all the way back to at least the 80s, and it's something that I look forward to continuing as we move forward through creating more regulatory clarity in the United States for crypto.
Hey, one thing we got to ask you, Doge, it's gone to the SEC. Has it gone to the FTC?
There is no Doge at the CFTC at this time, but that doesn't mean that we haven't been doing our own efforts to make sure that we're making the most return for the American taxpayer and that they're getting value out of their dollar. So my efficiency initiatives at the CFTC have already resulted in $18 million in savings. That's about 5% of our appropriated budget, about 12% of our non-payroll budget, and I'm pleased to say that this year it looks like on an annualized basis, we'll be on track to save $50 million, and our budget is only $365.
What are you cutting?
We have some contracts that are excessive. We have had contracts where I think, just applying basic cost management principles, people didn't stop to think, do we really need 5 of the exact same contract for the exact same IT service? So it is really just common sense, reviewing our contracts, making sure that we are only paying for what we actually use and what we actually need.
Is sometime like a redundancy in a contract because to make sure that there's a backup program, or that wasn't the case?
No, that's not the case. Let me give you an example. $1.4 million on a focus group for consumer fraud. We all know that consumer fraud is bad. That is money that could be better put towards upgrading our technology, for example.
Hey, before we let you go, I just wanted to ask another crypto question. We learned yesterday that the president is set to have dinner with the top 220 holders of the Trump meme coin. The issuers of the cryptocurrency announced yesterday. We saw this on social. I'm curious, just as a regulator, how you look at the relationship that the president has with this digital asset and as a person who is in charge of essentially creating policy on this stuff.
Our job is to make sure that we have markets that are safe and that are sound, and that we preserve market integrity, and that we make sure that, most of all, in looking at market integrity, that the markets are well functioning and that there is an actual connection to the fundamentals that are underlying the market. So for us, that is, of course, across the entire market. There's no distinction for anything else.
Does it make your job more difficult?
My job is difficult every day. It doesn't make any difference.
All right, we're going to leave it there. Listen, thank you so much. Really appreciate your time. We've been talking with Caroline Pham. She's the acting chair of the Commodity Futures Trading Commission, joining us from the News Bureau of Washington, D.C. for Bloomberg News. Hey, do you want to mention a headline also that just crossed the Bloomberg exclusive? Harvard University's endowment is in advanced talks to sell around $1 billion worth of private equity fund stakes to Lexington Partners. Sale happening amid financial uncertainty and pressure from President Trump's threats, as well as a sluggish market for return on illiquid assets. So keep in mind, the endowment had allocated almost 40% of its $53 billion to private equity, and the sale effort began before the president's latest announcement. So again, more details, just head to Bloomberg.com or check it out on the Bloomberg terminal.
All right, I'm keeping an eye on the markets, and we're continuing to see stocks move higher. Charlie Pellet has been watching close, so let's get an update from Charlie. Hey there, Charlie.
Thank you very much indeed. Higher across the board with the Dow, the S&P, NASDAQ, all advancing. Do want to begin, though, with a developing story. Another headline right off the Bloomberg Professional Service. Keeping an eye on shares of Guess, GES on the ticker, surging now by 15.6%. Authentic Brands said to be weighing a rival bid for Guess. Guess shares popping higher now by 15.6%. The Dow, the S&P, and NASDAQ all surging right now. Best level of the day with the Dow retaking 40,000. Big round number up 463, up 1.2%. S&P up 103 now at 54.79, up 1.9%. Gaining for a third day, we've got NASDAQ up 431. Broad-based tech rally here, up 2.6%. The NASDAQ 100 index up 2.6%. After the bell, we hear from both Alphabet and also Intel. Right now, the 10-year yielding 4.30% with the 2-year 3.79%. Spot gold trading higher by $47 the ounce, $33.35, up 1.4%. And West Texas Intermediate crude up 0.7% at 62.72 a barrel on WTI. On a day when risk assets are advancing, Bitcoin is lower, down 0.4%, 93,320 now on Bitcoin. Bristol-Myers Squibb is raising its sales and profit forecast for the year due to better-than-expected sales of older drugs and a favorable impact from the weaker dollar. Shares of Bristol-Myers Squibb, they are trading unchanged right now, $48.53. And Merck says it expects to lose $200 million to already announced tariffs in 2025. Merck up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, we've been watching some of the airlines. I feel like we've been watching them for a few weeks at this point, but we did have American come out withdrawing its full-year earnings outlook, joining a growing number of companies that say unease about the U.S. economy is making it difficult to forecast how the year will play out. You also had Alaska Air saying second quarter earnings will come in below Wall Street estimates, and then Southwest Air reining in growth this year as volatility surrounding U.S. trade policy is chilling out consumer demand on air travel. I'm just hoping fares come down, but we are watching this sector. We've got a great voice to talk about it.
Yeah, it's great to have back with us someone who knows the industry so well. Sheila Kayalu is here. She's Managing Director in Equity Research at Jefferies. She joins us here in the studio. How bad is it for airlines right now?
It seems like it's stabilizing. It was pretty bad a month ago, and
that was when we heard from Delta withdrawing.
Yes, Delta withdrawing. We downgraded the sector to half sell ratings and underperform ratings, but that news is sort of priced in. That's why you're seeing American and Southwest kind of tread water today, because we've seen this tape before with domestic leisure really being the soft spot. Off-peak hours, Tuesday, Wednesday flying, really not getting passenger demand. Southwest putting up 73% load factors. That means the plane is about 3/4 full. Should be 82 to 85% full. So we've seen that. That's where the demand
American
environment
is up more than 3%. I was kind of shocked when I went to look at what the price was. I thought, okay, it's going to be selling off. But you're saying most of that stuff is
it's
the
starting
bad
to
stuff
get
is
priced in because we've heard it now for a month, and it seems like the consumer's able to hold stable. But we also have a pause on tariffs, so let's see how that works itself out. We heard from Boeing this week. We heard from General Electric and Raytheon. These are aftermarket suppliers on engines, et cetera. And so what they're doing is they're cutting their departure forecast from mid-single digit to low single digit. That means the numbers of planes that are taking off. But that's based on what's already happened with Delta and United cutting capacity, and even Southwest cutting mildly. And they're not really seeing further weakness internationally. That's what we're hearing, that the market's holding stable over the last 6 to 8 weeks from the fall off we saw starting March 1st. So
how's business travel?
Corporate travel seems like it's okay, but it depends on the sector and the airline. You know, Southwest was a little bit more robust. American has a very idiosyncratic story because they removed their corporate booking channels last year, so they have a super easy comp. United and Delta called out weakness, obviously, across government customers and certain manufacturing markets like autos and even aerospace where they saw softness, but financials, tech was still holding up. So we'll see.
Not a great reveal, but we've got like 2, 3, 4 trips going out to the West Coast in like the next month or so.
Yeah, and we've booked 0 tickets at this point. So
that's
keep it on the to-do list.
I have one booked. So what are the airlines doing in terms of pricing? I know somebody else who was looking for a flight and saying, well, wait, I heard there's some softness and it was so expensive, I think, to go to Puerto Rico or something. Like, what are we hearing in terms of pricing?
Well, I haven't checked out Puerto Rico flights. I wish I would, but I'm headed to Brazil and Paris and a Dallas trip coming up, and none of them are booked yet. You know, folks post-pandemic are booking closer in, and so you don't have flights booked, neither do I. We haven't seen that price. I haven't seen the pricing softness.
No,
but the airlines are calling it out, especially in that domestic leisure market. So if we were going to Florida in May, we'd probably get a discounted ticket. Or, you know, Southwest called out that route from Tucson to Albany. I'd like to know the guy doing that route, but that's where they're seeing that weakness. So.
We love you in Tucson and Albany, though. We're just going to say that.
Yeah.
But yeah, different.
I do wonder about just really what's happening when you think about demand from the perspective of international travel. You said that it's kind of holding up, but at the same time, we're hearing reports that travelers coming to the U.S. from outside of the U.S. are holding off, and we're seeing that fall a little bit. Is that showing up yet in results or in bookings, especially for the summer?
It seemed like, for now, international still holding up, especially with Europe, strength there. We heard some rumblings about Canadian weakness. Folks have sort of put an end to that, saying it's only down 10%, not the significant numbers we've seen. So
10% is something.
It's significant, but we were seeing numbers in the realm of 70%, so the 10% definitely scaled it back. So Canada is an area we've heard weakness. We saw some European airlines call out weakness coming into the U.S. versus U.S.-originated flights to Europe are still holding out pretty well, which is interesting.
Yeah, I'm kind of surprised because I do feel like there's some headlines on stories that are like, oh my God, nobody's coming in, traveling to the U.S. and or even traveling elsewhere. Can we talk a little bit about Boeing?
Sure.
Tell me your thinking. You cover the company. They reported first quarter results, exceeded Wall Street estimates. They've done a deal, right, getting rid of their flight navigation unit. How are you thinking about next 6-12 months for Boeing, or even longer term?
I love Boeing when folks get negative. So the days when it hits 140, when we hear about people canceling airplanes or thoughts of that. But, Kelly Ortberg yesterday, the Boeing CEO, said there's no change in the skyline. Folks are waiting 6 years for their aircraft. They've been waiting since 2019.
Right.
Southwest is still waiting. We're all waiting for airplanes to be delivered. No one's moving out of line. The only customer who is China.
But they've been reducing for a while.
China's been reducing. They've been about 20% of deliveries. They're actually only 5 to 7% of the official backlog, but Chinese operators use undisclosed. So yesterday we know that it's about 15% of deliveries this year. In the first quarter, Boeing delivered 18 aircraft to China.
Right.
They expect another 50 for the full year, and our estimates are around 475. So China's a risk, and probably why Boeing didn't sound a little bit more bullish, but they seem like things are working well with the ramp on the 37 and all the rest of the skyline.
The president sending a message on his social media platform this morning about Boeing saying, quote, Boeing should default China for not taking the beautifully finished planes that China committed to purchase. This is just a small example of what China has done to the USA for years. The Washington involvement with Boeing, for better or for worse, I mean, there's been a lot of criticism, too, coming from the president about the new version of Air Force One, the 747. Can't Boeing just sell those planes to other countries because there is such a backlog if China were to dry up?
I think there was a headline about an hour ago saying Air India might buy those Chinese planes. So here's a note we put out 3 weeks ago. It was called, How Many Planes Does It Take to Get to the Bottom of the Trade Deficit? When you think about aerospace and defense, it is the only manufacturing sector with a $62 billion surplus. So what can you buy if you have a trade deficit that costs $70 million or $400 million? An airplane. It's easily trackable. So we did a note where we looked at every 1 point of reduction to the Chinese-U.S. deficit, which is $295 billion, is about 50 planes. So obviously, it would take a lot of planes from China to offset it, but it's a good chip President Trump could put on the table for folks.
All right. On your radar for Boeing, last 20 seconds. Just watch what?
Free cash flow and max production. That's all that matters.
All right, great stuff.
Thank you
so much. Sheila, really appreciate it. She's Managing Director in Equity Research over at Jefferies, joining us here in studio.
Alexandra Semenova. Hey, I think we can transition right to another airline at the top of your list, Alex.
Yeah, I'm taking a look at American Airlines today. It withdrew its full-year earnings outlook. A lot of companies have been doing that. It's also joining some of its peers in doing that. We saw that from Delta Airlines, the owner of Frontier. Obviously, as there's so much uncertainty about the outlook for consumers, it seems to be a pullback in travel demand, obviously, as tariffs weigh on the economic outlook.
What's interesting, though, is American's up, and we were just talking with Sheila Kayalu over at Jefferies, and she made the point that a lot of we've had bad news on the airlines over the last month or so, and saying a lot of it's maybe priced in already, and that people are traveling.
Yeah, I don't know if you have anything booked for the summer, Alex, but Carol and I, and actually Sheila was just talking about this. She said post-pandemic, people are just waiting longer and longer to book their flights. I don't know what that has to do with. I think also it has to do with...
you pay more, right? Like if you...
Well, you pay more if you get closer to the date, but I think the flexibility now is helpful. Like there's so many tickets you can buy where it's just like, oh, you can change that for no fee. Yeah. That was new during the pandemic.
Yeah, that is true,
and that stuck around.
And I think also after the pandemic, there's just this hunch to try and book trips as often as possible that is just not going away. I don't know about you guys, but definitely for me.
Take me somewhere. Now.
Exactly.
What else you got for us?
So I'm also looking at Comcast. They reported a pretty big loss in customers. They lost 199,000 domestic broadband customers and 427,000 pay TV customers in the first quarter. Those losses were both more than Wall Street analysts expected. Pretty bad earnings readout here. The company's earnings actually rose to $1.09 a share. That beat estimates, and their revenue fell slightly to $29.9 billion. But it was really, again, that customer metric that everyone was watching, and shares are falling today.
Yeah, that's kind of rough. Stock's down about 11% also year to date. IBM, it's a name that we were breaking down the earnings after the close yesterday.
And it was having a good year up until yesterday's report, basically.
Exactly. Just basically the takeaway from this report was that it wasn't good enough for investors. It wasn't necessarily bad. It's just that the bar is so high for this company. So the stock actually fell the most in a year today, suggesting economic uncertainty, expectations that the cut in costs to government spending might affect the business. First quarter sales increased almost 1% to $14.5 billion, and profit was $160 a share. Again, the numbers aren't bad, just clearly disappointing investors. Not enough assurance that the business will be good.
Yeah, I mean, we spoke to Brent Thill over at Jefferies yesterday, who said that Arvind Krishna is doing a great job of transitioning this company away from hardware, actually away from consulting, which it's been known for years, and really focusing on moving to the AI and services in the cloud.
Which is much more, I think, profitable, certainly for the company. Right?
But there's a lot of competition.
Yeah. Competition, and also the CEO today saying in the near term, uncertainty may cause clients to pause. That keyword, uncertainty, has been just coming across.
Are you just allowed? Is anybody allowed to use the word uncertainty at this point?
I mean, everybody's using the word.
It seems to be the only word in the dictionary these days.
It does seem like the only word in the dictionary, certainly. I know we've been tracking like how many times like CEOs are saying it on earnings call, or I think we did last time around.
Yeah, we're keeping an eye on that for sure.
All right, great stuff. Alexandra,
thank you, guys.
Thank you so much. She is Bloomberg News equities reporter Alexandra Semenova right here in studio.
For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
Got to tell you, folks, we've got a rally underway, and we're pretty much at our highs of the session. What does that mean? We're up about 1.9% on the S&P 500, and we're looking at the NASDAQ 100, up by about 2.6%. I just wanted to pull up, because we've got Alphabet coming your way after the closing bell. That stock, too, higher ahead of its earnings release. It's up about 2.2%.
Oh, we're diving into the markets next. We're looking at macro, we're looking at equities, we're looking at fixed income, everything happening in our first hour of Bloomberg Business Week Daily.
All right, for those watching on TV, the close coming your way in just a moment. Tim and I continuing right here on Bloomberg Business Week Daily. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump says he's putting pressure on both sides to win the war in Ukraine after another deadly Russian attack on the Ukrainian capital overnight.
I'm trying to put out the fire, and I think we'll be successful. And if we do, we're going to save a lot of lives.
The president lashed out at Vladimir Putin on Truth Social today. CBS's Ed O'Keefe at the White House.
Steve Witkoff, his lead envoy for these sensitive matters, expected to be in Russia in the coming days. But sending that signal through his own social media platform, one that's closely monitored by the world, to say, stop Putin and let's get this deal done. It signals that he's frustrated with both sides, clearly trying to put pressure on them, realizing that if this kind of violence continues, there's no hope for a deal.
There were a number of court actions today involving the administration's actions, from DEI to sanctuary cities. Matt Piper has a wrap-up.
One federal judge has ruled President Trump's executive order that looks to crack down on sanctuary cities getting federal funding is likely unconstitutional. The injunction was sought by San Francisco and 15 other cities and counties. Another federal judge is blocking the administration from implementing a policy to end DEI or race-related school programs or risk losing federal funding. And another federal judge is blocking portions of Trump's order that sought to overhaul elections, including a provision to require proof of U.S. citizenship to register to vote in federal elections. Matt Piper, CBS News.
The administration, meanwhile, has asked the Supreme Court to allow enforcement of a ban on transgender service members while legal challenges proceed. Scott McFarland reports on a new FBI report that shows scammers and cyber criminals stole a record $16 billion from Americans last year.
The FBI is struck by these numbers so much because they've been taking down these ransomware networks, these big organizations engaging in fraud, yet the numbers are still going up. And there's a few reasons for that. First of all, there are more and more people carrying more and more devices, but also the techniques are getting more sophisticated. You use those artificial intelligence tools as a fraudster, you're able to perpetuate a more effective scheme.
A suburban Chicago man was sentenced today to 7 life terms for the 2022 shooting at a July 4th parade. Attorney Lance Northcutt.
Robert Crimo will rot in a cage where he belongs, that he will never see the light of day, that he will never breathe air with free people.
Police in New Jersey have charged a man with arson after he set wood pallets on fire. It's believed that sparked the Pine Barrens wildfire, the largest in the state in 2 decades. The smoke from that wildfire is affecting parts of New York City. On Wall Street, after a mixed bag of economic news, the Dow is currently up 430 points. This is CBS News. New study finds some food additives may raise the risk of type 2 diabetes. More from correspondent Michael Wallace.
By themselves, the food dyes, artificial sweeteners, and emulsifiers don't pose much of a threat. French researchers say the risks arise when those additives are combined in ultra-processed foods, like broths, salsas, margarine, and sodas. The researchers suggest you avoid ultra-processed foods as much as you can. Tuesday, Health Secretary Robert F. Kennedy Jr. called on the food industry to stop using several artificial dyes. Michael Wallace, CBS News.
The Trump administration is closely watching the nation's universities. A new executive order threatens to cut federal funding from schools that fail to disclose foreign funding. It's also been at the center of the administration's dispute with Harvard. Colleges and universities are required to report foreign gifts or contracts worth $250,000 or more. The administration thinks oversight's been inadequate. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on Wall Street. Also, we're going to get those Google Alphabet results after the closing bell. Right now, stocks just coming off their best levels of the session, too.
Yeah, we're going to get an update from Charlie Pellet in just a minute, but we're still seeing a rally. Hey, speaking of rallies, we're focusing on the macro, equities, fixed income, and everything happening with freight, trying to put together what exactly this economy looks like and why and how the markets are reacting.
Yeah, love, things moving around, what they say. It's an earnings bonanza. I mentioned Alphabet, Intel also reporting after the close. We've got a great group of voices to kind of give you what you need to keep on your radar when they report. First up, though, let's talk about that trade, that rally on this Thursday. Here's Charlie Pell.
Hi, thank you very much indeed. We are looking ahead to both Alphabet and Intel right now. Shares of both companies are advancing. That Alphabet report going to be absolutely critical for tech sentiment ahead of big tech earnings. Alphabet right now up almost 2%. Intel shares advancing now by 3.3%. The Dow, the S&P, NASDAQ all advancing. And a big question for investors, will we close above or below 40,000 on the Dow? Up 403 right now, up by 1%. The pros will tell you just another big number, but yes, it is a big round number. We've got the S&P up 93, 54.68, up 1.7%. NASDAQ up 392, higher now by 2.4%. Again, keeping it all in context as we do here at Bloomberg, S&P up 1.7%. 10-year 4.30%, with a 2-year 3.78%. Gold up 1.4%, 33.34 for an ounce of the precious metal. And West Texas Intermediate crude up 0.6%. WTI 62.63 a barrel. Bitcoin right now lower, down 0.3%, 93,380 on a Bitcoin. Well, certainly tariffs a major concern for companies and their investors. Jenny Johnson is the president and CEO of Franklin Templeton Investments. She was interviewed this morning on Bloomberg Surveillance.
I was talking to somebody yesterday about Canadians. They're not so upset about the tariffs. They're upset about the 51st state comment, and that Airbnbs in Rhode Island are down because the Canadians say, I'm not going to come visit the U.S. So those are the unintended consequences.
She mentioned Airbnb up by 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, lots happening when it comes to shipping and logistics. Union Pacific shares are lower. The railroad posted first quarter profit and an operating ratio that disappointed. The management, though, did affirm its 2025 forecast. Also, Knight-Swift shares bouncing around a bit. Up slightly now. The company said tariffs were a drag on activity. Comments overshadowed an earnings per share beat for the first quarter. For everything, planes, trains, and automobiles, I guess we could say. We've got Bloomberg Intelligence, right? Senior transport, logistics, and shipping analyst Lee Klaskow. He joins us from our Bloomberg Intelligence headquarters in Princeton, New Jersey. Lee is also the host of Talking Transports. It's a weekly podcast from Bloomberg Intelligence. Lee, we're going to get to some of the individual results in a second, but big picture, how is the freight recovery going?
It's not.
It's not.
Derailed. It's being derailed and delayed because of the tariffs. So, we're looking. I cover all modes of transport. So I cover trucking, rail, shipping, air freight. I do it all. And so when you're looking at the trucking market, which is kind of the base of all transportation, because pretty much every freight is touched by a truck at one point or another for the most part. That contractual rate recovery was supposed to happen this year, and it just seems to be getting pushed out. Knight-Swift, which reported earlier in the week, they said that they're expecting low to mid-single-digit increases in contractual rates, and they were expecting something a little more like mid to high single-digit increases. So the rate of recovery is a lot slower than what people are thinking, and we really haven't been hit by the impact of the tariffs because right now you're seeing ships that are supposed to leave in China. Those bookings have been down about 30% from China to the U.S., at least based on some press reports mentioning Hapag-Lloyd, which is one of the largest container liners. So, as that freight is moving into the U.S. and comes into Southern California and onto the ports and onto the rails and onto the roads, you might see less demand out there.
Sounds ominous, or is it just a case that so many companies, bought, I don't know, over the last month or so in anticipation of these tariffs, or as it seemed to heat up, and so tried to kind of restock here? And so is that a result of that? Or, I don't know, when you're turning ships around, I don't know what that means. Sounds ominous.
Yeah, so it's not so much turning ships around, just the demand for containers to be put on those ships is being reduced. But kind of, if you think about it, if you're listening to these earnings calls, you can almost play a drinking game. Anytime someone says uncertainty, someone's going to have to.
If you played that game, Lee, you would
Be on the floor.
We would lose somebody from alcohol poisoning. Let's be honest.
Yes, you'd be on the floor.
Yeah.
But in all seriousness,
It's real,
that's
though,
the
right?
reality. It's real. Like the shippers don't know what to do. We talked to a lot of shippers as part of our research here at Bloomberg Intelligence, and some are either pausing their imports from China. They're looking for other locations or other sources. Some are just saying, like, I'm just going to be working through whatever the macro gods throws at us. So shippers are taking various different approaches to the tariffs because we don't know are they going to be here for a while, or are these just negotiating tactics? And they're all going to be gone tomorrow, and 6 months from now, it's business as usual.
Well, that's what I wonder. How quickly can it turn around, right? If the rhetoric or the narrative or the reality changes and things aren't as onerous in terms of tariffs between the U.S. and other nations, would you assume that those ships would start coming right away?
It could take time because some shippers have kind of loaded up on inventories, and so therefore they don't really probably need as much stuff in the second half of the year. I think comparables are going to get a lot more difficult in the second half of the year because some shippers were pulling forward some freight ahead of the tariffs just to make sure that they have what they need in their warehouses to meet their customers' demands. So we don't really know because again, it could be all over tomorrow when we wake up tomorrow from a tweet, or this could be with us for some time. But the reality is that a lot of the companies that I cover that have reported already that provide earnings estimates, Knight Swift lowered their earnings expectations for the second quarter, and a lot of the other companies either they maintain their near-term or longer-term guidance, which was a little surprising because going into this earnings season, we thought there'd be a lot of reductions and suspensions, but we haven't really seen that yet.
Lee, before we let you go, just 30 seconds on this UPS acquisition. They agreed to acquire Canada's Andlauer Healthcare Group.
Sure.
What does that mean? What's UPS doing with healthcare?
Yeah, so UPS is, they've been very adamant about building their healthcare logistics business. They wanted to double that to about $20 billion in revenue from $10 billion. The addressable market's around $80 billion, so they want to be a major player. They're going to be doing that through acquisitions because it's a lot easier to buy your way into that versus building it organically. And it's high margin business, at least higher margin business than getting a delivery from them at your doorstep. This is stuff that's mid-teen margin business because there's a lot of value added there. So it's a good business for them to be in, and they're doing it because the reality is their business model has changed so much over the last couple of years with an increase in business to consumer or home deliveries, if you will, relative to business to business, and in what those home deliveries are, they're usually lower margin business because of the costs involved in delivering one package to your doorstep.
All right, we're going to leave it there. Our thanks to Lee Klaskow, Bloomberg Intelligence Senior Transport Logistics and Shipping Analyst. I have to say I did a deep dive on UPS, 7-8 years ago, and that was one of the things in their massive warehouses and shipping warehouses that they had a whole thing with drug delivery, and especially that which need to be kept cold and carefully transported. And you
learn they only turn right.
They only turn right.
That's the other thing. That's the other thing you told me.
But it's interesting. It's something they've been building out for a while. All right. Great overview. We love in terms of how things are moved around. Tells us a lot, too, about the economy. Another thing that's going to tell us certainly about a sector investors love, and that's those big mega cap tech companies because Alphabet reports after the close today.
Well, let's see what Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh is watching out for. He knows the company inside and out. He joins us here in the Bloomberg Interactive Brokers studio. What is it? What are the most important metrics we need to be watching?
I mean, search. I know every time I'm on your show around Google earnings, I mention search is what investors care about.
I've been doing a lot. I can tell you, I've been doing a lot more chat GPTing than I have been searching.
You got us going. You're like Gemini, ChatGPT, got to play with it.
Yeah, and look, Gemini, they just released some data because there's a trial going on for Google. 350 million monthly active users. Compare that to ChatGPT, which is more around 600 million.
Okay.
So it's catching up. The thing about Google that I guess people don't really envision when they look at the competitive landscape is they've got 7 apps with over 2 billion monthly active users. Now, if Gemini is taking off, imagine what Gemini integration with all those apps like YouTube, like Maps, can do in terms of engagement.
Right.
So it can enhance the experience when you use YouTube. It can enhance the experience when you use Maps and Android. And that is the power of what Gemini could do. Because look, if they're catching up, even if they are second to ChatGPT right now,
right,
there is so much surface area where Google can monetize it. And these are all the apps owned by Google. So that's the potential they have. The only caveat there is it's disruptive to their search business model, which is the blue link model. Because what people really like about ChatGPT is the straight out
answer. That's what I like. You ask a question, you get an answer. You search for something, you have to find the answer yourself.
So the reason you use ChatGPT is because of UI, not because of the quality of the answer. Gemini can give you the same quality of answer.
Can they seamlessly alphabet, like go from Google, this search, to Gemini? Like, is it going to be that easy a transition for everybody?
So their bridge is AI overviews. Now when you search on Google, they show you an AI overview. That's their bridge. They don't want to completely disrupt it because otherwise that search $250 billion run rate will definitely change completely, and it's not going up if they remove the blue links. So that's why they have to do it slowly. But what I remind myself is, it's not as if ChatGPT is far better than Google Gemini. That's not the case anymore.
Yeah.
It's because Google chooses to roll it out slowly on their search page. It's going to be very disruptive if they do it right away. And they give you so many other ways to use Gemini, where if you want a ChatGPT-like experience, you can have it. It's just they don't want to change the search page because advertisers still come to that.
It's a lot of money.
It's a lot of money at the end of the day. So I still think, they have everything in terms of the right kind of apps and all the things they need. It's just they have to manage their revenue. Remember, this is a company with over 90% plus share.
Mandeep, we got to run. Great stuff. Mandeep Singh of BI.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing. The Dow Jones Industrial Average at 40,052 right now, up 446 points. That is an advance of 1.1%. The S&P up 99 now, up 1.8%. NASDAQ up 404 for a gain of 2.4%. The NASDAQ 100 index full of big tech names up by 2.5%, while the Mag 7 index, the Bloomberg Mag 7 index, up now by 2.4%. The 10-year 4.3% with the 2-year 3.78%. Spot gold up $49 the ounce, up 1.5%. 33.37 on the precious metal, while West Texas Intermediate crude is up 0.6%, 62.62 a barrel. Procter & Gamble has cut its annual sales and profit outlook, citing tariffs and volatility in consumer demand. It is raising questions about the corporate pricing environment. Lauren Lieberman is an equity analyst at Barclays Capital.
I think where we may see pricing later in the year would be in response to tariffs. One thing that P&G just talked about on their conference call is they expect to see an annualized impact of $1 to $1.5 billion on their cost structure from tariffs, and pricing will have to be part of the mitigation plans to deal with that.
Lauren Lieberman of Barclays. Procter & Gamble down 3.6%. After the bell, Alphabet and Intel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, appreciate that update, Charlie. As I mentioned, we're talking macro and we're talking equities. I want to start with the macro because we got lots of economic data today. U.S. initial jobless claims came in line with the median forecast. Bookings for all good durable goods surged, though, by 9.2%. Carol, when that crossed this morning, you were like, what?
Well, actually, and then what I was assuming is that people were buying forward, but it was commercial aircraft. I don't know. Were you buying those early? I don't know.
I bought my 737 Maxes early this year.
Did you really?
Yeah.
All right. Good
Did
to
you?
know. No.
Okay, that's not right. I bought zero. Some commentary, too, from a couple members of the Fed. We've got the setup for a great discussion with Molly Smith. She's Bloomberg News economics editor. She joins us here.
No pressure, Molly.
In the Bloomberg Interactive Brokers studio. What do you think is the most, in terms of your world, what's the most impactful piece of data or commentary that we got today?
Today, I think, probably from Fed Governor Chris Waller.
Okay.
I think he's just continues to be a bit of an outlier, it seems like, among Fed officials on what they perceive the inflationary impact of tariffs is going to be.
So
he hasn't, as far as I know, I don't know if he's using the word transitory, but he is in the team transitory idea.
So he gave this interview to Bloomberg TV and he said that
Yes.
he'd support rate cuts in the event aggressive tariff levels hurt the labor market.
Right, which has not happened yet. We're not seeing that in the data yet, but he really just continues to hone in on this idea that the tariff impact to inflation is going to be temporary, which is really out of sync with the rest of the Fed right now. And so many officials are so wary of if this is going to be persistent. And of course, like we all know how that transitory story went during the pandemic, and they got very badly burned from that idea.
I will point out this was an interview on Bloomberg with our own Michael McKee, who's down there in D.C., and Waller stressed he didn't believe the impact of tariffs would have a significant impact on the economy before July, but at that point, unemployment could rise and quickly if high tariffs remain. I'm not going to say that all Fed officials are not equal, but they're not, right? You've got voting members. You've got, of course, a Fed chair.
I won't tell him you said that.
Sorry, Chris. But what's Chris Waller's position, like, on the Fed?
So he's a governor, so he's always in the voting rotation. So this is definitely
Is he voting this time around?
Always, yeah.
Always,
Fed
okay.
governors always vote. The
Okay,
rotation is among the regional Fed Reserve Bank presidents. So he's always there. And I think what's also interesting then about what's been coming through his comments is that when you listen to some of the other Fed officials, it seems like they are really much more wary of the inflation side of the mandate, and that's why they are so intent on holding interest rates steady right now. And Waller seems like what the comments today, what you're just mentioning of like if there are tariff-related job losses that we're going to have to come in, again, like that kind of seems a little bit maybe indifferent to what's going on in the inflation side of the equation, where most people are still kind of thinking like, we still need to keep rates elevated, unless the job market really falls apart. I mean, that's a whole other story, but it's so hard when the mandate is going in two different directions.
How did you look at Beth Hammack's comments? She's the president of Cleveland Fed. She said to CNBC earlier that she's essentially ruling out this May rate cut. That's not surprising.
Yeah, not a surprise.
Yeah, everybody knows that.
Yeah.
The Fed, though, could move as early as June.
What I thought was so interesting about her comments was the use of the word move. And that kind of implies to me, it's like, what direction? And, and that's exactly what she said, until we get a better idea of the direction the economy is going. So to me, she kind of left that a bit open-ended of, well, which way are you going to go?
Yeah, she said,
does that almost open up the door to a hike? Am I reading into this too much?
No, I don't think you are. She said, if we have clear and convincing data by June, then I think you'll see the committee move if we know which way is the right way to move at that point in time.
Well, this has to play with the dual mandate, right? Like whether or not we're seeing growth slow down, the maybe job market start to slow down, right, and have problems, or do we see inflation tick higher because of the tariffs?
Right, which again hasn't happened yet. If anything, you know, the CPI that we got for March, that was what ticked down on both the CPI and producer price index. So both consumer and producer prices both, I believe, stepped down in March. But again, that's before the April tariff announcement came through. So the CPI that we're going to get for the April data is going to be really much more significant and beyond.
One last question. President Trump talked about lower energy prices, the gas pump. Did he talk about, was it eggs? He brought up
He brought up eggs.
Prices?
He's brought up food prices.
But just earlier we covered, are they down?
Food prices, no.
Okay.
Definitely not.
And gas prices?
I mean, maybe marginally at the pump.
Well, I have, okay, so
I'd have to look at the
I got the
latest on
chart.
that,
He
actually.
meant, the president said they were under $2 in some states. The average, we should note, is $3.17.
Yeah, I was going to say the average nationwide is definitely still north of 3.
And CPI on food as of March 31st.
That's definitely still going up.
That is still moving up. I mean, that's been on a steady move higher pretty much since October.
Right. Yeah, the food at home category has definitely not come down.
Just to kind of lay it out.
Yeah,
in
just
terms
a
of the
little
data
gut
points.
check there.
Yeah. We like data. We like facts.
Huge fan.
Just gonna say.
Yeah.
Huge fan of yours,
Oh,
Molly.
thanks so much.
You're welcome. Molly Smith, good to check in with you. Bloomberg News economics editor, giving us the rundown of the Fed talk and also the eco data points that we needed to know. So eco, check.
Equity markets, almost check. Let's make them check. We are off our best levels of the day. The S&P 500 up 1.8%, though. There are signs that Donald Trump is rethinking the most aggressive elements of his combative stances on trade. And the Fed spurred back-to-back gains in stocks, his combative stance on the Fed, I should say.
Yeah.
And the dollar, while soothing volatility across asset classes. For more, let's bring in Eric Weiner. He's Bloomberg News Equities America's team leader. He's got a couple books out. One of them is What Goes Up, an oral history of Wall Street from the Great Depression through the internet bubble and the 9/11 attacks. He joins us here in the Bloomberg Interactive Brokers studio. I was just looking at the S&P 500 chart, Eric. Since the highs, all-time highs for the S&P 500, we're now down only 11% from those.
Yeah, we were down. We got close to a bear market, which is 20%.
We hit 20%. We didn't close there.
Intraday.
Now we're only down 11%.
We're peeling back. It's been an interesting. So, in terms of the statistics, we love statistics.
Yeah, totally.
Best 3 days, other than the 9.5% bounce one day. This is the best 3-day stretch since 2020. This will be the first time, if we close up 1.5%, this will be the first time we've done that 3 straight days since 1974. The record is 4 times. So this is a pretty strong liftoff.
Yeah.
Whether it holds, we're hearing a lot of different reasons why. Today clearly started, I mean, you can see it in futures. It started with the Fed speak. But there is more hope on tariffs. I don't know if it's rational hope, but there appears to be more hope on tariffs. There appears to be more hope on trade. His Ukraine comments raised the market a little bit. So it just feels like this is sort of a more optimistic week, I guess.
Yeah. Yeah, it's funny. There's been a lot of things.
I mean, I know Carol's thinking. You're thinking nothing has changed.
Well, I don't know yet. I mean, because you come in the earnings, right? And the CEOs are like, we're uncertain, right? We were kind of laughing about it, but no, that's what they say.
We're pulling our guidance.
So they're not saying, oh, they're waiting for the dust to settle, because I think we've all been, fool me once, or what is it, the saying? But it's like we get something said, like progress in something, and then within 24 hours or less, like it rolls back. So it's hard to know. We thought we were done with maybe the Fed chair commentary, and yet we got some comments today about him being late again. So I think it's tough.
So it's interesting. Well, first of all, with the Fed chair commentary, we're heading into the quiet period. So these last comments are actually really important.
I meant Fed chair commentary by the president.
By the president. So yeah, now what's going to happen is they'll be silent and he can keep attacking, and they're not going to cut. Coming up, they just said we're not going to cut coming up. So there could be more of that, but just the easiest way to do this is to say, do we have tariffs on cars? So last night, the GM and Ford went bonkers in after-hours trading because he said we're not going. He gave indications that they were going to lighten tariffs on cars and car parts. Then they gave most of that up when he backtracked off of that, and then said we may slap car tariffs on Canada. So within like an hour of after-hours trading, which is the thinnest that you're going to get, you had this crazy swing in automakers because nobody really knows where anything stands. And if you ask a trader, where are we with tariffs? Nobody really knows. You can't know.
Well, I think that China is still the big question. And I think the concern there is what happens if we have a decline in shipping goods from China. That comes to the United States and consumers start to see empty shelves.
That's a big part of what the consumer companies are saying.
Yeah,
is like their prices are going to go up. The demand is going to change because of that. The access to goods is going to be thinner.
But I also think Americans will not be happy about that.
No. But this is where China can actually sort of control its population more than we can, and that has a huge effect.
I want to ask you, we talked with the acting chair of the CFTC, and we asked her about derivatives market through all the volatility. And she said, everything seems to be working really well. And we've talked with you about orderly. What's interesting about this trade, if anything, or is it just purely reactionary out of headlines? How do you see it? Because you guys look at the numbers, you look at the data, you look at the internals. Is it, that you can kind of tell a healthier move versus an unhealthy move? So I don't know.
Well, there's a lot of shorts that got shoved out. And so there's some covering going on. This isn't necessarily a short covering rally, but there is definitely some of that going on. And there's a lot of uncertainty. If you think about the economy as where it is, it probably is trading roughly about right. But what we don't know, obviously the market's a forward-looking mechanism.
Right.
And to Molly's point, we don't know what the impact of all of these things are going to be. So as, like, say, American Airlines pulls its guidance and is like, we don't know. And the more companies say that, like, so you start looking at the internals and it's not great,
That's what I wanted to get to. Thank you. Eric Weiner, he's Senior Editor at Equities Americas, right here in our studio. Folks, we're counting down to the close, talking a little bit of fixed income. That's next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ solidly in the green ahead of earnings out of Alphabet and Intel. Right now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are climbing today amid tariff talk. The Dow is currently up 485 points. S&Ps are higher by 1.9%, while the NASDAQ, that climbs by 2.5%. The U.S. 10 yield is at 4.3%. Gold and oil are higher, but Bitcoin, that's little changed. Among the main 11 S&P sectors, leaders were tech and the industrials. Only consumer staples were in the red. And leaders to the upside in the Dow, Salesforce and Caterpillar, while IBM fell 7% after earnings and led to the downside. Also after earnings, Pfizer fell 18% and Pepsi dropped 5%. And fell to its lowest level since 2021. In deal news, Authentic Brands is said to weigh a bid for Guess. And regarding the tariffs, Trump says the U.S. is talking with China on trade after Beijing's denial. Wrapping things up, some of the names reporting after the bell tonight include Intel and Google. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're coming up on about 17 and a half minutes to go until we wrap up the trade on this Thursday, April 24th. We've got a rally underway, and we are pretty much hovering near our highs of the session, maybe just off. So as you just heard from Bill and Charlie, that we're up almost 2% on the S&P 500, Dow Jones Industrial Average up about 1.25%, and you've got the NASDAQ 100 up about 2.6%, which could be affected in the after hours by what we get from Alphabet.
Yeah, look, I promised that we would kind of go everywhere in our second hour of Bloomberg Business Week Daily. We are. We did eco, we did macro, we did the equity market. I want to really hit on bonds and what's going on with fixed income. We've got Joanne Bianco with us. She's partner and senior investment strategist at the fixed income ETFs firm Bond Blocks. We've got about $2.6 billion in assets under management. I just want to talk big picture before we get to some of your ETFs, Joanne. Just with the way that we've seen the bond market react over the last 3 weeks, there's been this idea of sell America, a weakening dollar, typical safe haven assets are not acting as safe havens. Is there a fundamental shift in your view happening with treasuries?
So, the thing is, well, first of all, we have $4.6 billion in assets, not 2.6.
Oh, I'm sorry.
No problem. But,
Is that because a lot of assets are going into fixed income all of a sudden, or no? In terms of flows?
Yes, we've had a steady growth in our business over the past year. So we're definitely seeing growth, and we're continuing to see actually a lot of demand for fixed income in the current environment. Because, to be honest, we don't really get there that the U.S. is losing its safe haven status. Sure, there's more volatility in long duration treasuries, but that is something that people should expect. There's a lot of areas that are safer in fixed income, and then the income component in fixed income is actually a good place to be for investors to get away from some of the volatility that they're seeing in equities.
Joanne, talk to us about the flows that more recently, as you said, over the last year, definitely assets have grown a bunch. But I mean, what have you seen as of late amid a market environment that, depending on the day, depending on the hour, could change pretty dramatically? And we've talked about, certainly some of the disconnects that we've seen between what we see in certain asset classes versus, the equity market versus what we're seeing in fixed income, and in particular, U.S. Treasury. So I am curious, what are the flows that you've seen? Let's go the last 2-3 weeks when there has been so much volatility.
Yeah, we're getting a lot of flows in in our treasury products in kind of more the short to intermediate term. We're also getting flows into our investment grade corporate products and our tax aware products. You know, I mean, pretty much across the board, private credit. You know, we're holding our own in terms of where our high yield ETFs are doing in terms of flows. But, you know, yeah, there's definitely been interest, more conversations. We're having lots of conversations with clients right now about, you know, the solutions that we could provide with our lineup.
So I want to go back to my question about a fundamental shift in the role of bonds. Are we seeing a remaking of this world order that makes it look like that the U.S. is not necessarily the safe haven?
Yeah, I mean, we just can't get there with that right now. That is obviously, you know, that would not be a great outcome of all of this. But, you know, assuming that there is some stability that happens in terms of talks on trade and, you know, the Fed independence and things like that, those are the kinds of things that could potentially reduce some of the uncertainty, you know, because really, despite the fact that the U.S. economy is in a strong position overall, this dominant sentiment being of uncertainty is something that is rattling investors, you know, worldwide about U.S. markets, and that's understandable.
So your point that you can't quite get there, is that because you don't really believe it's happening? Not yet.
No.
Tell me.
It's not that. I just, you know, I'm optimistic about, you know, our ability in the U.S. to figure this out.
Where do you get that optimism? Forgive me, and I mean it with all due respect. I think it's just, I think we are trying to figure out, we're in an environment where, you know, CEOs will come out and it's one thing to say, I can't give you an outlook. It's another thing to say, here's the two scenarios, which shows very clearly that they understand that based on what happens with really tariffs, that's going to determine one growth path for the U.S. economy and growth path for U.S. companies. And then there's, of course, the other that kind of maybe takes us back to more normal. So, I mean, where does your optimism come from, or hope? Is it just that, I don't know, where does it come from?
It comes from that, you know, the fact that this kind of chaotic market environment is not something that can continue long term for our markets. And I feel like there will have to be solutions that have to come to pass, because, you know, the status quo is not, you know, the way we want things.
I know it's not the way that you want things, but we also know that you know, this is the type of thing that the president could essentially undo at any moment, because as many analysts have told us, it's the difference in this is it's self-inflicted, right? Putting on these tariffs and talking about the Liberation Day. I think it seems like he's less receptive at this point to what many people thought coming into this presidency were guardrails such as the bond market, such as the equity market. He's kind of said he doesn't care as much about the equity market. He did reference the bond market getting yippy a few weeks ago with that reversal on that 90-day pause, rather. But it doesn't seem like that's going to hold him back from doing something he really believes in, Joanne.
Right. Well, you know, I'm not in the mind of our president, and I just think that, you know, the sentiment is really negative right now. Sentiment could turn around with, you know, any kind of positive news and negotiations in terms of trade talks and stuff. So that's where, you know, I just, again, don't think that the status quo can continue, and that's where the optimism comes from.
Your best bet, 20 seconds here for investors who are thinking, okay, where do I go in the fixed income world right now? Just real quickly.
Well, you know, treasuries, we think, you know, this certainly the short to intermediate end is still more of a safe haven. And we also think that investment grade corporate bonds are positioned to kind of weather the volatility, considering their strong fundamental position. And then we also like private credit with its return potential with lower volatility than other asset classes.
All right, so appreciate it. Joanne Bianco, She is partner and senior investment strategist at the fixed income ETFs firm Bond Blocks, with about $4.6 billion in assets under management, joining us from Chicago. We're counting you down to the close, just about 10 minutes away. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are coming up on about 7 minutes to go until we wrap up the trade on this Thursday afternoon. We've got a rally underway, really up 2% on the S&P 500, up about 2.7% on the NASDAQ 100. And then, of course, we've got Alphabet coming your way. That stock's up ahead of earnings. It's up about 2.3%. Intel also coming out after the closing bell. That's a big one, too, going through a lot of stuff. It's up more than 4%. Man, it is on a tear. Holy schmolies. Can I say that?
Watch your mouth.
That's clean. I am looking at...
Busted.
All right.
What are you seeing?
Hang on.
What are you seeing? What are you seeing?
I got to do some calculating. 14% higher this week.
And it's only Thursday.
And it's only Thursday, London.
Well, we'll see what happens.
Yeah. Okay. Where do you want to go?
Which one do you want to do? They're both good, aren't they? Let's start with the news. Harvard in talks to sell $1 billion. What's going on? You're speechless.
Why is there American Girl doll in my chat?
Oh, because she wants to talk about, that's Elizabeth, and she wants to put...
Is there a story?
There's a story about chickens. Elizabeth.
What?
This is what happens, okay? Hold on. Okay, this is Elizabeth,
so where are we
one
going?
of our producers.
Where are we going?
We're going to go to Harvard first.
Let's go to Harvard.
And then we'll go to
chickens.
chickens.
This is a really incredible story. Okay.
Harvard's endowment is in advanced talks to sell roughly $1 billion of private equity fund stakes. This at a time when the school faces financial uncertainty and pressure from Donald Trump's threats in a sluggish market on returns for illiquid assets.
I got to say, it's going to be a little bit tough because everybody's been anticipating the big M&A rush, and for private equity and private credit, those worlds, they've been looking for the markets to kind of come back. And so deals could be done, companies could be sold, companies could go public. And so it's not necessarily happening because the environment is still uncertain, right? A lot of uncertainty still out there because of stuff coming out of Washington. So having said that, if Harvard's looking at maybe not getting some funds from the federal government, they're looking to maybe do a cap raise. What?
The story does say the efforts to sell the secondaries portfolio began before Trump's announcement of tariffs and the latest twists in his fight with Harvard, according to one of the people who was consulted for this story. I wonder what, and we saw also Yale's endowment also exploring secondary sales. Evercore's advising that.
There's a fair amount of secondaries happening because I think because things aren't, companies aren't going public or companies aren't being sold, and so
I thought this was supposed to be the year of M&A and the year of exits.
Were you not listening to me?
I'm always listening to you.
It doesn't sound like
I don't understand why they're selling secondaries and not selling public equities or not selling from fixed income or other alternatives that they have. But, as we learned a few years ago when you and I were at Milken back in 2022, I believe, in a down market, you see the asset allocation for private assets go higher because they're not marked to market every day. So it looks like the value, so the asset allocation actually increases. So in order to get it back to where it's supposed to be, maybe?
Here's maybe potentially why. Again, speculation. Welcome to speculation afternoon here. But no, what's interesting is the endowment at Harvard has allocated almost 40% of its $53 billion to private equity.
Yeah, so maybe it's got too much?
That's a lot. So maybe you're looking at your portfolio and saying, okay, I mean, we don't know.
Well, especially as the value of other assets have gone down, so there's less of an allocation in the portfolio. You want to talk chickens?
Yeah, I want to talk chickens.
Okay.
Where are we going?
This is one of the most read stories. We just have about 30 seconds left.
Yeah, let's go.
Red Brown with the byline on this story.
Good job, Red.
The nationwide egg shortage and subsequent surge in prices is pushing many Americans to try their hand at raising a chicken flock of their own. Tractor Supply. Do you see this?
Yeah, go.
Tractor Supply expects to sell a record amount of chicks this year as customers expand their broods and first-time timers seek to avoid record-setting egg prices.
Yeah. I gotta say, I once did a whole small business show on a company, and I can't remember, but it was all about raising chickens. And I went out to their business out in Connecticut and ran with the chickens. You get some fresh eggs? And saw their big coops and saw the little chicks. I gotta say, I wanted to raise chickens too.
Yeah.
There's somebody raising chickens in my neighborhood.
Okay.
Just up the street.
You know what? If that's true, you should ask them for eggs because they're probably gonna have more eggs than they can use. I will say, my CSA for the summer, Elizabeth, is out of egg shares because demand has been so high. I'm on a wait list.
My husband keeps saying, we're getting eggs. Nope, not a problem. Do not go anywhere. We're heading over to our TV colleagues, count you down to the close and count you down to Alphabet earnings.
Today's market action, it starts right now with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through the closing bells with a global simulcast that starts right now. Carol Master and Tim Stanovic join us from the radio booth. Alex Seal on assignment in Oklahoma City. Welcome to our audiences across all of our platforms, including our partnership with YouTube. Carol Master, yes. Stocks up for a third straight day. Stocks at session highs. Why are you so pessimistic?
I'm not pessimistic. I constantly ask what fundamentally has changed because I know we're watching everything out of Washington, but I mean, you still have a lot of CEOs coming in on earnings saying uncertainty. So I don't know. It's an interesting move. 3 days higher on the S&P.
I was surprised to find that we are only 10.7% off of all-time highs on the S&P 500. Remember, it was just a couple of weeks ago that we hit that bear market. We didn't intraday. We didn't close there. But now we're down barely 11%.
Yeah, but that's where numbers really, really mask a lot of the bigger issues. Is it doesn't feel anywhere close to our being near record highs, right? There have been a couple of people we've talked to, and I don't know if you guys have heard similar, that are comparing the economic damage we're experiencing right now to what we saw during the pandemic, just that there's no virus this time. And I find that an interesting comparison, or at least an interesting frame of reference.
Yeah, absolutely. Yeah. But this gets to this idea, though, and I just kind of want to refocus on earnings for a second because we're now going to get the real mega caps coming into play with Alphabet tonight. tonight, and then next week we get Microsoft, Meta, and a few others. And it gets to this idea as to how are they weathering the storm so far, and what are they expecting to do over the next couple of quarters?
Yeah, the one thing I want to mention in terms of the S&P 500, Eric Weiner of our Bloomberg News team said up 6% in the past 3 days, best 3-day stretch since 2020, if you back out that big rally after Liberation Day and all that mess.
Well, the S&P closing out the day higher by about 2%, and that is certainly impressive to be sure. A key technical level to keep an eye on is that 5,500 level. We closed right below it, 5,484 and change. The NASDAQ composite higher by about 460 points, or 2.7%. The Dow Jones Industrial Average adding about 1.2%, and the Russell 2000, a really decent day here, up 38 points, or 2%.
All right, and the S&P 500, no surprise, pretty broad-based here. You have about 405 names to the upside, Scarlett, 97 to the downside.
All right, a very broad advance, too. We're looking at tech, communication services, and consumer discretionary, leading the gains. The weak link here is consumer staples. It has been the best performer since April 2nd in that it's little change, with at least 1% declines for all the other sectors.
Yeah, and it's kind of fascinating to see some of these earnings that are coming out in the companies, like Alphabet. It's up about 2.5% in today's session. Alphabet's up more than 4% ahead of earnings. So interesting to see the enthusiasm by investors kind of ahead of some actual
What did you
numbers.
say about Alphabet? Up 14% in the last 3 days?
S&P up 6%. Oh, no, Intel
Alphabet.
up 14%.
Oh, it was Intel. Thank you.
All right, guys, Intel earnings are crossing the wire right now. Let's get right to it. The company in the most recent quarter saying that adjusted EPS did come in at about 13 cents a share. I'm not quite sure if that's a beat or a miss. We'll have to come back to that in a second. On the revenue side, the company did beat there, $12.67 billion. The street was looking for $12.3 billion. The guidance for the second quarter, the current quarter, here's your revenue range, $11.2 to $12.4 billion, so a wide range, but the top end of that range is below the average of street estimates. The street looking for $12.9 billion. So on the top end of that range, that would be a miss. The company also saying that for the second quarter, it expects no EPS on an adjusted basis, basically a flat line. The street was looking for profitability of about 7.2 cents here. There's a lot to go through this release, but we should point out that the new CEO has only been on the job for a few weeks, and we get into that situation as to whether or not this becomes a sort of one of those kitchen sink things as he tries to map out a plan for the future. Intel share is moving lower right now, down by 2%. And I'm looking right now, and I see Alphabet crossing the wire.
Yeah, let's go to that right now. Alphabet's first quarter EPS beating analyst estimates, $2.81. That is 80 cents higher than what analysts had anticipated if we're comparing like with like. Revenue, $90.23 billion, better than the expected $89.1. When you back out the traffic acquisition costs that they pay to partner websites and partner companies, $76.5 billion. Analysts were looking for $75.4 billion. Google Cloud revenue, this is the big one because it's, of course, a driver here for revenue overall. $12.25 billion, $12.26 billion. Analysts were looking for $12.32 billion. So that is a miss on the Google Cloud revenue. In addition, Alphabet announcing a 5% increase in its dividend. And Alphabet as a big tech company having a dividend is already kind of mind-blowing. But the fact that it's increasing its dividend, that just shows you how the state of the world has changed a lot. The stock right now moving higher in after-hours trade by about 5.5%.
Of course, AI being called out by Sundar Pichai, the CEO of Alphabet, calling out Gemini 2.5, specifically calling it the most intelligent AI model, our most intelligent AI model, breakthroughs in performance and an extraordinary foundation for future innovation. Search saw continued strong growth, boosted by the engagement we're seeing with features like AI overviews, which now is 1.5 billion users per month. Driven by YouTube and Google One, they surpassed 270 million paid subscriptions. Cloud grew rapidly with significant demand for our solutions. So perhaps not a pullback in build as some were concerned about?
I don't know. Let's talk about that and just continue to watch because you got Alphabet up about almost 6% here. Just real quickly, I want to mention T-Mobile also out with their results. The company raising its 2025 financial guidance. Also, a red sticky from us here at Bloomberg. T-Mobile postpaid phone net adds, 495,000. That's a miss in terms of what the street was expecting. Street was looking for a higher number at 506,557. In terms of the outlook, fiscal year core adjusted EBITDA of $33.2 billion to $33.7. That compares with the street estimate of $33.47 billion. Again, T-Mobile remained just down just a hair in the aftermarket.
Yeah, kind of interesting to see those results out of T-Mobile, specifically on the back of a pretty solid beat that we had out of AT&T a few hours ago. I do want to go back to Alphabet, of course, the biggest company in the S&P 500 to report earnings so far. And they really did come across much higher than expectations, more so on the guidance, less so in the current quarter. And I just want to break down specific things. When we talk about the ad revenue of this business, which is still, to a certain extent, the big driver here, you're still talking about near double-digit percentage growth. I think it was 8.5% to be specific. And then, of course, on that services revenue side, you're at growth of about 9.8%. So for a company of this size to be posting up those types of numbers is pretty good. YouTube up about 10% as well. One thing, though, that an analyst talked to me about this morning that he said that we should really pay attention to is the company's Waymo and the sort of rollout of the autonomous driving and how that could actually be a net benefit to the bottom line relatively soon, in his words, at least. So it'll be interesting to see if that comes up on the conference call.
That would still be in the other bets category.
Yes.
Right?
Yeah, they don't break it out, so we don't know.
Other bets operating loss was $1.23 billion. That was up 20% year over year. The estimated loss was $1.12 billion. Still relatively small when we're talking about Alphabet, but I think that's an area where a lot of people are optimistic. But make no mistake, this is a company that makes its money still on search and advertising.
Let me just jump in really quickly because we also have Skechers, the shoe company, reporting results. First quarter adjusted EPS, $1.17, beating the consensus estimate by 1 penny. Net sales, $2.41 billion, coming in lighter than had been anticipated. Full bottom line EPS, when you include a gap, it's $1.34. That is higher than anticipated.
Yeah, I want to go back to Google as we continue to see this up in the aftermarket. I mean, we talked, the company also saying first quarter Google Cloud revenue, $12.26 billion versus an estimate of $12.32 billion. What Mandeep Singh said is that it is all about search. That is still the business, and that's what you want to see in terms of strength.
But I just want to go back. I mean, you guys kept interrupting me. I was supposed to rebut Tim. By the way, Tim, that fly is still in the men's dressing room. If you can deal with that, by the way. It's driving me. There's a gigantic fly in the men's dressing room.
All right, do you have something to say?
I do, actually. So we talk about the valuation. So I just want to get to this point on Waymo, though, because this was Brian Nowak over at Morgan Stanley who was talking about this, and he did publish a note, so this is public. He talked about this idea of how the Waymo unit as a standalone could be valued at something like, $45 billion minimum, and that's based on the last funding round. So in his idea, it would be a lot more than that. But compare that to what we learned out of the trial, where they're saying that the Chrome standalone browser would be valued at $50 billion. So at least if you believe what Brian Nowak has to say, you're talking about a Waymo unit that is still relatively nascent, that in theory, at least on paper, is just as valuable as the Chrome unit.
I just have to say something else. We mentioned the 5% increase in dividend. It's now 21 cents a share. Also, an additional buyback program authorization of $70 billion. Maybe that's why the stock is moving higher. I know that we reported this beat on revenue and everything, but at the end of the day, investors are looking for stocks that can deliver, that can return cash to shareholders, and this is exactly what Alphabet is doing. If nothing else, it's got a ton of cash sitting there, and it can use it in this way.
Can Romaine and I talk more about Waymo? Because
how about the fly in the dressing room?
Romaine, have you been in a Waymo?
I have not, because I'm sure
it's incredible. I've done it twice in San Francisco. Look, they're growing, they're expanding, they're in other parts of the country. I think one concern people have is they don't know how much these Waymo vehicles actually cost to build. The Jaguars, the technology is, we think, really expensive. Max Chafkin has talked to us a lot about that, about we don't know what the numbers are there and if they're adding up to something that is, look, obviously other bets lost money, but if it is something that can be scaled at a relatively, we're talking margins for a tech company, right? This is really expensive hardware. This is not like the Chrome browser.
That's why it's going to be stuck in other bets for a long time.
Yeah, it really has.
All I'm going to say is, as you said, Romaine, this is one of the largest market cap companies out there. When we talk about the Magnificent Seven, this is one of the companies. If it was disappointing, this would be a bit of a bummer, right, in this market environment. For it to come out with these numbers, for it to do the buyback and all these, to feel like it can do these things, it's pretty impressive.
And we've been here before, right? I mean, we've been here where a lot of investors have sort of discounted, if you will, some of these mega cap companies, saying that, they've kind of gone too far, too fast. And usually we get a course correction. I mean, course correction back to the upside, where these companies let it be known that they could very much just throw off cash pretty much as they please, at least when it comes to Alphabet, to maybe to a certain extent Microsoft, and maybe to a smaller extent Apple.
But their numbers weren't bad.
No, they weren't. And I really think that the way Sundar Pichai puts it in the commentary that he gives really showcases how the focus has moved away from AI towards the fundamental strength of its core businesses, whether it's search, whether it's YouTube, whether it's the cloud business. AI gets a mention, but beyond that, it's really about, hey, we're executing on all fronts.
All right, stocks up about 5% here in the aftermarket. So investors, at least so far, liking what they got from the company. And just a quick check on Intel as we go out here, guys. We're seeing that stock also moving around in the aftermarket. It is down almost 6%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Scarlett and Romaine continuing out there on television, and Tim and I are going to continue right here on Bloomberg Business Week Daily. We'll see you again.
The fly, Tim. Get it.
I'll get it. Don't worry. I got you.
You got to get the last word, don't you? All right, we'll see you tomorrow, guys. I know.
We couldn't resist.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, watching some of the big earnings here in the aftermarket. We mentioned Alphabet. Just want to go back there, up about 4.25% here. So investors kicking this one higher. This after the company beat estimates on Google search advertising, reported first quarter revenue and profit that exceeded analyst expectations, buoyed by continued strength in its search advertising business. We talked to Mandeep Singh earlier, and he said, this is an important number. Watch the search business. So again, it seems like it continues to give a big boost when it comes to Alphabet's results. Intel's another one we got here in the after hours.
As good. It's down. Excuse me, I didn't have the microphone on. Not looking as good. It's down 6% in the after hours. The company gave a weak forecast for the current period and announced it's cutting workers to bring costs in line with the business's smaller size. For more, let's bring in Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani. He joins us from our San Francisco bureau. Kunjan, it's only been a couple minutes since the numbers came out. Revenue is going to be between $11.2 billion and $12.4 billion. That compares with an average analyst estimate of $12.9 billion. Analysts do not like to see that. Shareholders do not like to see that. Is that why we're seeing the stock down 6% in the after hours?
For the reaction so far, yes. But, we suspect that as we get into the earnings call and start listening to the commentary, the sentiment will be driven more by the strategic changes that the new CEO likely will announce, more sort of a color on the second half uncertainty rather than the 1Q, 2Q numbers.
I mean, it's going to be messy for a while, right? CEO just got back, or got into the spot. It's been a busy week. Like, I was kind of floored the last 3 days. Intel's up about 14%, right? Getting rid of some things and kind of trying to figure out its way forward. It's going to be, do we give the CEO some allowance to kind of reset Intel's future here?
I mean, you have to, given the short time he's been in his seat. To his credit, though, he has been, what I think folks really like is his decisiveness and the speed which he's taking actions, whether it's exiting the non-core assets like the Altera deal, whether it's cutting costs both on the OPEX and the CAPEX side, as we are seeing on the wire, and taking the key product, the AI product segments within his direct command. So I think we see a lot of right steps in the right direction so far. Of course, it's not going to be easy, especially as they're faced with the uncertainty from tariffs, from U.S.-China trade relationship. Remember, China is still a huge portion of the market for this company. So he will have to navigate the near-term macro, but so far what we have seen from him is positive.
How much do they get in terms of business from China? Just so that we remember those numbers.
I don't have the exact stat. It has to be somewhere between 30 to 40%, top of my mind, which is, again, significant because if you still think of Intel, it's still the dominant share in PCs, right? Their key business segment, which drove the beat for the 1Q numbers that we just saw.
I'm wondering about this headcount reduction because earlier this week, we saw news that they were set to make cuts by about 20%. Now we're learning that the company doesn't have an estimate for the one-time expense associated with the cuts, but it expects operating costs to be reduced to about $17 billion this year and $16 billion in 2026. When we spoke to Ian King about this earlier this week, Kunjani basically said Intel has a lot of employees for its sales. Like if you look at competitors, if you look at like NVIDIA, for example, they have on a proportional basis, Intel has many more employees. Is 20% the right way to think about this? Or in your view, does it have to be higher?
I think the magnitude of the percentage is not that a direct correlation rather than the areas that he's focusing on, which is he's going after, again, non-core teams, eliminating bureaucracy by eliminating layers of management, which was a big struggle with the old Intel because decisions just took a lot longer. I mean, we have seen him making those decisions, which you could argue could have been made last year, right? The Altera exit has been dragging along for a while. These cost cutting in these other non-con programs, you could have done that sooner. So I think going after the right cuts is more important just than the magnitude of the cut.
All right, so it's the first conference call for the relatively new CEO, Lip-Bu Tan. What is it that do you think he needs to answer? What are the questions that must be answered when it comes to Intel?
I'm sure he'll get a lot of question again on the miss on the guide and the second half outlook, as we have seen analysts ask in all the earnings calls so far. But more important, I think, will be beyond that, the questions around status of Panther Lake, right, and how 18A is doing. Commentary around now that we have heard from TSMC that there is sort of no deal as of right now between TSMC and Intel. Are there any potential JV with its customers that is possible, or how does he think in that direction? And it's sort of roadmap for foundry business going forward. Remember, next week they are going to have a big foundry event, so he might hold off sharing some of that foundry-related, answering some of that foundry-related questions to next week, which we would like to hear this week.
Can you think Intel can turn it around? I mean, we've been talking about the Intel turnaround story.
They're still planning to spend
for a very, very long time.
Yeah, still planning to spend about 8 to 11 billion in capex this year. So,
you think they can do it, Kunjan?
Yeah, I hope they can do it. I really want them to see them succeed. I mean, it's a national American champion, right? Since my early days when I was thinking about semiconductors, it has always been the North Star for the industry. So I really hope they can.
Is it important for U.S. national security?
It definitely is. And it just, even all overall ecosystem, right? Like if Intel suddenly dies from this technological landscape in foundries, you just have one player really left. It also impacts with the speed at which the entire ecosystem progresses.
All right, good stuff. Listen, thank you so much. We know you're got to write some research and get on that call as well. Kunjan Sobhani, who covers the chip area, he's senior semiconductor analyst here at our Bloomberg Intelligence team. Shares of Intel, folks, down about 5.7% here in the aftermarket. This as the company, which is working on a comeback, gave a weak forecast for the current period and said it is cutting workers to bring costs in line with the business's smaller size. So it's a redirect, right? And kind of trying to get the pieces in place.
Well, it's a different story when you look at...
It's been on a run.
It has.
In the lead up to earnings this week.
Yeah, this week.
Just
14%?
Yeah.
Is that right?
I'm kind of obsessed in the last 3
we'll
days.
see what happens tomorrow.
Yeah, I'm sorry. Go ahead.
That's fine. 3.8% to the upside is where we see shares of Alphabet, the parent company of Google. The company reported first quarter revenue and profit that exceeded analysts' expectations. It was buoyed by continued strength in its search advertising business. And that's exactly where we want to go now. We've got back with us Mark Douglas. He's president and CEO of Mountain. The company is software that helps companies target advertising on smart TVs. He understands the ad spend market. He joins us from Miami. Mark, good to talk with you again. Does this surprise you given the trends that you're seeing when it comes to advertising?
Not given the trends. I think the trends I want to talk more specifically about Google.
Yeah.
I think we started the year, and I think literally everyone was very optimistic about the economy. Q1 and Google's reporting on those results, I think they did very well. I think there were concerns and continue to be concerns about whether AI on their platform, meaning in your search results, is going to in some way negatively impact their search business. But I think as an investor, even there, just provide some comment on that. Look, I'd rather have Google competing with themselves than allowing other people to compete with them. So I think even that's a positive if in the future it does have some negative impact.
Well, it's funny that you say that, and I'm looking at our write through by our Davey Alba, but this whole idea that, Alphabet, Google has to show, right, that it still has momentum in search advertising and cloud, but at the same time show that as it makes incredible investments in the AI build out, as the world kind of shifts in that direction, that it's also there as well. It's really tricky. And this is what our Mandeep Singh said. This is a company that's got 7 apps with over, I think, 2 billion monthly active users. Its bread and butter is still Google, right? And its search business. But as people move to ChatGPT or Gemini, that's a tough transition. It's got to juggle a lot.
Yeah, and then, like I said, I think if I'm an investor in Google, I always say to my company, better we compete with ourselves than we allow someone else to do it.
Right.
So if I'm an investor, what I'm looking for is that the management team is awake, they're alert, and they're ready to compete. And I think Google's showing that in what they're doing with Gemini, and they're showing that they can still navigate search. Also, with a company with that scale, you mentioned the tremendous scale they have. Honestly, you can always squeeze out more revenue, and as a result, more earnings. So I think it also shows that they can manage the business in order to find those extra dollars if they need to, while they might be challenged in other areas.
Is this the classic innovator's dilemma, though? Google's core search business is so profitable, and it's so entrenched, and it's so ingrained in pretty much almost every country in the world, you have to say almost, that there's a concern that it doesn't want to cannibalize that with investment in Gemini?
Yeah, that's what you don't want to see.
Right.
You want them to be like you almost want it to be 2 separate companies, and they just go at it, and may the best part of Google win. The other thing,
as long as Google wins, that's the point, right? Like you said, you like to be competing with yourself. Forgive me. Go ahead.
Yeah, no, exactly. The other thing to remember, mobile was a big threat to Google. Google was all desktop, and you have your browser out. That's still, obviously a huge part of their business. And people were very worried about whether, people were going to search on mobile, and if they did, whether they were going to respond to the ads. So, I mean, it's not the first time Google has been challenged by new technologies, and they, honestly, kudos to them, because they're not. I expected Gemini to possibly cause some problems in Q1, and in terms of their revenue, and obviously it hasn't.
Hey, one last question on the upcoming call with analysts. What would you be asking? What do you want to hear?
I would be all about Gemini and how AI results at the top of the search page, which essentially have replaced the paid, the click ads, the paid ads at the top of the search page for a lot of the searches. I would want to ask every possible question I can on data related to how that's impacting their search revenue, their search results, responses to the searches, everything, and try, if I'm an analyst, try to model that out.
All right. We're talking, of course, with Mark Douglas, President and CEO of Mountain. We want to bring into the conversation Mandeep Singh. He is Senior Tech Industry Analyst at Bloomberg Intelligence. Just coming in the studio, it's a little crazy, so he hasn't heard everything that Mark had to say. But Mark said, he's curious about Gemini, something he's going to be looking at on the call. Mandeep, I've been quoting you.
You told us what to do, Mandeep, and you were right.
I've been quoting you nonstop because you said it's all about search. So walk us through what they got in and how it looks for you, because investors like it.
Yeah, I mean, the Google services revenue was a slight beat, but what was really impressive was the margin beat on the Google services. Mm-hmm. And a lot of it is because everyone thought because they are adding AI overviews, that's going to hurt the margins of search. Well, it didn't happen.
Why didn't that happen? Because you have to explain this from the perspective of a Google user, like the experience. If we get the answer with the AI overview, we're not looking at ads. We're not clicking on things.
Yeah.
Why doesn't it hurt?
Because they have so many different types of queries on Google search that some of those queries, they are able to monetize it just through ads on AI overviews. Remember, Google never went away from ads. Even though they integrated LLMs, ads has always been a core part of the Google.com offering, even with the AI overviews. and they somehow weave the ads in a way where they're able to charge for those ads. That's what makes them so special.
I can't. I never look at an ad on. Like, what is wrong?
I don't know.
When I look at an AI overview, all I'm looking at is the answer.
It depends on whether it's an informational query versus an e-commerce query or a travel query or an auto query. The page change is so dynamic that they are able to weave in the right ads with the right kind of targeting.
What about with the Gemini app and like the app experience? Are they able to make money doing that yet?
No.
Does that matter?
You have to remember, Google does 5 trillion searches a year. 5 trillion.
It's like off
so,
the charts.
even if they monetize 20 to 25%, which is the case, 75% of the queries are not monetized. Imagine how much power they have in terms of the targeting they have with the ads, as well as the number of queries. Even if ChatGPT is taking some volume, 5 trillion is a lot.
Mark, I want to bring you back in as we've got Mandeep Singh, brilliant part of our Bloomberg Intelligence team. Mark Douglas, President and Chief Executive Officer of Mountain, really great perspective in terms of advertising within this world. But you mentioned something about Gemini that you want to hear on the call. Just lay it out again for Mandeep so that we can kind of dig into that with him.
Yeah, I think it's similar comments, which is the Google as a company. I think what's most important to see is that they let the different parts of the company compete. So Gemini competes with search results, because if they don't compete with themselves, then OpenAI and others are going to do the competition for them. And so I think it's important that they let them compete. It appears they are. And I also agree with the other comment that he just had in terms of scale of their business, is like, you can increase search results, paid search results 0.5% and beat. They have a lot of levers to pull, and I think they're doing a good job pulling them to be able to navigate this climate right now.
Yeah, and the point about Gemini, not only does it there's a competitive aspect, but also you learn so much more about the user. Yeah. Imagine they are on Gmail, Maps, Search. Now you've got one more app where you have your user, you're learning about their type of queries, how good their ad targeting becomes suddenly because they are interfacing through Gemini now. So there's one more surface that you're adding, and it complements their ad targeting.
Mark brings up this concept of, great to compete with yourself. And so essentially, that's kind of what Alphabet's doing, right, with Google Search and then Gemini. But is it a guarantee that everybody who's been using Google is just going to easily just kind of segue into Gemini? Can we assume that will happen?
Google is still the verb. And I don't think it's changing anytime soon. Yes, you can say ChatGPT for certain informational queries, and for certain queries, ChatGPT does a great job. But if you're thinking about the Google ecosystem, all the apps that you are used to using on the consumer side on a day-to-day basis, it's hard to take yourself out completely from the Google ecosystem. You'll still be using Gmail, apps, YouTube, even if you use ChatGPT. A lot of times ChatGPT shows you a search result, and then you go to Maps to search for, the exact address that ChatGPT is showing.
Right.
Hey, Mandeep, Alphabet shares up 4% in the after hours. Meta Platforms up 2.3%. Amazon shares are higher by 1%. All happening because of what we heard from Alphabet. Is this just a huge sigh of relief when it comes to mega cap tech? Is everything okay? Are we out of the woods?
I'll wait for the call because remember, Liberation Day was April 2nd.
Yeah.
This is through March 31st. We don't even know what the impact of tariffs was. All that happened at the beginning of 2Q. So we may be, I think, too far-fetched in thinking, we're out of the woods, but it's a good trend.
It's a good point. Mark, come on back in. I'm curious if you have a question for Mandeep Singh. You follow this market, you follow this company. I'm just curious.
Yeah, I actually want to take the conversation slightly to another part of Google's business. One of the things, I'm still very much an active engineer, and one of the things I'm seeing is Google be very aggressive on capturing market share in the Google Cloud business. And that's not something I think many people are talking about today, but that's potentially, setting up from some really good results in that part of the business in the future. So I'm curious, Mandeep, if you have any thoughts on that part of Google.
Yeah, I mean, it goes to the point about, them having this huge infrastructure that powers their family of apps, also powers the cloud business. And 30% growth on a $50 billion run rate is very impressive.
Right.
The problem for Google is it doesn't generate the same kind of profitability that search does, and that's why investors don't care that much. But look, I think they could even grow faster on the cloud side. They're probably somewhat supply constrained that everyone is in terms of AI infrastructure. So that cloud business could continue to compound at 25-30% clip for a while.
We've been talking about how the stock has really popped in the after hours. It's off some of its highest levels in the aftermarket, Mandeep, but still up about 4%. But that point that you said, this is through March 31st, not before kind of the stuff hit the fan, right?
Yeah.
And has really kind of changed the environment. Is that a very, very important caveat? Because these are the kind of companies, right, in the next week or so, these big mega cap tech companies that were like, what do they have to say in this environment? So I'm just curious if we have to be kind of smart as we go through their results.
And not to take both sides, but on the top line, I think search beat wasn't that impressive as it was the last time around. It's more the margin expansion because everyone thought AI overviews would hurt margins. So clearly they have executed very well on that.
Right.
The buyback and the dividend is good capital allocation. But in the end, search beat wasn't that impressive, for a 5% increase in the stock.
Would a 5% boost to its dividend happen if Alphabet were concerned about the environment in the current quarter and for the remainder of the year, Mandeep?
I mean, clearly...
Is that an indication that things are pretty good if we look at that as a potential sign of guidance?
It's more the fact that they trade at a much lower multiple than their peers, Microsoft and Amazon. So from that perspective, you could say management feels their stock is cheap. But look, they're making this acquisition of Wiz, where they're paying $33 billion.
It's a lot of money.
It's going to close next year, so it's not going to affect the free cash flow this year. But if they spend $75 to $80 billion in data center capex and then $33 billion in this acquisition, then you're not able to fund all these buybacks and dividend with your free cash flow anymore.
I wonder if both of you, I'm looking at our Markets Live blog and our macro strategist, one of them writing that the headline is a beat, but it was driven by advertising where revenue rose 8.5% from a year earlier. That's not going to help the rest of the Magnificent Seven very much. Mark, you have any thoughts on that? Because we are getting ready to have all of these names and numbers and results coming at us, and we know investors love to know what the Mag 7 are doing.
Well, I think it indicates that Q1 was a healthy environment for Google and likely for other companies, especially in tech. I think the question on Q2, very valid question for all investors. But I think for Q1, I think maybe people are mixing these quarters together in their mind. Q1, solid for Google, I'm guessing is probably, educated guess, solid for these other big tech stocks also.
All right, Mark, we're going to leave it there with you. Thank you so much. So good to check in with you once again. Mark Douglas, President and CEO of Mountain, joining us from Miami. Your thoughts on that, Mandeep, in terms of what's to come? I mean, there's Alphabet and how they make money, and then there's the rest. Is there any assumptions we can make or not really? They're all kind of different.
Yeah, I think after the call, we'll have a better sense of how they are viewing the environment. I mean, the whole thing about Chinese advertisers pulling back.
Yeah.
And Alphabet in general has a broader swath of advertisers on their platform. When you think about Meta, even though, it's a duopoly, and Meta probably is more skewed towards, I would say, retail, and it doesn't have as much autos exposure as Alphabet has. So there is some nuance with regards to their advertiser base. I would say Alphabet is more diversified. So if Chinese advertisers are pulling, that will hurt Meta more. For sure.
Alphabet doesn't give guidance. So what do investors look for on the call to understand the current climate?
Well, so
CFO commentary? I mean, is there anything there that could move the needle?
I think whatever they say around ChatGPT and LLMs and just overall color around competition, because this is the first time everyone cares about, comments related to search. I mean, up until two quarters back, it was like, oh, okay, Google is a monopoly. Everyone knows that. Ad pricing may go up and down depending on the cyclicality of the economy. But now the competitive threat is real.
But the competitive threat with AI and LLMs. What about the idea that if it's an economy where there's uncertainty. Marketers pull back from advertising. That would hit this company very hard.
Yeah, but I think what they showed in the print is ad pricing actually went up.
For the first quarter.
For the first quarter.
This is not the second quarter.
It's not gonna, again, if you think about online ads, Google is the last place where advertisers will pull back because it's the highest ROI ad spend.
You pay for what you get, essentially.
Yeah.
You're not buying
if
huge.
If you're looking for customers online, Google is still the best place because it's the most effective. Remember, they collect data from 8 apps that you're interfacing with, and that's why the ad is so targeted. Meta also has 4 apps, but then Google probably has more data about you in terms of targeting you. That's why they're so effective.
Right, really specific data, right?
Yeah.
Of exactly what you are doing, Tim Stanovic, on any given moment.
Yeah, I know. That's why I don't understand why they keep showing me cars.
The searches.
But I don't know why they keep showing me cars. I'm not buying cars.
No, it's really fascinating. Mandeep, thank you. As always, Mandeep Singh, of course, senior tech industry analyst with our Bloomberg Intelligence team. Shares of Alphabet, folks, up about 3.9% in the aftermarket. Definitely off its best levels of the day. Sales beat estimates on Google search advertising. Analyst call coming our way in just a moment.
Yeah, in just a few minutes, we're going to be speaking to Ed Ludlow on Intel because shares of Intel in the aftermarket down 6.3%.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings to cover after the close of trading, and we are on it. Google parent Alphabet reporting first quarter revenue and profit that exceeded analyst expectations, boosted by continued strength in its search advertising business. After hours, Google now pushing higher, Alphabet up by 6.9%. Also reporting after the close of trading, we heard from Intel. Now, it gave a weak forecast for the current period and said it is cutting workers to bring costs in line with the business's smaller size. After hours, Intel shares right now trading lower by just about 6%. It was an update on Wall Street today with the Dow, the S&P, and NASDAQ all advancing. The S&P 500 index rose 2% to the highest since the day that President Trump announced his tariff offensive. S&P 500 index up today by just about 108 points. That was a gain of 2%. The Dow up 486, closing above 40,000 again at 40,093, up 1.2%. The NASDAQ Composite Index up 457. That was a gain of 2.7%. The 10-year 4.31%, with the 2-year 3.78%. Spot gold today, we had gold moving higher by 1.7%, 33.44 for the precious metal. West Texas Intermediate crude up 0.8%, 62.75 a barrel on WTI. Bitcoin on an update for the rest of the market. Bitcoin down 0.3%, 93,393 on Bitcoin. So again, recapping after the close of trading, we heard from Alphabet. Alphabet right now up by 6.7%. Intel after earnings lower now by 5.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. Well, shares of Intel are selling off in the after hours, down right now by about 5.3%. It's attempting this comeback under a new CEO, Lip-Bu Tan, and it gave a weak forecast for current period. Also said it's cutting workers to bring costs in line with the business's smaller side. With more on Intel, we head out west to talk to the co-host of Bloomberg Technology, Ed Ludlow, who caught up earlier with Intel's CFO to talk about the earnings and the outlook. He joins us from the Bloomberg San Francisco News Bureau. What did you learn, Ed, from Intel's CFO?
Yeah, I think quite a lot. Intel is still very far from where it wants to be, from where its customers want it to be, and the only way to get there is to readjust the makeup size of the workforce and also, look very closely at the balance sheet. And so the major step that they're taking is pulling back on OPEX and CAPEX. They confirmed our reporting that there is going to be layoffs, frankly, and that those layoffs are going to be in middle management. But it's really a story about a company that has a new CEO who's like, you know what, we are going to just get focused on technology. Although, as I said, actually, I got a bit of sense of deja vu because that was kind of the story the last time we had a new CEO at Intel.
Well, I was just going to say, how many years have we been talking about a turnaround at Intel?
Yeah. So I was just talking to Bloomberg's Ian King about this. It's like, what is the single headline on Intel? What is the new focus? And where are they going to pull back? Pat Gelsinger really wanted Intel to be a contract manufacturer to the world, right? Do what TSMC does alongside having its own products. Lip-Bu Tan has just sent an email to employees this afternoon that we've seen and read, and basically reading between the lines, I think that is not a priority for him, the contract manufacturing bit. I think he's acknowledging, and Dave Zinsner went through this on the phone with me, that customers want one thing right now, right? Which is AI accelerators, high performance GPUs or AI chips that are involved in the training and inference stages of large language models and AI models. And Intel's just not been at the races there. So materially what they're doing is they're cutting out middle management. They're going to rehire better people in the engineering space. And you may have seen a headline on the terminal just a couple of minutes ago. They're going to make people come back to the office 4 days a week, which is interesting because they're kind of late to do that in all the names we cover here.
Wait, so
they haven't been coming to the office 4 days a week?
Is this the recipe for making Intel again a dominant chip player going forward?
I don't want to confuse our audience, but basically, in the history of Silicon Valley and the world of technology, Intel is at its origin, right? When we think about the early days of semiconductors and the cutting edge of semiconductors and an annual cadence where technology got better, Intel was like the leader there. And for a long time, it has not been. It has fallen away. And, Zinsner, when he was on the phone with me, and, there's a reason that Zinsner, the CFO, was on the phone with me, right? Lip-Bu Tan is very early. He's just been at the company a couple of weeks. But they are trying to address culture. They think that basically that the culture that needs to be there to be like ruthless and win and get ahead in the world of technology is not in place. And so, yes, there will be a reduction in force that will target middle managers. But I was surprised as anyone to see that part of that strategy is getting people to come back to offices, not just here in the Valley, but around the world.
Is the reporting that the Bloomberg News team did earlier this week around the layoffs, that was confirmed today? Are those numbers,
we discussed it.
Are those numbers consistent with what we learned today publicly from Intel?
So what Dave Zinsner, the CFO, said to us on the phone was, I'm paraphrasing, but it was an interesting number because I don't quite have one yet myself. But the reason he doesn't is that he knows what the OPEX and capital expenditures targets are now. Those are firm, right? And you guys may have gone over those on air, but they've reduced OPEX and CAPEX for the full year. CAPEX by about $2 billion, and then OPEX came down a similar amount as well. And from that, and knowing where in the org they're going to cut middle management, Dave knows what the end goal is, but he says, I don't have a percentage of overall workforce, net what the layoffs will be. But they were confirmed. There will be a reduction in middle management. The quote was very simple, that they are going to cut out the bureaucracy that currently is in that company as well.
So the CEO saying in a statement, I'm taking swift actions to drive better execution and operational efficiency while empowering our engineers to create great products. We're going back to basics by listening to our customers and making the changes needed to build the new Intel. So it's top customers, Dell, Lenovo, HP, Microsoft, Amazon. What do those customers want? What do they want from Intel?
They want better products where the technology can do better things. And on the phone, Dave was pretty forthright in saying that trust with their customers is not really in a great place at the moment. Lip-Bu Tan in that statement you just referenced said that a lot of their problems right now, and the reason that he's going to have to take severe action, is due to prior actions the company has taken. And I think he was, of course, talking about the last leadership team. The story of Intel is the stock's down 5%, right? Well, almost 6%. We should be clear that things have not improved, and nor would you expect them to. It's only been a few weeks that the new CEO has been in place. But they beat in the first quarter, where very simply there was a pull forward, right? Those customers you just listed ordered chips in advance of tariffs coming. Right. And hence the outlook for the current period is not great because they took from what they would normally order now into that first quarter, and the second quarter is not great. So there's a lot that needs to be done here. Designing and building cutting edge chips is what they plan to do.
Can I talk about Waymo with Ed?
You could do whatever you want. This is America. You can do it.
Ed's been riding in these forever. It took me till my last, a couple trips ago to San Francisco to do this.
I gotta say, he's a changed man.
I am a changed man
ever since
he
rode in a Waymo.
But Romaine brought this idea up on the close that it's in the other bets category of Alphabet, and there are questions about how much these vehicles cost. What is the current valuation? You've written about this a few months ago. How is Waymo valued as a business?
I listened to your conversation with the close anchors and with Mandeep as well. Astonishing what you guys got through. That Waymo, what we reported in its most recent private funding round, is $45 billion. But there are a few things that I think remain in particular I'd love to discuss this with. Waymo has outside investors, and it is a material hardware company that's very different to Chrome. Yeah. And what Romaine was talking about is the valuation that Chrome was assigned in the course of this antitrust trial. That $50 billion Chrome valuation was given by the DuckDuckGo CEO. But at the core of Chrome is that its underlying technology is open source. So Microsoft's Edge browser is made on the same code base that Chrome is. They're not apples to apples. But he is right in that long term, like Waymo has a viable future, many would think. It's just that, like, that is far away.
It is
super far away.
Well, Ed, appreciate you joining us. Great perspective. Ed Ludlow, co-host of Bloomberg Technology in San Francisco.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, getting ready to wrap up on the Thursday edition of Bloomberg Business Week Daily. As we've been talking about, we've got continuing to see Alphabet move in the after hours. So we're looking forward to that analyst call. That stock up about 3.8% as we speak. And Intel, also one of the big ones after the closing bell. And just taking a quick look where we are, we're down almost 6% here in the aftermarket. So we'll look for some more commentary on the analyst calls.
Let's take a look at some stocks on the move today. Denitsa Sikova is Bloomberg News cross-asset reporter. She joins us here in the Bloomberg Interactive Brokers studio. We got to start with Intel.
Let's start with Intel. We had a good start of the week for Intel. Today, obviously, things are not looking so good. Down more than 6% in late trading. It comes off a weak forecast for the current period and saying that it's cutting workers to bring down costs. We had a headline from Bloomberg News that they're reducing their ranks by more than 20%, which was well received at the time. But now we're seeing first, the second quarter revenue will be between 11 billion and 12.4 billion. So that's where we're seeing some disappointment. It was short of the about 13 billion estimate we saw from the street. And that was one of the biggest disappointments. Of course, we have a new CEO taking over the company. There has been a lot of optimism based on that. The company is actually up year to date, one of the few tech shares that are up. It's up 7%. We saw some good parts in the reports. Quarter sales came in at 12.7 billion, topping predictions. It's more when it looks to guidance and the future in those weak forecasts, suggesting that the uptick in demand maybe is a blip. We know that there has been a lot of rush of orders right ahead of the tariffs, so analysts are worried about that. But yet, it's a good start of the year, despite today's move.
And I was obsessed because Intel was up about 14% this week heading into earnings. So there was a lot of buying going into these earnings reports, so definitely lower. Where do you want to take us? Alaska Air?
Yeah, let's talk about airlines. They've all been taking a lot of pressure lately. Alaska Air tumbled about 10% today. After the carrier's second quarter forecast for adjusted earnings trailed the average estimate. We've seen all those airlines pulling back their guidance. We've seen a lot of that high-frequency economic data showing that traffic is down, especially when it comes to international tourists, and that's definitely putting a lot of pressure. The company said it would not update its full year 2025 guidance, and it will provide an update later in the year. Of course, it's the uncertainty coming with the fast-changing trade policies, with immigration, and all those rules. We, of course, had American Airlines today withdraw its full-year earnings outlook. We've seen so much uncertainty with airlines, and Alaska Air is a particularly bad hit. 36% loss year-to-date, which is second worst year on record. Really tough year.
We had a great chat earlier with Sheila Kayalu at Jefferies. She's an analyst who covers pretty much every airline except for Alaska.
Yeah.
which we noted.
Yeah.
That said, she did say, it was pretty bad a month ago. It's gotten better for airlines now, and she's not necessarily seeing in the results a huge concern when it comes to international. Yes, maybe 10% from Canada for certain airlines. Still, we'll wait and see. Consumer in the U.S. has pulled back. Commercial business, still pretty good.
Well, and she was saying that it's like a month or so ago, right? That really the airlines got such a beating when we had a couple of the majors come out and talk down their outlooks, and that so much bad news has been factored in, because I was surprised to see American moving up in today's session. So it was kind of an interesting day. Let's go to toys. Can we go there?
Yeah, we've been talking about consumer sentiments and where it's going bad. When we talk about toys, things are looking good. Hasbro shares surged today the most in 5 years. The toy maker beat analyst estimates on both profit, revenue, said it's in a good shape despite the tariffs. Some interesting stats: roughly 50% of its U.S. toy and game come from China. China will continue to be a major manufacturing hub for them, but they are trying to bring down meaningfully the exports they get from there. Their most popular product, Dungeons and Dragons, has low tariff exposures, they said, so perhaps that's bringing some relief. The stocks jumped as much as 16% in earlier trading, and is up 8% year to date, which is one of the biggest winners from all the stocks we're looking at.
Tim, you play Dungeons and Dragons on the weekend,
I don't even know how.
No judgment.
I don't even know how.
Oh,
you know
come
what
on.
I'm shocked? Can I tell you something that I'm shocked
friends.
about?
You can tell us
I'm on Hasbro's website.
Yeah.
When you think of Barbie, what do you think?
I think of Mattel.
Exactly. Yeah. Hasbro is advertising Play-Doh Barbie.
What?
Wow.
Yeah. My mind is blown.
Are those frenemies, like working together?
I don't know.
It's a partnership.
Yeah.
Wait, I
go to Hasbro.com.
Hasbro.com, and I'm going to look up.
Oh, wow.
You see it?
Play-Doh.
What is that?
Soon.
Exactly. So I'm just looking at the different brands that Hasbro has. They have a lot of games too. So
For
Monopoly, Furby, Nerf, Transformers. You mentioned Dungeons and Dragons.
Yeah.
Carol's favorite though is Barbie, and that's Mattel.
Come on, what's not to love
What's
about
up with
Barbie?
the partnership?
I mean, I think
I
am I not wearing Barbie pin today?
There's licensing deals.
Day.
There's licensing deals.
I was just going to say there's licensing deals, but man,
We'll have to ask Enon Krais over at Mattel about this.
Enon, call us. Maybe when Mattel comes out. All right, we're going to have to leave it there. Good stuff. Thank you. Denitsa Sakova. She's Bloomberg News cross-asset reporter. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, winners, losers, gainers, decliners in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. I actually had someone reach out to me and said, hey, what was that one of the stocks that you were talking about in our stock movers
Did you remember
segments.
which one it was? Because we do so many each day.
I actually
you did remember?
responded. I said, here's the ticker, here's the name, and I put in...
Look at you, Carol Master.
I put in the podcast and sent it on
That's
our
nice.
way.
People just say mean things about me online. They're actually getting in touch with you for reasons.
We love you all. Have a good night. Balance of Power is next.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
Tonight, putting pressure on Russia for a deal.
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired. Putting a lot of pressure. You don't know what pressure I'm putting on Russia. They're dealing. You have no idea what pressure I'm putting on Russia. We're putting a lot of pressure.
The president now telling Vladimir Putin to, quote, stop after the deadliest attack on Kyiv since last summer, saying he was, quote, not happy with the Russian leader after Moscow lobbed 70 missiles and over 100 drones toward Ukraine. Our new reporting tonight on the administration's demand Putin accept Ukraine's right to military force and the concessions it wants from Moscow. We'll speak with former U.S. Ambassador to NATO Kurt Volker on what's next in the push for a peace deal.
Plus, Trump's war of words with China.
Well, they had a meeting this morning, so I can't tell you. It doesn't matter who they is. We may reveal it later.
The president teasing tariff negotiations with China while slamming the country for rejecting Boeing planes over its tit-for-tat trade war, accusing the country of killing hundreds of thousands of Americans due to fentanyl. We'll have more on that and on the president's sit-down with Norway's prime minister with Bloomberg's Natalia Drozdiak.
And a draft Trump budget proposal recommends getting rid of the Economic Development Administration, which supports economically struggling communities in rural and manufacturing areas of the country. We'll speak with Mississippi Governor Tate Reeves on how local communities are faring amid funding cuts and tariff hikes coming up.
All of that plus details from Intel and Alphabet's quarterly earnings just out a short time ago, and much more ahead this hour on Balance of Power. We begin tonight, though, with a torrent of news coming from the White House today, from tariffs and trade to the war in Ukraine, and a lot more as the president met with Norway's prime minister. We're joined now for more by Bloomberg's Natalia Drozdiak to talk about it all. Natalia, it's great to have you. Bloomberg reporting today on concessions for Russia, which we really haven't heard much about until now. It's been something that really has favored Russia with the idea of a framework for peace. Now the White House calling for Russia to allow Ukraine to have a standing army. That's said to be a non-starter in Moscow, is it?
Yeah, look, this matters because Ukraine needs to be able to defend itself once there is a ceasefire deal. They want to avoid having Russia attack again. And the Europeans and the Americans both see the Ukrainians taking the lead when it comes to any sort of security guarantees. So they need to have a strong army. But as you say, Putin's demand all along has been for Ukraine's army to be largely demilitarized. So if they agree to this, that would be a major concession.
Well, of course, there are certain things that Ukraine is unwilling to agree to just as much as Vladimir Putin may be unwilling, including recognizing Crimea, which Russia illegally annexed in 2014, as Russian. President Trump contends that that is not something the U.S. is actually asking of the Ukrainians, but our reporting suggests otherwise.
Well, I think what Trump was saying was actually what they seem to be demanding or suggesting or proposing is that the U.S. recognize Crimea as part of Russian control. They're not asking for Ukraine to recognize that it fall under Russian control, and so that's the distinction he's trying to make. That might be hard to sell to the broader audience, but that's what they're pursuing. And I think the question there is, what ramifications does that have?